in US didn't come to fruition. Do we know any more about that? Are they just rethinking it and going to launch a different kind of product?
That's what we've been told, but we have no details about what that is. There's been a lot of chatter about what it could be, but we're really just waiting to see at this time.
One more on Boaz here, because realistically, when things get hard is when he used to make a lot of money. Volatility, which we saw last week. So has he changed his identity here? Is he more of a closed-end fund activist now than he is a tail fund manager?
Well, it really depends on the market, I think. When things when there's not a lot of volatility, then he's made a lot of money historically on these closed-end fund products and bets. And when there's a lot of volatility, like there was in 2020, for example, he made a ton of money in his more traditional way. So I think last week he did well, but I think before that there hasn't been that much volatility this year.
All right, Catherine, thanks very much. Catherine Burton there reporting on, in this case, Boaz, but I recommend you go to the Bloomberg and check her byline for deep reporting in the Wall Street beat. Let's get to the trading diary. This is what you need to be watching this week. We got PPI today. Tomorrow we get CPI, so more inflation. On Thursday we get retail sales, which Shanali's watching very closely, plus earnings from retail giant Walmart, as well as farm equipment maker Deere. On Friday, U.S. housing start to release, plus UMich consumer sentiment data. This is Bloomberg.
First of all, global trade, which had adverse consequences that we're learning about to this day, still unleashed an enormous amount of gain for humanity. And with the rise of global trade became the rise of information sharing around the world, which rapidly accelerated the trajectory of mankind. I mean, of note, the Chinese, for example, are leaders in solar. They're leaders in EVs. They're leaders in a number of emerging technologies. In a world which is more splintered, we'll see the gains that the Chinese have achieved in these important areas not shared by the Western countries. And conversely, the United States is a clear leader in AI, along with a number of the European countries. And those gains will not be shared with China and the countries in its sphere of influence. So it's a very clear-cut loss for all of humanity when we have the severing of ties between our countries.
On a practical level, is it getting harder to manage the risks you face?
I think that one has to be aware that there are more tail risks that are harder to ultimately manage.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
All right, we are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Shanali Bassett.
And I'm Katie Greifeld.
Coming up, U.S. producer prices rose in July by less than forecast, and it underscores an ongoing moderation in inflationary pressures.
And an abrupt shakeup at Starbucks. The coffee chain surges after naming Chipotle CEO Brian Niccol as the new CEO and chairman.
And in today's C-Suite, we'll take a closer look at the health of the consumer with the CEO of Tanger Shopping Centers and Shark Tank's Barbara Corcoran. But first, before we go, let's take a look at this market. Of course, 30 minutes after the bells rang, you can see that rally is well underway. The S&P 500 currently up about 0.9%. A big rally on our hands when it comes to the big tech companies. The NASDAQ 100 up about 1.4% after that softer than expected PPI read this morning. And you see that in the bond market as well. 10-year Treasury yields currently down about 4 basis points, Shanali.
And in the last hour, we sat down with Morgan Stanley's Mike Wilson, and here's what he had to say about the U.S. consumer.
Consumer is slowing, right? All the consumer services companies in particular, it's not just the goods companies, and that has to be resolved here. So the way we think about it is, in order for markets to kind of make a new high, I mean, you need multiples to expand, and that's going to be very challenging in a world where growth is slowing. Okay, earnings expectations probably are still too high for the second half of this year, and a Fed that's reluctant to be proactive.
Joining us now, Kestra Chief Investment Officer Kara Murphy. She helps oversee $122 billion in assets under management. And you think about the worries about the consumer under the surface and what we're seeing this week. Yes, there are some one-off stories with Starbucks and Chipotle, but you saw what happened at Home Depot, and you realize that perhaps there might still be more pain to come. How do you feel about it?
So we've been seeing for a while this kind of more cautious consumer coming. So if you even go back a couple of years and look at these huge COVID era payments, those started to subside. We started to see savings subside within consumers, and we've started to see more caution. So if you look at consumer confidence numbers, those have been at lows, which is quite surprising given the broader economy. Now, what's buoyed the consumer has been a very strong labor market. And of course, in the last few weeks, we've seen a little bit softer data on the labor side as well. So I think this has been a long time coming, and it's not necessarily unhealthy. The U.S. economy has been really strong and has been held aloft by a lot of this consumer spending. And so now we're seeing a little bit more caution enter the market, which kind of makes sense.
Doesn't it seem like that's going to continue? I mean, we've seen consumer weakness from trip bookings. TripAdvisor, Airbnb showed some consumer weakness. Disney parks showed not the kind of consumer spending growth that we were expecting. And it strikes me that it's going to be difficult to turn Starbucks around in the face of this, right? No matter who the star CEO is that you bring in.
Yeah, I would expect this to continue to soften, right? The Fed needs to see the labor market soften more from here. If that happens, that will additionally slow consumer spending. What we've also seen, if you look in, for instance, credit card data, that has really helped some consumers kind of keep their spending aloft. We're starting to see higher delinquencies. So it's very much this kind of careful balancing act between allowing the consumer to slow a bit, but then also with interest rate cuts on the horizon, that can help ease some of those burdens on the credit side. Now, I think with Starbucks, it's super interesting. It's not often that we get to see in such stark reality the importance of management. And so, you look at Starbucks versus Chipotle, same sort of macro consumer trends that are affecting both of those companies, but very different experiences today. Now, your question is, can the new management come in and sort of move beyond those macro forces? The market is telling us that they think the new management can in fact do this.
Well, I want to talk a little bit more directly about that because you take a look at Starbucks, it's up 22%, almost 23%. That, of course, is the biggest rally, one-day rally ever for that stock. And I see your point that management is important here, but does this start to feel a little bit over-egged? I mean, are we introducing key man risk into this stock?
I think it is a little dangerous when you put too many hopes on a single management team. One other thing that I want to highlight, though, is part of this management reshuffle at Starbucks is also re-emphasizing non-U.S. And so that's a really important part of this whole consumer story, where it's not just reliant on the U.S. consumer, but the broader international consumer as well. So for sure, they have, a tough job ahead of them.
Have you restructured your portfolio to account for this kind of consumer weakness? Do you think the broader market has done it already?
I think we're likely in for some more volatility in the near term. Now, it's not just, U.S. consumer that's a concern. We also have political risk here in the US. We have geopolitical risk outside. You have valuations at highs. So it makes sense that the market has a little bit of grinding to do over the next few weeks or months. But that said, we've been sort of keeping our positions where they are. And that is, we're expecting second half of the year for the market to continue to broaden out a little bit outside of these Mag 7 names and start to see some other areas of the market do better.
So how are you playing that broadening, Kara? Do you buy something like the S&P 600? That was kind of a recommendation we saw over from Mike Wilson and Morgan Stanley. Perhaps the Russell 2000 is too fragile, but there are other ways to get at those small and mid caps. Or do you buy specific names?
I think the S&P 6 is a great example of where you're going a little bit down in market cap, but not all the way to the super small names that might be a little bit more at risk in a softening economic environment. But even just outside of some of the largest names within the S&P 500, you still have opportunities on the lower end of that 500 scale. So as soon as you kind of get outside of that very small area of the market that's done very well, you start to see a lot more opportunities, a lot more valuation support, more earnings likely to come in the second half of the year. So there's a lot to pick from.
Well, that's what I want to talk about because we launched this show on July 8th. Suddenly, small caps were ripping. Some of those unloved sectors were absolutely ripping. And a lot of people told us that you're going to see earnings broaden out and support that momentum in the market. It feels like so far, you take a look at the earnings picture, it's been kind of mediocre. We haven't necessarily seen that broadening out. So what makes you confident that we will see it in the second half?
Yeah, it's been interesting because there was a moment where small caps outperformed and then it did a quick round trip. But we were talking even then as we were sort of optimistic about continued small cap outperformance that it was not going to be a straight line. It never is. But when you look at forward expectations for earnings within the smaller cap side, those are expected to start to really ramp up in the second half of the year and into next year. And what happens is that when you have this massive valuation differential between small names and large names, the market is a little bit better able to wait for those earnings to really come. So again, this won't happen tomorrow, but we think over the next 2, 4, 6 quarters that we'll start to see some more earnings support for those names.
Kara, great to have you on the program. Thanks so much for joining us. Kara Murphy is Chief Investment Officer of Kestra Investment Management. More now on that Starbucks news. Last hour, we spoke with Nancy Tangler of Laffer Tangler Investments. She owns both Starbucks and Chipotle.
Nickel just worked magic at Chipotle. It's a member of our 12 Best Ideas portfolio, so now we're going to have to think a little bit about what we do there. But he did all the right things and really drove the company through the use of Chipotle lanes, through the use of digitization, where they now get over $1 million per store in digital orders. So he will fix Starbucks. I think that's the very good news, and we'll have to see what happens at Chipotle.
Joining us now is Andrea Felstead, Bloomberg opinion columnist covering consumer goods and the retail industry. And Andrea, it's amazing to watch, these share price moves, the biggest gain Starbucks has ever seen, instantly adding 20% to their market cap. But can one man, as good as he was at Chipotle, really bring back Starbucks, which has been, simmering on low?
Well, the thing about Starbucks, it's not a big breakup or a big shake-up. It's about doing lots of little things better. And it sounds like from what he did at Chipotle, that's exactly what he's doing. So in theory, he should be able to do that at Starbucks.
So you think about these moves that you're seeing here, and what is the biggest challenge? On one hand, there's a worry about the crunch on the consumer, but you did see Chipotle still navigate that.
That's right. I think the biggest challenge is you're coming into a company, you've got an activist investor, Elliott, they have welcomed his appointment. You've also got Howard Schultz, still a big shareholder, chairman emeritus, still, cares deeply about the company. He's got to manage
And US crude futures fall more than $1 a barrel.
Through all the changes that the company needs while managing those rather tricky factors.
Yeah, of course, a lot of cross currents there. So, you add it all together. Do you think that Brian Nickel, the thinking here is that the board wants him to come in and make a big change? Is that what they're looking for by looking outside?
Yes and no. I think they clearly want the operations to improve. There's going to be a big test on what they do, say, with China. Do they sell or sell all or part of China? Howard Schultz has been a big, fan spun of the China business. Other investors want it spun off. So that, I think that'll be a key test of just how much freedom and how much leeway the company gives the new CEO to really make those far-reaching changes.
One thing here that Elliott's statement said today was not only do they welcome this as a transformational step, but also that they look forward to working with the company and continuing our engagement. When you still have an activist in your stock like this, what does it mean about maybe the way that Brian Niccol would run the company if he wasn't just doing it without Elliott on his back?
It can actually be rather helpful. So if you're a new CEO coming in and you've got an activist, actually having the activists there can give you a bit more license for change. We saw this with Nestle. Nestle had a new CEO, they had an activist, and actually that allowed the CEO to push through some things that, you know, were quite new to the company. He actually did big disposals and acquisitions. Starbucks doesn't need that, but it does need change, and having that activist investor can be helpful.
And Andrea, I'm curious to get your thoughts on where this leaves Chipotle. Of course, we've been talking about this whole show, how since he took over in March 2020, we've seen Chipotle shares absolutely fly higher, up about 280% before the start of trading today. I mean, it feels like they're losing a pretty big asset here.
Exactly. They will have to, you know, really just carry on. It does seem as if they are back on track. So they, you know, the new management will have to sort of carry on. But sometimes when you take over from a very successful CEO, that can bring its own pressures. You know, new management must continue their sort of legacy, and you know, and sometimes move in a different direction. It can also be quite tricky. We've seen, you know, new CEOs after long tenured predecessors sometimes not have the easiest time.
We should point out Chipotle shares, the drawdown from the peak in June is 30%. So they've lost almost a third of their value since they hit that high. Andrea, here in the U.S., we have been contending with consumer weakness throughout really a strong earnings season. You cover this industry globally. Is it specific to the U.S., or do you see it in the U.K. and Europe as well?
I think the UK is slightly different. The UK is actually sort of, I think, on the road to recovery. Inflation's coming down, interest rates are coming down, wage growth is still healthy. The consumer should be in a good place. What we're seeing is a real disconnect between what should be a feel-good factor and what people are spending.
Andrea, we thank you so very much. That is Andrea Felsted of Bloomberg Opinion. Now, just taking a quick look here, it's fascinating. When you see this drop in Chipotle's stock as well, you do have Bill Ackman in Pershing Square being one of the biggest losers here. Remember, at the end of last year, Chipotle was one of the top 3 holdings in his fund. You see it in the performance of his closed-end fund. Chipotle today losing almost $10 billion in market cap.
So certainly a painful day, but I mean, it's important to note that he's
a painful couple of months because it's down 30% since June.
When it comes to Chipotle, I mean, he's held this stock for years. We've been talking about the good performance over the past 4.5 years or so. It's interesting too, if you bring in Starbucks, he cut his Starbucks stake in February of 2020. So of course, he's been involved in both of these names that we're talking about.
Fascinating. So he missed some of the pain from Starbucks, but certainly now missing out on those losses over at Chipotle. We're going to switch gears next. We're going to talk about the world's richest man angling for a new gig. We're going to, of course, talk about Elon Musk and that big conversation he had with the former president last night. Details of that up next. This is Bloomberg.
So the ECB settled 303 billion euros in corporate bond purchases and settled 2.227 trillion euros in public sector bond purchases, and ECB bond holdings on the PEPP 1.65 trillion euros as of last week.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
All right, it's time now for Social Climbers. The company's making waves this morning. And first up, the medical device maker Baxter International announcing today it will sell its kidney care unit to Carlyle for $3.8 billion. Now, the transaction expected to close later this year or early next year. Carlyle, of course, has been a private equity investor in the medical tech sector for over 10 years. Next up, General Motors has been laying off staff in China as it overhauls its operations in the region. Now, these cuts represent a major strategy shift for the company, which earned billions of dollars in China as recently as 2018. GM, of course, though, is facing overcapacity in the region thanks to a flood of local competitors. And the Roger Federer-backed On Holdings reporting a mixed bag of earnings. The sneaker maker saw sales jump 28%, but the gross profit margin came in behind estimates. On, of course, trying to find a foothold in its challenge against established players such as Adidas and Nike. And finally, Home Depot raising a warning flag on the U.S. economy. The DIY retailer says that consumers are spending less to remodel their homes thanks to high interest rates and concerns that the broader economy is souring. And of course, you can follow all the latest company buzz on TREN Go on your Bloomberg terminal.
Elon Musk interviewed former President Donald Trump last night, and this Tesla CEO took the opportunity to pitch himself for a second role in the Trump administration. Take a listen.
I think it would be great to just have a government efficiency commission that takes a look at these things and just ensures that the taxpayer money, the taxpayers' hard-earned money, is spent in a good way. And I'd be happy to help out on such a commission.
I'd love
if it were formed.
Well, you're the greatest cutter.
He's a great cutter, Elon Musk. Trump said earlier he was so proud of him for firing all those people at Twitter. For more on that conversation, let's bring in Bloomberg Businessweek columnist and co-host of the Elon Inc. podcast, Max Chafkin. Max, I was pretty astounded, actually, at the amount of pandering that Elon Musk did for this former president. And to be fair, you know, when you're talking to a former president, I'm sure you're going to be respectful, but it really seemed like he was trying to get something.
Yes, yeah, it was crazy to me as well listening to it, especially as someone who's followed Elon Musk for a long time. He tends to disagree with people when they say things, when they minimize climate change or say some of the things that Trump said. And he was, you know, very eager during this conversation, as he said, to cater to Donald Trump. Of course, Elon Musk is a savvy operator, and you know, I think he's doing his best to flatter a potential leader of the free world. And the other thing that's happened is Musk has sort of put himself in this position where he almost needs Trump's support and I think very much rooting for a Trump victory in November.
Can you talk about the evolution of this relationship? Because Musk was involved in the first administration, then he quit it in a huff, and then they traded insults back and forth for a few years, and now they're friends again. Yeah, as Musk said during this conversation, as he likes to say, he's sort of been all over the place politically. You know, before he was sort of close to Trump during the first Trump presidency, you know, he was close to Obama. He framed himself, you know, very much as this kind of left of center environmentalist during the Obama years. During the Trump years, as you said, he sought to find, you know, areas of common ground. He served on a commission, another commission, which he then resigned from in 2016. What's happened over the last few years is after buying Twitter, Musk has really tacked to the right in terms of his sort of social media persona, and at the same time has kind of done almost like a bear hug around the Trump camp and around the Trump kind of political and cultural movement. And I mean, that's what we saw during this interview. Musk was at pains to say it's not an interview, it's a conversation, almost, you know, almost like heading off even the faintest suggestion that this might be adversarial.
You know, there are business reasons as well that this kind of conversation would be happening. One, of course, is Tesla, but the other, of course, is actually X, Twitter. In recent days, Trump has started tweeting again. You've seen Trump Media and Technology Group down some 10% over the course of 3 days. How important is Donald Trump and his presence on this social media platform? I mean, Donald Trump is probably the second most important influencer on Twitter X after Elon Musk. I mean, Elon Musk has, you know, modeled himself after Trump in terms of his persona. He obviously has a lot of admiration, as Jack Dorsey, the former CEO of Twitter, did for Trump's sort of persona, and has wanted him to come back. So this is like a huge win for Elon Musk, for X, and there are lots of other ways that Trump could help Elon Musk if he's elected president. You know, SpaceX is a major government contractor. Tesla still, despite the huge sales, depends on government subsidies to some extent. You know, Musk has all these research ventures that will need regulatory approval. So there are lots of ways that this trade, if you think of it as a trade, could help him.
Many subsidized. In fact, I think we all recall when Donald Trump wrote of Elon Musk, when he came to the White House asking me for help on all of his many subsidized projects, whether it's electric cars that don't drive long enough, driverless cars that crash, or rockets to nowhere, without which subsidies he'd be worthless, and telling me how big of a Trump fan and a Republican he was. I could have said, drop to your knees and beg, and he would have done it. Did we see him doing it last night?
Well, no, but he was, as you said earlier, you know, very much catering, seeking to flatter Trump, talking about, you know,
he was playing the beta to Trump's alpha. Let's be honest.
Not only playing the beta to Trump's alpha, but repeatedly suggesting that Trump, you know, during the stream that we needed a tough president. You know, Trump was that guy. And again, very staggering just to watch as somebody who's seen Musk like to take up that space. Typically, on the other hand, you know, this is kind of what power does. And if there was any doubt, like who the more powerful person in that room or in that Twitter space was, you know, I mean, it was settled at the end of the night.
Well, it's been a volatile relationship between two huge personalities, so it's going to be fascinating to see how this continues to evolve. That, of course, is Bloomberg Businessweek's Max Chafkin, and you can listen and subscribe to Max's podcast, Elon Inc., on the Bloomberg Terminal or wherever you get your podcasts. Now, still ahead, we're going to take a look at some of the stories attracting high interest this morning, including the U.S. lifting restrictions on the sale of bombs to Saudi Arabia. That conversation coming up next. This is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
To the market open as we bring you the first trades across Europe. We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Preeti Gupta. And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Now to high interest, look at what's making headlines around the world. Ukraine's top military commander said the military has seized about 1,000 kilometers of the border region since the incursion into Russia began. An official told Bloomberg that the attack on Russia was intent on shocking President Putin and had been considered for some time before the surprising assault in the last week. The Wall Street Journal reports that the Biden administration will send Saudi Arabia shipments of bombs worth more than $750 million in the coming months. The move comes as Washington lifts restriction on sales of bombs to Riyadh after placing such sales on hold since 2021. And the developer behind the World Trade Center complex in Manhattan is eyeing more opportunities uptown. Larry Silverstein said he would consider expanding more in Midtown as commercial property distress spurs more deal-making in the sector. The 93-year-old real estate mogul is still looking for a tenant for 2 World Trade Center. Let's get a quick check on what's going on in the markets here. Just almost an hour into the trade, we're up 0.75% on the S&P 500. The NASDAQ 100 up 1 1/3%. When we come back, we're going to talk with Barbara Corcoran, founder of the Corcoran Group. This is Bloomberg.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Small business owners are both optimistic and uncertain. The NFIB Optimism Index rising for a fourth straight month to its highest level since February of 2022. At the same time, the Uncertainty Index also continues to climb. Let's get a read on how business owners feel across the country. Joining us now is Barbara Corcoran, the founder of the Corcoran Group and, of course, executive producer of Shark Tank. Barbara, great having you on the program. Thanks so much for joining us. I want to ask you.
Thank you very much.
I want to ask you about your advice to small business owners. They come to you time and again for help in growing their businesses, and we're at a time right now where it looks like the economy is growing, but the U.S. consumer is pulling back. What are you telling these business owners?
I'm telling them that someone has to get more of a fair share of the market than the next guy. And fear stands in the way, loneliness stands in the way, and it erodes people's confidence. There's always business to be had. Why shouldn't you have it? So I'm getting them to be more aggressive and more confident in reaching out.
And of course, Barbara, on Bloomberg, we talk about the Fed all the time. We talk about high interest rates all the time. Matt has made the point just this morning that even if the Fed cut rates in September, that's going to work with a lag. You're not going to feel that immediately in the economy. What is the on-the-ground view, the on-the-ground perspective that you're hearing about how high interest rates are filtering through down to small business owners?
Over the last 6 months, it's been nothing but a series of complaints. I almost put my phone on mute when I get a call from someone. But in the last month, I would say once people are past the fear, people are feeling more optimistic. My very tiny entrepreneurs who just started within the last year are feeling more optimistic because they're greatly affected by business loans and they're expecting rates to come down somewhat. So they're feeling more optimism, I would say, overall across the board.
When you think across the board as well, and you think about the costs that business owners are still struggling with, it's everything from real estate costs, as you know very, very well, this industry. It's also still wondering about where labor goes from here. What are the biggest challenges you're seeing that they have, and who do you think comes in to fix it?
The only one who can fix a business is the entrepreneur themselves. That's why our webinar series sponsored by AT&T Business is so valuable, because we give a lot of practical answers and examples and interview a lot of people who are doing it right. Really, the only thing that gets in the way of a business moving forward is really thinking that it's a time to be afraid. But what I have learned in business, every time I moved my own business ahead, it was in the worst of times that everybody was a naysayer. Because when those times hit, everybody's laying low and everybody's afraid to move ahead. And that's when you can actually grab the basis of customers from your main competition if you care to, because there's great opportunity all around that you could take advantage of.
Barbara, we talk about interest rates now as if they are sky high, and we've never seen anything like this. 7% mortgage rates. You became famous, made your fortune, started your career in real estate at a time when rates could get much higher. What do you tell people who are worried about rates at this level, paralyzing transactions?
It's really a waste of time to spend a minute worrying about it. The only thing that counts in growing a business is what can you do about it? And certainly you have no control over the rates. But I do remember when interest rates were 18% and everybody was afraid of buying except the super rich because they had the capital behind them to go out there and pay all cash for anything they wanted. They took advantage. They got 30% discounts on the market rate of a year before, the price rate of a year before. I tell people that whenever there's a change in the making a business and everybody's afraid, just have to look around and see where you could take advantage of, where you could go in and scoop something out. At that time when interest rates were 18%, I remember making the actual decision in one day to switch my business halfway out of sales and go into rentals to move with the market. But it's funny how, not even funny, but it's sad how entrepreneurs get stuck with their old reality of what they specialize in and what they're good at. I learned the rental market right away because I had to, because there were no sales.
Well, to use a personal example, when it comes to real estate, I tried to buy a house, an apartment, and the interest rates were just too high. And my bet there was, okay, I'll just wait a couple of years, sign another multi-year lease, and then hope on the other side that rates will be lower. How much pent-up demand do you think is on the other side of lower mortgage rates from here?
tremendous demand because there are so many people thinking exactly as you are. And if you would take my advice, I would say get out there, because what you have right now, which you won't have if rates come down another point, they just came down, but you need one more point to bring everybody out into the market. And what's going to happen is you're going to pay more for the house. So what have you really gained by paying the landlord over these years and taking the increases in rent? Not much, because prices have gone up. But wait till you see what happens with prices when interest rates come down another percentage point.
Well, to that end, also.
Out there today.
Right. You know, interest rates go down, prices go up. And at the end of the day, how much, Barbara, do you worry about housing affordability in this country?
I worry about it all the time on two fronts. Rents keep going up anywhere in the United States, and that's a real concern because people can't afford the rents based on their income. And I also worry much more so about people getting their piece of the American dream, buying their first house, because the first house market, the starter house market, is the hardest hit, where the greatest bidding is going on. I even had I had the daughter of a friend of mine tell me that last week she was competing against her two best friends in the New York market. It's crazy. And she's going to have to invite them for dinner parties after. So there's so much competitive bidding, so much going over the price, and so much fear going around because people feel like can't get ahead. No, starter prices are a real problem in America, and they're going up everywhere.
Barbara, I want to get back to the small businesses you're helping out. You're working with AT&T Business, talking about technology-driven solutions. That immediately makes me think of AI, artificial intelligence. And I wonder, you know, given that you've seen the real estate market and business move through the internet age, what's your take on this new, you know, supposedly revolutionary technology?
Well, it's a very good parallel you draw, because I remember the days when I went on the internet and I was the first over 2 years before my competitors went on, and what an advantage it was. But I had one magic thing: I wasn't afraid. What's stopping people using AI, and with so much chatters around it, I'm sure you've sensed it, is that people are afraid of it. But it's really like a muscle that you have to use and exercise. And it doesn't even take as much muscle as getting into the internet took, which was rather complicated for a lot of small businesses. All you have to do is schedule 10 minutes a day and just fool around with it. And you start to learn excuse me, AI and how you can use it in your business. It's the single best thing that has affected small business. And that's why we made it a topic of our third AT&T seminar, because people need to know how they could use A1 to save costs of hiring people that they get for free now by using AI. They used to have to contend with the payroll. Who do I hire? AI does all the grudge work today for every small business. I'm going to change your attitude toward AI.
Well, I want to talk about the attitude a little bit more before we let you go, because we're talking about fear among small business owners. There's a lot of ways to get scared about AI when you think about robots replacing all of our jobs. I mean, how do you get past that fear and actually change the attitude?
Well, I have to say, people who get past the fear are not the people who are employed, but the people who should have no fear are the people who employ them. Because before you do that next hire that you think you have a need for someone, you try AI. They will answer your needs. So there's really no fear, or shouldn't be fear, on the part of the business owner.
All right, Barbara,
But don't forget the seminar you could find on 888barbara.com. I have to get that in. Sponsored by AT&T Business.
I respect it. You got that plug in. Barbara, really enjoyed this conversation.
Okay.
Hope to have you back soon. That, of course, is Barbara Corcoran. Let's get a check on these markets now with Bloomberg's Jess Menton, as stocks continue to climb, Jess.
They are. So if you look at the S&P 500, up about 0.8%, not surprisingly being boosted by big tech, especially when you have big components like NVIDIA as well as Apple higher today, as well as Alphabet. So moving over, though, and looking at the VIX, actually trading below 20, where it traded most of this year, and actually since last of October, obviously before what we saw with the big spike intraday trading last week, above 65, but seeing that fear receding ahead of CPI report tomorrow. But if you look over at the 2-year yield, trading below 4%, 3.96 right now, so around the lowest levels of this year. So we know that it's more policy sensitive when it comes to Federal Reserve. But of course, when you look look at NYMEX crude oil here, it's actually trading around $78.75 here, actually snapping of 5 consecutive straight sessions of gains here, down about 1.6% on the back of some of these Middle East tensions. But ahead of CPI tomorrow, something I've been keeping a close eye on is looking at hedging against the SPY, so the ETF tracking the S&P 500. Right now, it's costing about 2 times more than a potential gain in the S&P 500, so actually hovering around its highest levels since October. So that shows you people are still putting on a bit of hedges ahead of that report tomorrow. But if you look overall today at some of the bigger gainers, NVIDIA, one of the strong gainers here on the back of, not surprisingly, you had that WSJ report that Huawei is trying to ready some AI chips to compete with that, but nonetheless, you still have that stock higher right now, up almost 5%. You have Starbucks, of course, right now. It's actually up more than 20% still, so still on pace for its best percentage gain on record. Then, of course, Tesla moving higher too, about 3.5% since Elon Musk had that live stream with Donald Trump supporters trying to kind of boost the different EV cars that he has. And then you can't forget Apple, still a big heavyweight here in the S&P 500, up more than 1%. So big tech leading the way, guys.
Jess, thank you so very much for keeping your eye on the market. That is Bloomberg's Jess Menton. And coming up next, we're going to talk about the slowing consumer, what it means for outlet malls. We're going to get insights from Tanger CEO Stephen Yalof next. Stick with us for that conversation. This is Bloomberg.
The top names in business are on Bloomberg.
The challenge for us now is not very much on the product, it's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp-up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
making outlet malls cool again. Tanger reporting a solid second quarter as it looks to draw in new shoppers. I'm thrilled to say that joining us now is the CEO, Stephen Yalof. Great to see you in person.
Thank you. Thanks for having me back.
So different industries here, but we got Home Depot earnings this morning, and you had the CFO talking about this deferral mindset among customers who have the means to spend, but they're sort of holding off here. Are you seeing that deferral mindset among some of your apparel and retail customers?
Well, actually, apparel is doing quite well right now. And right now, we're in the middle of back to school. Back to school starts as early as July 4th, particularly in our business. And if you take a look, people are starting to go back to school next week.
Brutal.
So, so there's a lot of activity in our centers, and we're doing a lot on a local basis, trying to get customers and local customers to come in and shop us. Think about us first. And to your point on the consumer, why wouldn't they think first about the provider, the retail provider that gives them the brands they're looking for every day at the best possible price? And that's what outlet shopping is.
You mentioned local customers. When I was a kid, we would always go to outlet malls when we were traveling, when we were going on vacation or coming back. What's the mix in terms of your customer base, and how successful have you been getting locals to come in?
Sure. Well, the old narrative on outlet was they needed to be 50, 100 miles away from their full price or department store business because there was wholesale sensitivity. Now we're finding a lot more vertical retailers in the outlet business, using it as a place to clear excess inventory, but also as a place to engage customers. Now, a lot of those markets that were 50 miles away, as people start to move out of the cities and into the suburbs, those happen to be a lot of the cities that people are moving into. So.
I'm also really curious about your shift away from just outlets to more experiential kind of locations here. How hard is that pivot for you, and why is it so important at this time?
Well, if you go back 4 years to COVID, where we lost a lot of retailers to bankruptcy, when those retailers left, we made the decision to start to replace a lot of that square footage with other uses. We found, particularly post-COVID, to get people out of their homes, to get them off the couch, to get them shopping other ways, that we needed to bring them into our centers with better brands, but also better food, better experience, better amenities. And so it's been a big pivot for us from a sort of adding lifestyle components to outlet shopping centers so that we can get that local customer to come in more frequently, stay longer when they're there, and when they stay longer, they ultimately spend more.
Now, you're doing something pretty challenging here. On one hand, you're diversifying, you're finding new experiences, but it's interesting because you do see, even with a bull market here, relatively, I know we had a correction, but even with these flying high valuations, you're seeing a ton of bankruptcies out there. In food and retail, just yesterday, a gym that was part owned by Equinox here filed for bankruptcy. How sensitive are you to what's happening out there, frankly? So many companies are feeling so much pressure.
Well, at the end of last quarter, there were 2 retail bankruptcies that affected a lot of folks in the industry. For us, what we've often said, and the narrative has proved true, is that brands, the last stores they're going to close are the ones that are cash flowing positively, and the stores are built, and the places where they're doing the most amount of volume. And as it turned out, the 2, it was Express, and Express will come out of it, and Route 21, and they'll come out of it. We maintained pretty much 90% or greater of those portfolios. And some of the stores that closed were stores that had expiring leases that we were going to replace anyway.
And I want to talk a little bit more about what you've added to the portfolio recently, executing on 6 new leases for Sephora, which I have to imagine is pretty big. You think about the following that Sephora has. When you think about adding new brands, new companies to your portfolios, into your outlets, what does that decision tree look like?
Well, first of all, we're thinking about the consumer first. What does the consumer want? Because we're all competing to get the consumer off the couch and into our shopping centers. And what's going to do that? Apparel has always been a great source of driving the consumer into the retail store because many consumers want to try things on before they buy them. For us, the same thing is true, particularly in experiential retailers like a Sephora, that does make up for people, that hasn't interacted, that the salesperson plays a huge role in the transaction in those health and beauty stores because they're the customer's looking for advice. They're looking for the folks on the floor to actually give them customer service. Wow, did I say that? Customer service. And that really differentiates the in-store experience from shopping online or any other way people.
Well, as someone who gets makeup put on every single day, I will attest that it is fun. But looking through your earnings call, you said that going into 2025, your strategy here, one of your strategies is to continue to push rent. And I want to know a little bit more about what that means, if you could just explain that a little bit.
Well, so if you take a look at the last 10 successive quarters of our business, we've been able to grow our rents. Now, there's two buckets of tenants. You have the ones that are renewing, so that existing tenants that are basically voting to stay in their space as it's built, they're cash flowing positively, and they're going to pay you more rent to stay. Then there's that group of tenants that replace those that are leaving, right? And we call that retenanting. So if you look at the spreads that we reported in the last quarter, we have a blend of retenanting and renewal of about 15% increases in our rents. Closer to 10 to 12% on the renewals, but closer to 35 to 40% on the retenanting. So for us, it's a great trade for us to think about tenants that aren't producing, the stores might be too big, they haven't invested in a while, to get them to either downsize or reinvest in their store, and if not, take them out of our shopping centers and replace them with these retailers like Victoria's Secret. They're coming to our business in a big way, higher sales densities when they trade, and building beautiful stores that draw a customer that comes and shops far more frequently.
I wonder about acquiring properties. We talked to Yigal Namdar here a lot, who has a lot of mall business, but he's even shifted into office because he finds great discounts. Are you acquisitive right now in terms of properties to build or to take over malls?
So fourth quarter of last year, we had built a new center in Nashville, Tennessee. That's been a great success for us. And we bought two centers, one in Huntsville, Alabama, full-price shopping center, and then we also bought the existing outlet center in Asheville, North Carolina. What we found is acquiring centers is far less expensive than building new shopping centers, but it's also adding to the fact that there's not a lot of new product being brought to market. So the less product brought to market creates a little bit more demand. There's a lot of retailers looking for space, and that's part of the reason we've been able to push our rents.
Stephen, we have to leave it there. That is Stephen Yallop, of course, the CEO of Tanger. So good to see you in person here and hear a little bit more about what's new over at Tanger. Now, coming up, the market moving events you need to be watching this week. That's up next in our Trading Diary. This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. next week. Balance of Power is live in Chicago for the Democratic National Convention.
So we've got a race here, and the sprint begins.
We'll bring you breaking developments.
Vice President Kamala Harris closing the gap with Donald Trump.
And informative analysis, all leading up to special coverage Thursday evening, including Vice President Harris's acceptance speech as the Democratic nominee for president.
As president, I will show Donald Trump what real leadership looks like.
Tune in all next week on Bloomberg Television.
All right, let's get to the trading diary. This is what you need to be watching this week. Of course, we got PPI producer prices out today. Tomorrow, we're going to get the consumer version CPI. That's at 8:30 a.m. You can check out EcoGo on your terminal to see that. On Thursday, we'll get retail sales data. Shanali's watching that closely. And then speaking of retail, on Thursday, we're also going to get earnings from Walmart as well as Deere. I'll be watching the latter closely as crop prices have come down. Farmers aren't making enough money to buy new equipment. On Friday, U.S. housing starts are released, and we'll get a look into the residential real estate sector. And then we get University of Michigan consumer sentiment. They've been good at football lately, and they've always been good at economic data, so we'll look to that. Katie, what are you watching?
Well, I'm pretty much watching everything, including CPI tomorrow morning at 8:30, especially because you look at this market reaction to the PPI that we got at 8:30 this morning, a big rally on our hands. The S&P 500 up 1%. Of course, we got better than expected news on PPI, meaning it was softer. Bad news, good news, if you want to phrase it that way. The NASDAQ 100 up 1.6%. Big tech really loving that. The bond market also rallying as well. But I don't know if you guys noticed, I haven't been here for a week.
While you were gone, the 10-year touched 4%.
There you
We're
go.
back down to 386.
We disinverted for a second, right?
We did. That's what you missed.
But when I left Monday of last week, the S&P 500 was down 3% on Monday alone. And then since that day, we're up about 3% on the index right now. So it's like nothing changed.
We've made all of that back and then some, yeah.
What has roughly wiped out its gains for the month since we started this show is the Russell 2000. Jim Bianco does say it's our fault, but but who really knows?
That's true. If you look at that, we showed earlier like a, I don't know, a 3-month chart of the Russell 2000.
We sure did.
And you see that it's like a cliff, up and down, as if nothing changed, as if it never happened in July, the rotation that we talked about so much every day.
Boy, did we talk about it a lot. Coming up tomorrow on Open Interest, the CEO of Shark Ninja joins us in the C-suite. We're going to round out the week with the CEOs of Priceline and Evite as well. This is Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
The US to sell $95 billion in 4-week bills on August 15th to settle on August 20th.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, technology stocks, they jump on cooling inflation, but Citi strategists still see a risk of a sell-off. We discuss.
Elon Musk pitches himself as government spending czar in an hours-long glitchy Spaces on X with former President Trump.
And Google's gadget game, we discuss the search giant's latest handsets and AI goals. But first, let's check in on these markets. And we are on the up. The up and the up when it comes to the NASDAQ 100. Why? Cooling inflation signs. PPI data today signifies that. Tomorrow, we have all eyes on CPI, and we're managing to crescendo up more than 5.5%, let's call it, at the moment, over the course of the last 4 trading days. Ed, what are the key stocks that drive us higher?
So these are 3 names that also just happen to be the biggest points drivers to the upside on the NASDAQ 100. Tesla is higher. We will talk about the focus on EVs between Musk and Trump in that Spaces. Also taking a look at NVIDIA, on track for its biggest 2-day jump since late May. I don't think we can talk enough about this, even though earnings are still far away, August 28th. And then Starbucks. Okay, Starbucks is not necessarily a technology company. Laxman's out as CEO. The Chipotle CEO has been brought in. Maybe there's a digital story there, but it is the biggest points gainer on the NASDAQ 100. And frankly, on social media, Starbucks is a lot of what everyone's talking about as well. And look at that gain, 22% on a new CEO. Interesting.
Got to talk about it. Meanwhile, though, let's just get back to our core of tech stocks. They are jumping, but there is still this warning from Citigroup that caught our eye. Stocks could come back under significant pressure, basically on any negative economic data. That's as investor positioning remains extended on the bullish side, despite, of course, what has been the past month's sell-off. For more on these markets, let's bring in Callie Cox, Chief Market Strategist at Ritholtz Wealth Management. So it's interesting, Citi is pointing out here this $22.5 billion worth of long positions still out there tracking the futures on the NASDAQ 100. Why are we still seeing these long bets? Are they right to be long at the moment?
So sure, I think we agree with Citi there. I mean, tech stocks have had a stellar year so far, minus the last month. And, you know, with so many economic conditions changing, with the expectation for interest rates changing, we think there could be more volatility there just because tech has been a victim of its own success.
So to that end, do people reposition? How would you, if you found yourself generally long some of the big, mega, well, the Magnificent Seven, shall we still call them, how do you reposition that? Should you reposition that?
So look, we're a big believer in tech. It's hard not to be, but you know, we also believe in risk and managing a portfolio that helps you get from point A to point B in the smoothest way possible. So we've been talking to clients about rebalancing out of tech, you know, selling a little bit of those tech shares that have done so well this year and looking at, you know, potentially smaller stocks, mid-cap stocks, and looking at those rate sensitive sectors outside of tech.
Callie, I don't apologize for this. We were sharing shares of NVIDIA, earnings are August 28th. How anxious a period of time will it be for financial markets until that earnings print?
Well, I apologize about that. I think that's on a lot of investors' minds right now. I know that's something that we're watching just because NVIDIA shows that it can beat any kind of expectation you put out there over and over again. It's really the hot stock when it comes to fundamentals within the tech sector. The bar is a little bit higher. The bar in general has been higher for tech earnings this season, but the AI story is still quite real. I think my question is, what kind of guidance are we going to get out of NVIDIA? How are investors going to digest a sales and earnings estimate beat if bad guidance comes on the back end? I think the AI story is just a little complicated right now. I think it's lost a little bit of its luster.
I think I'm right in saying, Callie, that you're probably in the camp of investors that look at the technology sector, particularly cyclical areas of it, maybe the chip space, and say growth cycles come and go. I get that. But what if the growth cycle goes with NVIDIA? It's not like Jensen Huang to, I don't know, give a modest outlook, I guess, is the lesson we've learned so far, because his company's performing. But there is a scenario where he says, actually, things have slowed down.
Yeah, it's a great question. And I have to remind people, too, that NVIDIA is just one player in the semiconductor sector. Obviously, its fundamentals have been incredibly good, but we still don't know who the winners are when it comes to AI, when it comes to the AI story. And we could see other chip makers take some of that market share away from NVIDIA. I think if Jensen does come out and say that growth isn't as great as we're seeing, or growth hasn't been as great as we've seen in the past, I think investors could get a little bit worried there. And that's a reason why you should maybe rebalance some money out of tech. The expectations for the tech sector are just so high right now that it's hard to see tech beating those for a while.
Callie, it's interesting that while we have one side of Citi's mouth saying, look, we're thinking we've got a big exposure to a downside risk if we do get some worrying economic data, on the other side of their mouth, they're speaking about Citigroup analysts of basically buying the dip in chip names in particular. They still like NVIDIA. They're thinking maybe some other key names could be a broadening out. Because, look, when you look historically, other banks have shown that we've had 4 quarters of an upcycle for chips, but actually usually lasts about 10 quarters. How do you remain exposed without perhaps just keeping on betting on the same names? How do you take profit but still diversify within technology?
You do it carefully. And look, before any conversation about rebalancing, you have to realize what your risk tolerance and time horizon is. If you're looking at a 5 to 10 year time horizon and you're really excited about AI, then hey, any sell-off that we see in the tech sector, especially here, could be an opportunity for you. You just have to potentially wait it out a little bit. In terms of rebalancing, we like slow and steady, maybe selling a little bit here and there, revisiting your targets when it comes to single stocks that you're owning and sectors that you're owning, and just understanding that there's a market outside of tech. And, there are some exciting stories in other sectors. I know we're on a tech show right now, but, tech
Nothing
is exciting.
else matters, Callie. Nothing else.
Nothing else matters. But over the next year or so, we could see some other stocks take leadership. And in fact, we're already seeing that.
Here on Bloomberg Technology, Callie, I like to ask about the Fed, if I may. After PPI this morning, what's the Callie call on what the Fed does? Because, as we say on this show, higher rates discount the present values of future cash flows. And when you're a technology investor, that's important.
So the Fed looks like it's going to have to cut in September. CPI data confirmed this morning. PPI data confirmed this morning. I mean, we saw quite a drop in services PPI, or a slowing down in services PPI. And that just boosts the story for inflation getting lower and lower and close to the Fed's target. And if the Fed does start cutting rates in September, we could see investors' behavior around tech stocks change. I'll be honest, tech stocks are growth stocks, but I think that there are a lot of flavors in the tech industry, and investors are looking at them quite differently. So if we see growth maintain, but we see rates come down, I actually think that this rotation out of tech could continue, this rotation into rate-sensitive sectors. But you have to remember, if we do hit a rough patch in the economy, some of the strongest stocks on the market are tech stocks. So investors could look at those as a recession trade of sorts.
We got all the flavors of technology here on Bloomberg Technology. Take your pick. Callie Cox, Chief Market Strategist at Ritholtz Wealth Management. Thank you very much. Now, coming up on the show, Elon Musk sat down with Donald Trump for a wide-ranging interview, which he called more of a conversation, last night on an X Spaces. We'll discuss. This is Bloomberg.
this case, the more it reads like a Hollywood script. The nature of the killings, the execution, the just brutality of it.
It wasn't in the psyche of people that they could be looted because they are considered so sacred.
And we did it the way you do every single investigation. How do you eat an elephant? One bite at a time.
It jumped off the page at me that you could see that there was a Ponzi scheme taking place.
I started hearing mafia, mafia, mafia.
Il sistema è perfetto. Sono gli uomini che spesso non lo sono.
These are the holders of truth and justice. They cannot be possibly be doing this. But then they are. They are. And the evidence is there. It's overwhelming.
I think it would be great to just have a government efficiency commission that takes a look at these things and just ensures that the taxpayer money, the taxpayers' hard-earned money, is spent in a good way. And I'd be happy to help out on such a commission.
I'd love
if it were formed.
Well, you're the greatest cutter.
That was Elon Musk taking the opportunity to pitch himself for a role in a second Trump administration on last night's eventful Spaces with the former president. Bloomberg's Max Chafkin of Elon Inc. joins us now. And I mean, there's so much to recap. For me, that was, in the context of an election cycle, important, like this idea that Musk would maybe have a role if Trump were re-elected to the White House. And Musk also was at pains to kind of clarify his own politics. You tuned in for many hours as well. Let's start there.
Yeah, I mean, nearly 3 hours long with the lengthy delay. There were a long bunch of technical difficulties that caused it to start late. I mean, in terms of the sort of Musk-Trump relationship, what I heard was Musk being extremely deferential to Trump in a way that is pretty unusual for him. He's obviously a combative guy. I mean, not only was he kind of asking for a job, but he was nodding along during lengthy sections where Trump was seeming to downplay climate change. You know, Musk has a lot to potentially gain here beyond, of course, potential employment. Tesla and SpaceX both have a lot to gain by a friendly regulatory environment, both in terms of subsidies, government contracts, as well as, you know, potential regulation or lack thereof of things like the potential robotaxi.
Let's just go into that awkwardness around climate change and the fact that he calls himself sort of, well, you can be an environmentalist, you can still do good for the planet, but not have to sacrifice on ultimately a great car, was kind of his pitch to a whole new audience.
Well, you know, weirdly, that has been Musk's pitch for some time, almost from the very beginning. What was different was his willingness to kind of go along with the idea that climate change is not existential. You know, back during the early days of Tesla, and especially during the Obama years, Musk would emphasize that the planet is running out of oil, that climate change is a really big problem. Trump, during this space, said, we've got 500 years as long before we run out of oil. You know, climate change is not that big a deal. We don't need all electric cars. You know, these are all things that at an earlier time would have really set Elon Musk off, and he has, you know, navigated to a slightly different position, a position that is definitely much more accommodating of kind of right-wing skepticism of man-made climate change.
Max, electric vehicles were discussed. Actually, I want to bring some news this morning to our audience that in response to the Spaces last night, the UAW, the United Auto Workers Union, filed a labor complaint, a practice charge against both Trump and Musk. And I'm summarizing, but they basically said that during the course of that conversation, the two men illegally intimidated union workers. Actually, Musk literally 30 seconds ago responded on X, which we will show as soon as we got that in a second. Combine all that, please. It's difficult, but that news this morning of what was said about EVs and unionized work.
Well, we actually heard it in that clip you played, that bit about him being a great cutter. That went on. Trump said, you know, your workers went on, or threatening to go on strike, and you just let them go. The UAW has already cut an ad about that. And of course, this could become politically difficult for Trump, who's trying to cater to working class voters in swing states, especially in the Midwest, where unions definitely hold sway, and where at times he's seemed to make up some ground. And of course, it could be an issue for Elon Musk, because the UAW is trying to unionize electric vehicle manufacturers and has signaled its intention to do so, although it doesn't seem like has made a ton of progress yet.
So we know what we did here around EVs and around, well, as you say, basically sort of a cozying up of Musk to Trump. What we didn't hear was anything about crypto. Did that surprise you?
Well, I mean, it's surprising in the sense that Elon Musk has kind of expressed affinity with the kind of crypto community. There's a lot of overlap between fans of Elon Musk and fans of Bitcoin. But, you know, Elon Musk's never been totally a crypto guy. He's more somebody who seemed like he has a desire to kind of graft himself onto a popular movement. So in that sense, no. But what we did hear was, you know, kind of a pitch for the Boring Company, Musk's tunneling venture, as well as Trump suggesting that he might be open to expanding the Boring Company's operations, praising Musk's tunnels in Vegas, as well as Ed said, this kind of more muted praise, kind of almost like backhanded compliment for Tesla's cars. Trump saying they're good, but not everyone needs an electric vehicle.
Ah, the nuances there. All over Elon Inc., as always, I'm Max Chafkin. We thank you. Look, as we referenced at the very beginning, though, there were some technical glitches during Musk's conversation with Trump last night on X Spaces. Musk actually blamed the delay on a cyber attack, and he didn't provide any evidence, and then went when the event started to sort of suggest that Trump's opponents were responsible. Just take a listen.
We unfortunately had a massive distributed denial of service attack against our servers. As this massive attack illustrates, there's a lot of opposition to people just hearing what President Trump has to say.
Let's get an expert on DDoS. Brian Palmer, CEO of Trellix. Brian, did this look, feel, seem like it was a cyber attack?
It's possibly a distributed denial of service attack, which is a malicious attempt to disrupt the servers. That is one possibility. There's a lot of reasons why servers and a system could go down. I don't have any insight directly, but it is a possibility.
A senior source at X last night told me that it was definitely a DDoS attack, but The Verge reported, citing staffers, unnamed staffers, that it was not a DDoS attack. Regardless, what did it tell you about the strength or fragility of X's security and its systems?
Yeah, I wouldn't speculate on whether it was or it wasn't, because I'm not involved in the investigation. What I can tell you is that around election time, 50% of the world is going to have elections this year. What we do know is that distributed denial of service attacks are on the rise, and they are used to disrupt campaigns. They're used to disrupt elections. So it is plausible. Like I said, I don't have any details on the investigation or why this particular incident happened at X.
Brian, I'm sure with Trellix, your job is to ensure that despite such events, websites, live streams remain impenetrable. And I'm interested as to whether this can be a case, because this isn't the first time that we've seen some really awkward, embarrassing delays to certain spaces. And I'm wondering what could have been done to prevent a denial of distribution service attack occurring in this particular way.
Yeah, look, these attacks are very serious. They happen at scale. They happen a lot of different ways. They can happen through volume, by just sending so many packets, and by using botnets and zombies. So these can be very powerful, and many companies have suffered. We know just recently on July 30th, the Azure platform suffered a distributed denial of service attack and was down for about 6 hours. That impacted the Starbucks app and Outlook and Minecraft, some other things as well. So these attacks are pretty sophisticated, especially when they're being played out by adversaries who are very skilled.
Brian, the FBI said that it's investigating allegations made by the Trump campaign team about documents accessed from the campaign during an attack. in the last week or so. Have you followed that case study, and what do you make of it?
I followed it. I heard the reports. I think what we have to do is let the FBI do their work. They've got some great cyber professionals who are going to do an investigation. Again, we know that in election season, all elections, we saw it recently in France, there was a distributed denial of service attack launched by Russian hacktivists on the French government during their election. So this is something that's happening. The specific cyber attack that you talked about over the weekend, I'll be interested to see what the FBI uncovers in their investigation.
I mean, Brian, we're also so fresh in our mind of how a lot of our lives and flights got put on ice a few Fridays ago because of a CrowdStrike issue. And actually, when that happened, Elon Musk went on to X and said, look, he's ditched CrowdStrike. And I'm interested that you actually said at the time, you told Bloomberg that you understand why, and you'd welcome Tesla CEO as a customer. Have you been approached by Elon Musk?
Sure.
Wanting your...
No, I haven't talked to him at all, but obviously we're a leader in cybersecurity, and if they need some help, my offer stands. We'll do whatever we can to help out X and Elon.
Brian Palmer, CEO of Trellix, thank you very much. Now, coming up on the show, investors hope Google can save itself from its nearly $360 billion rout, but with a smartphone. What to expect from Google's Pixel event? That's next. This is Bloomberg Technology.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that it will be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Time now for Talking Tech, and first up, Polish billionaire Rafał Brzoska takes aim at deepfakes, holding Meta accountable for fake ads on its platform that use the likenesses of famous people. Look, the founder and CEO of InPost won an injunction last week temporarily banning Meta from publishing fake ads using the likeness of him and his wife, who's a local TV celebrity in Poland. Brzoska is now waiting on a similar order in Europe from Ireland's Data Protection Commission. Plus, Singapore's Sea Limited, it raises its outlook on e-commerce strength. The company is actually saying they expect sales of goods to rise in the mid-20% range, exceeding the high teens they saw in March. Second quarter profit and sales also topped analyst estimates. And investors, they're anxiously awaiting Alphabet's Google Pixel event. It's happening today. The tech giant is set to debut new hardware and software. Look, traders are hoping that the introduction of new AI features to the redesigned Pixel phones could help stop what has been a massive sell-off. It's wiped off $360 billion in market value of Google in just 1 month. Ed, more on it.
Yeah, this is worth talking about and thinking about what we can expect from the Google Pixel event. Let's get to Bloomberg intelligence analyst Anag Rana. We have this pie chart, and it tells the story of where the Pixel or handset sales sit within the bigger picture over the last 4 quarters. And frankly, Anurag, the answer is they are a small percentage of revenue. So why is success with the Pixel important?
I mean, it really has to showcase the software. I mean, the hardware doesn't really matter because remember, most of the phones in the world are Android phones at the end of the day. So if Google can showcase what Gemini can do on their device, I mean, it really changes the narrative for high-end Samsung phones over the long term. I mean, this is something that then Apple has to deal with, next month.
Mm-hmm. What's interesting, of course, is the fact that tie-up between OpenAI, ChatGPT, and Apple is somewhat delayed, and how much, therefore, integral, how much of a boon to Google is it that they basically have their own underlying large language models?
See, at the end of the day, people are not buying phones so quickly or moving around because of one large language model or the other. But this is really a fight between the 2 biggest large language models that's out there. One's OpenAI, the other one is, Google's Gemini. And at the end of the day, Google has to showcase that they are actually better, not even closer to OpenAI. And these kinds of events are a chance for them to showcase that, at least when it comes to on-device inferencing.
Let's focus on that. Bloomberg Intelligence has done deep analysis into generative AI. What is the future of using generative AI tools or smaller models on device, Anurag?
It really makes it what I would call as the hyper-customization of smartphones, where your smartphone behavior is going to be very different than mine. You can do a lot of things that an assistant can help you with from anything from booking airline tickets to maps, all those things, but you require something that's on the device. And both of these companies are really championing that they will be the first ones to achieve it. Now, Apple's going to launch a new phone. They really have a long to catch up.
Bloomberg's Anurag Rana of Bloomberg Intelligence. Thank you so much. Coming up, we're going to be joined by Gil Simon, Chief Investment Officer at Soma Equity Markets, to talk up tech. This is Bloomberg Technology.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice then to believe in yourself and really work hard. When I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting in Bloomberg to talk about sustainability, about future of science. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back to Bloomberg Technology. Ed Ludlow in San Francisco.
And I'm Caroline Hyde in New York. Quick check on these markets because we are up and to the right when it comes to the NASDAQ. In fact, we're out of 4 straight days of gains. That's the longest winning streak since July the 10th, more than a month for the NASDAQ. So we're managing to see, once again, a bit of a risk-on attitude to the market after last week's absolute turmoil. But bond markets really getting a bid as well. Yields crushing down on the front end. 2-year yields, as we see, off by about 6 basis points. Why is that? The PPI print. Basically, inflationary data is coming in and giving us the comfort that inflation is being tamed. What does that mean for CPI print tomorrow? What does it mean for the economic market reactions that we're seeing? Bitcoin currently up more than 1% because the dollar is down. Move on to the individual movers for a moment because that's the macro. On the micro side of things, we are looking at Nvidia just on the higher side, more than 5%. Of course, all eyes on that's earnings, but really we're seeing a buy the dip moment in some of these chip makers. We're also seeing it spread out to the likes of Broadcom, up more than 3%. We're seeing some 13F filings come out. Some hedge funds are buying into this particular name. And I'm looking at Tesla because we are still up more than 4%, even though you singled out what ultimately is some fighting talk coming from the overall association that focuses in on United Workers for automobiles, saying that we don't like what was said between Trump and Musk yesterday on that Spaces, Ed, but we are seeing at the moment Tesla getting a bid. Maybe Republicans are going to be buying EVs more. Let's listen in.
Yeah, I think there's a lot to discuss in the markets in the short term and the long term. Let's get into it with Gil Simon, Chief Investment Officer at a $2 billion hedge fund, Soma Equity Partners, which makes concentrated long and short bets on tech, media and telecom companies. The fund's up about 4% this year through June. I'm also joined by Bloomberg's Hema Palmer, who covers this space very closely. Gil, good morning to you. Welcome to the San Francisco studio. I want to start with AI broadly because it's what everyone's talking about. But you have this thesis that in terms of earnings revisions or something tangible, that all the investment's worth it, that shows up in hardware names. I don't see too many hardware names that you're holding. Explain that to me.
Yeah, so our focus has really been historically on software and internet companies. That's primarily where kind of our sources of differentiation have been, just in terms of our own research and experience. We've owned some hardware over time, but one of the things that we've found difficult is just with the predictability of this early AI investment wave. And so we're looking for really durable beneficiaries of AI. And so we think we've found many in both the infrastructure and application layers. And so while it's been unfortunate to miss, like, say, NVIDIA, we think it's very difficult to predict just how their fundamentals play out over the next couple of years. And so, we're happy with our strategy and focusing on what we know best.
And Gil, one company that you're invested in that you're long is Rivian. Now, this is a stock that's been under pressure, down 42% so far this year. You think over 2 years the stock could hit $50 a share. It's currently trading around $13. Explain to us your bullishness on this company and how much of it is riding on this deal with Volkswagen.
Yeah, so great question. So I've noticed a lot of the conversation this morning has been about Elon and EVs and Tesla specifically. I think the market has really started to look at Tesla as kind of the only real winner in EVs in this country. There are some big Chinese companies like BYD that are successful as well. But we've really kind of tainted any other secondary players in EVs into like this, dustbin of unlikely, kind of unviable companies. And we think Rivian is emerging into its promise as being the number 2 EV player after Tesla in the West. And so this deal that they just announced with Volkswagen about 6 weeks ago, we think is a massive validation of their position. Volkswagen is investing an aggregate of about $5 billion that will flow to Rivian. Rivian's only a $15 billion market cap today. Compare that with Tesla at almost $800 billion. And, Ed, just being here in San Francisco, we see a lot of Rivians out on the streets. It's very reminiscent of when Tesla started to get traction with the Model S. Rivian's roadmap is very much following in Tesla's footsteps, going from selling $100,000 kind of high-priced cars to a mass market. And the R2 and R3 models, which Rivian announced are going to come in 2026.
I'm just going to jump in here. So as you know, I covered Rivian really closely for a few years. The VW deal was big. I've written that RJ Scaringe has been so to speak unreliable boyfriend. The Mercedes deal didn't last long. Ford never materialized. But it indicates that Rivian can't do it on its own. Is that fair?
So I actually think it's slightly different. I think the view that we have is that the legacy car industry is really struggling with the transition to modernizing their vehicle production. And so there are a couple aspects to that. One is the legacy car companies are really good at a couple things. They're good at outsourcing and they're good at marketing. They're not good at vertical integration and they're not good at software. And so if you look at even Ford's last earnings call, one of the things that their CEO called out is that Tesla and Rivian, those are the two companies that he called out, are really the only two companies that have developed a kind of new technology infrastructure that really modernizes the experience for customers. One of the important things now as a customer is, and I have both, I've had a Tesla for a long time, you expect to get over-the-air updates to your car. You expect to be able to access your car through your mobile phone. And those over-the-air updates are not just to the user interface. They're to the suspension system, the braking system, which requires a lot more integration. So we think the Volkswagen deal is like a real turning point for the industry in that Volkswagen, which owns Audi, Porsche, Volkswagen, Lamborghini, they want to infuse all of those platforms with Rivian technology. And so it opens up this new paradigm in the automotive industry where you see that the legacy OEMs might need Rivian as a supplier of technology and software, which is a new angle to this story.
And given, the developments that we've seen, it's still been a pretty volatile stock. How do you hedge against that volatility in your portfolio?
Yeah, so we've used the volatility to our advantage. So the company, if you remember, came public in 2021. It was one of the biggest IPOs in history. I think came out at a $100 billion valuation because people perceived that it could be the next Tesla. Several years later, that promise, the roadmap is starting to come into view. Obviously, that was very early for people to think that far out. But we've used that downside volatility to our advantage. So we've just purchased the stock in the last 6 months at around these levels. And so we're very happy taking a position in Rivian, using the downside price action to our advantage to be long-term investors to see what this company can become.
What's interesting, one of your other key holdings is also, impacted by Tesla in many ways, and that's Uber. That was the robo-taxi read across. I'm really interested in your ethos and focus on Uber and why you're so committed to the name.
Yeah, so it's a great question. This year, in spite of Uber putting up tremendous fundamentals, one of the big overhangs on the stock has been Elon's commentary and plans around robo-taxis. So this has been a big debate in the stock market, and we actually think, we're very convicted, in fact, that AVs, autonomous vehicles, actually will go through Uber's platform, not around Uber's platform, meaning that today the biggest player in AVs is actually Waymo, and Waymo is partnering with Uber in Phoenix, and we are anticipating potentially expansion of that agreement. Because if you think about Waymo going direct to consumers on its own through its own app, it doesn't have nearly the exposure or distribution that they get through Uber. And so to better utilize their fixed capacity of cars, they are partnering with Uber to generate better utilization. We think that that is a very important understanding to really understanding how AV companies that have autonomous functionality, will leverage Uber's distribution to achieve better economics. Now, with robo-taxis, one of the big knocks that we have is, again, as a Tesla owner, the dream that I can push a button and let my car drive around and generate revenue for me sounds great, and we love Elon's long-term visions. But we also think that it's a bit naive and that the number of customers that are likely to push that button and let their cars drive around with strangers in the back seat, there are just a lot of real-world kind of considerations that we think make it still very far from happening.
The real world driver is, of course, artificial intelligence as well, Gil. I go back to that as a driving force of what names you get in and get out of. Because where are we undervaluing the impact of artificial intelligence in certain applications and names?
Yeah, so, we own many companies. So, Ed pointed out that we don't do a lot of hardware, but we own a lot of companies that we expect to benefit significantly from AI. Obviously in the automotive space, AI, we really talk about autonomous driving, and that's why it's important for us to have a view on Uber and whether AI is a benefit or a hindrance over time. But there are a lot of names that we own in the infrastructure space, really in cloud infrastructure like Amazon and Microsoft, names that are known to everybody, but also Datadog in the software space, which is a little bit of a tie-on to companies that are investing in their cloud infrastructure. We also own a company that you wouldn't really think of as an AI beneficiary, which is Roblox, which I saw Bloomberg Intelligence actually put out a piece this morning talking about how Roblox is embracing AI to help their developers build games and experiences on the platform. So there are a lot of companies that are in the market, both enterprise and consumer facing. We just want to make sure that we're with management teams and companies that are on the front foot, that are looking to embrace AI in all the different potential ways that they can.
Gil, joy to have you on. Come back soon, we hope.
Thanks so much.
Gil Simon, Chief Investment Officer at Soma Equity Partners. And we've got to thank our own Hema Palmer for helping bring that interview to bear. Meanwhile, coming up, we're going to be joined by, key focus of VC right now, Isabel Friedhelm. Is going to be joining us, founder and managing partner over at Athena Capital. Her take on the IPO market. This is Bloomberg Technology.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg. The top names in global leadership are on Bloomberg.
We are 40 millions. We're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone. Only our lives are at stake here, and nobody can just trade our lives.
Nobody covers the top global leaders like Bloomberg Television and Radio. The top names in tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything.
The IPO market is open. And if you look how the companies that have gone public, Rubrik and some Instacart and some of these other ones have traded, they've actually done remarkably well, but yet you wouldn't know that based on the volume, which is like almost dried up to next to nil.
That was Lead Edge Capital Managing Partner Mitchell Green on the show yesterday, saying the IPO market is back or open, but not everyone agrees. Let's bring in Isabel Friedheim for more. She's the founder and managing partner of Athena Capital, which is currently raising a $500 million fund focusing on private companies preparing to go public or considering another exit like M&A. So Mitchell says the IPO market is open. Do you think the IPO market's open?
I do think we are starting to see a recovery. The IPO volume in the US is up in 2024, Q1, Q2, up about 12%. Proceeds are up as well, which is encouraging. And we're starting to see larger deals such as Reddit, Stripe on file, NVIDIA. And this is an indication that investors are starting to indicate interest in companies going public and in deploying capital into tech companies in particular. But they're nonetheless prudent. And that's why we're only seeing at this point still larger size companies because they have a better chance of success. And I think we're going to continue to see that for the remainder of the year with likely a higher velocity of deals in 2025 after the elections.
So election's an interesting point. Something that Mitchell reflected on yesterday is it's very difficult to be a private company planning to go public from a regulatory standpoint. The paperwork involved, frankly. What do you make of that, particularly with your focus on taking companies that are currently private but thinking about jumping to the equity markets?
It is very difficult. Unfortunately, we are in a regulatory environment in which it is hard and expensive for companies to go public. In fact, we've seen over the last 30 years or so, about 90% decrease in the volume and the number of publicly traded companies. And unfortunately, Chairman Gensler has enacted almost 40 rules recently, and it is making it harder. It is making the U.S. less competitive, and it has repercussions that are both geopolitical and repercussions on our standard of living.
I'm interested then what to be done. Because you've got such a wealth of experience when it comes to private equity, IPOs, but also SPACs. And many would say, look, the whole problem with SPACs was that there weren't enough investor protections in place. How do you make it less onerous, less expensive, but still necessarily protective, particularly of retail investors, for companies to go public?
What SPACs were, they were a symptom of retail investors demanding access to tech returns. For the last 2 decades, tech returns have been hoarded by the venture capital industry. So the Amazons and the Facebooks and the Googles of the world, those returns took place for the most part privately before the companies went public. And that's the case for many tech companies. And retail investors wanted access to those investments. And they're difficult, they're risky to make in the venture capital asset class. And therefore, SPACs were just a symptom of that. But beyond that, there needs to be easier access for capital formation for tech companies that are innovative, that improve our standard of living, because the venture capital that we provide is the lifeblood for innovation. And we in the venture capital industry exist for the exits. We fund companies because we know there's an exit on the other end. And if companies stay private for too long, we jeopardize the volume of the venture capital asset class.
So what, therefore, should we brace ourselves for post-November? Is it all AI names?
It's larger size companies in the short term, and it's going to be more innovative companies probably in the next couple of years. We're still seeing a recovery. We don't know when exactly, but it will happen. There's a big backlog of companies that want to go public, investors that want to deploy capital into those tech companies that are going to find solutions to climate problems, to drug developments, to payments, to many of the technologies that we use that, again, improve our standard of living. So we will see that happen. Whether it's 6 months, a year, 2 years, doesn't really matter, but it will happen.
Well, we'll see as and when that IPO window really does fly open as well. Friedheim, great to have some perspective, particularly on the SEC. Founder and managing partner of Athena Capital. We thank you. Meanwhile, coming up, that we're going to be joined by former money laundering and crypto prosecutor Amanda Wick for her take on Trump's crypto platform. That's next. This is Bloomberg Technology.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
If I had invested with you, which I wish I had, what kind of rate of return would I have had over that 10-year period of time?
Over 100% a year on average. On average.
100% a year, that's pretty unusual.
I'm looking at the crypto markets, Bitcoin in particular, trading just below sort of $60,000 per token because it was expected to, but did not come up in that spaces between Musk and Donald Trump. But Donald Trump has been talking about crypto a lot recently. At the Bitcoin 2024 conference a couple of weeks ago, he even promised to create a national Bitcoin stockpile with the cryptocurrency being held by the US government as part of his platform. Have a listen to this.
If I am elected, it will be the policy of my administration, United States of America, to keep 100% of all the Bitcoin the U.S. government currently holds or acquires into the future. We'll keep 100%. I hope you do well, please.
That July 27th statement alarmed a few former prosecutors, and that includes Amanda Wick, now a principal with Insight Consulting, who served as a federal prosecutor for the US DOJ for nearly a decade, and you specialized in money laundering and cryptocurrency. Why did that Trump position alarm you?
Fortunately, it's one of the many things that he says that's either wrong, illegal, or not possible. And when he says he's going to keep 100%, I don't know that he realized that some of that money is from the victims of scams, hacks, ransomware. It has to go back legally. And it's been stockpiled largely because it couldn't go back due to some contracting issues. I think the concerning part is that Trump has a tendency to say what people want to hear and not necessarily what's even remotely feasible or legal.
Of course, this call is for a stockpile. The US holds, what, about $12 billion worth of crypto at the moment, variously Bitcoin, ETH, as well as Tether's stablecoin. Just go through the motions of how the US government decides as and when it should sell its crypto holdings to repay those who are the victims of scams or have had ransoms, for example.
Well, there's a process, and it's called the asset forfeiture process, and it's been established for years. The issue was that for several years, the process by which those funds would be liquidated or sold was held up due to a contracting issue that the U.S. Marshals was having. And only recently, on July 1st, I believe, was it announced that the contract had gone to Coinbase. And so this perception that the government was purposely keeping the funds was actually a contracting glitch, likely, in the sense that they were stalling. It was stalling in terms of their ability to liquidate it. But normally, that process would be they would be sold and the funds would be returned to victims as part of the normal process of either a civil or criminal case.
Yeah, Amanda, I just want to level with our audience. We're talking about this because we thought it would come up last night between Musk and Trump, and it just did not. SEC and Gensler, you know, that's the other side of this that you talked about firing Chair Gensler. You know, the mechanics of that working and then trying to get a Bitcoin reserve. I'm just trying to understand process, why it would work.
Yeah, Professor Tanya Evans did a phenomenal article on this in Fortune, I believe, where she talked about the actual impossibility of firing him on day one. And I think, look, there were people actually placing bets on whether Trump would say Bitcoin or crypto last night. And I think it's a disturbing trend that he tends to take money from people who are willing to give it to him. And the crypto community has been battered for 4 years by the Biden administration. And they are only too happy to head towards somebody who's giving them positive indicators. I think the Harris campaign has been slower to give positive indicators. There's a group, Crypto for Harris, that is working on that and is gauging on that. But there have been positive indicators from the Harris campaign privately, just not as publicly as Trump. But I think the crypto community has to decide, do you want somebody who's saying what you want to hear, but it's not possible? Right. Or do you want somebody who's taking their time and deliberating what the policy should be because it actually has a chance?
Okay. Amanda Wick, Insight Consulting Principal and former federal prosecutor. We thank you. That does it for Bloomberg Technology.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Live from Bloomberg's world headquarters in New York, I'm Katie Greifeld.
And I'm Tim Stenevec. Welcome to Bloomberg Crypto. It's a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, crypto recovers after a week of global market volatility through risk assets into a tailspin. Its price, though, still remains below $60,000.
And in just a moment, we're going to speak about all of this volatility with Leah Wald, who's now in charge of the firm Cypherpunk.
And we'll dive into how institutional and retail investors are behaving with Metafied's Frank Spicer.
All that and more ahead over the next half hour on Bloomberg Crypto. First, though, a snapshot of how things are shaking out so far today. The two largest cryptos are mixed on a day when stocks are broadly higher and yields are lower. This after a Fed-friendly read on U.S. inflation. And it's leading investors to think that the Fed will be able to cut rates come September. Bitcoin up a little over 1%, and we got Ether down in the red. But let's take a step back and check out the picture over the past week. Bitcoin actually outperforming both the S&P 500 and the NASDAQ 100 following that 8% sell-off last Monday. Bitcoin over the last week up more than 5%. You got the S&P 500 up more than 3% over the last week, while the NASDAQ 100 up 4.4%, Katie.
Well, let's also take a look at how Bitcoin ETFs are trading, because Bloomberg Intelligence found that the biggest spikes still occur outside the usual New York trading hours, and that's even with the launch of those spot Bitcoin ETFs. In fact, you take a look at total returns during U.S. trading hours, they're negative with muted price changes, Tim.
Well, Bloomberg Intelligence analyst James Seyfert joins us now to explain more of this research. James, I'm wondering, is this pattern going to continue even as we see Bitcoin ETFs continue to grow, continue to get bigger?
Yeah, I mean, my personal thought is yes, I think it is likely to continue. I mean, if you look at what happened last Sunday, which is when capital markets around the world were virtually imploding, we saw things collapsing left and right. We saw in the crypto world, Ethereum led the way down there. Bitcoin obviously followed as well. And part of the reason for that is when you have a lot of trading, these things, what their cryptocurrencies are known for, they trade 24/7. The most liquid markets are going to be during market hours. That's when most of the trading volume happens. That's where the depth of the order book is going to be deepest. But on Sunday morning or Sunday night in the U.S. hours, and you're trying to sell hundreds of millions of dollars in an asset and the order book isn't there, there's not a lot of people there to trade, you're going to have much more price impact. And that goes in both directions. So it's not just the thin order book. I would also add that it's a leverage is kind of built into the crypto ecosystem more so than maybe traditional financial markets. So you get these like cascades where these stop losses are hit in both directions, so going up and going down. So you see a lot of volatility, and you see a lot of price movement on weekends and after hours.
Well, that's exactly where I wanted to go, which is what happens during the weekends. Of course, you have ETFs which trade, only during working hours in New York time, but then you have the weekends, and it sounds like what you're saying is that it's still goblin hours when it comes to what happens during the weekends.
Yeah, exactly. I mean, not everyone is trading there. You don't have the big market players typically with their bids and asks out in the market. And so the order books are just really thin. There's just not as much liquidity. So you put in $100 million of a sale order or a buy order, it's likely to run through the current bids and asks in the market and send the price skyrocketing. Oftentimes it corrects in other markets during traditional U.S. market hours. But yeah, we basically see this issue of both liquidity cascades or leverage cascades where people are being stopped out as different levels are hit, and whether that's going up or down. So it's indicative of just the fact that the crypto markets are 24/7 versus the U.S. markets, which are 5 days a week from 9:30 to 4.
Yeah, fingers crossed it stays that way for U.S. markets. Katie, I don't know how you feel about this.
Why? It'd be great. We could always be on air.
You just outed yourself by not working on weekends.
Oh,
working hours. Just for Katie, it's 9:30.
I'm still on
Facebook,
Twitter.
right?
Don't worry about it. I'm always online. Bloomberg Intelligence analyst James Seyfert, always great to see you. Let's keep the conversation going now with Leah Wald, recently appointed CEO of Toronto-based crypto company Cypherpunk, which invests in the blockchain ecosystem. And we kind of know Cypherpunk is basically a Bitcoin holding company, maybe similar in structure to MicroStrategy, which the U.S. audience might be more familiar with. But it seems like recently you've been investing more heavily in Solana.
That's absolutely right. And first of all, Tim and Katie, thank you so much for having me on. We've been very interested in the Solana ecosystem. Obviously, there's been dynamics at play for Ethereum and Bitcoin and their growth, and also maybe some hiccups along the way. But for the Solana ecosystem, we're seeing large development from the platforms, from the infrastructure, for the community. And it's very important to note, for the growth and sustainability of a token and its blockchain is how well that ecosystem and the community developers are building on that ecosystem and engaged.
Lee, is this something you're going to continue to do? Sell Bitcoin exposure, lessen that Bitcoin exposure, and increase Solana exposure? What can investors sort of take away from the strategy moving forward?
As of now, you can see from the public statements that that has been the strategy. We're very interested in following Solana and the movements of Sol moving forward.
What would be sort of a typical asset allocation in the end? Like, what's the target asset allocation?
So we're also ramping up our staking operations. So we're interested in not only the price movements and holding Sol on the balance sheet, but also being an active participant in the Sol and Solana staking ecosystem. So from an operations perspective, we're trying to engage and enhance performance. As for asset allocation, things are definitely changing at Cypherpunk Holdings, so I hope you stay tuned.
Well, definitely going to stay tuned there. But I'm curious about, given that, one of the goals is accumulation here, how do you view pullbacks in the market? You think about the volatility recently that we've seen in Bitcoin, for example, really dipping below 60,000, getting close to 50,000, now back up close to 60,000. Was that an opportunity that you seized on to add more?
I think the market is very interesting right now. You're absolutely right. We've seen a muted demand from traditional institutional investors over the summer. And also, I think that's likely a shakeout of potential seed providers in the Bitcoin ETFs. With volatility, risk parameters may also be hitting uncomfortable levels for investment committees. On the Ethereum side, I think that that's been interesting and mixed as well. I mean, on the one hand, they have not accumulated as much AUM as analysts expected and issuers wanted, given where fees sit. However, on the protocol level, and this is also why we're working and looking at Solana, I think it's been immensely successful, given there's been no major hiccups in the network. So Ethereum's capital market structure is vastly different from Bitcoin. And issuers right now holding $7 billion already represents more than 2% of Ethereum's net market value. So in Ethereum, you have staking and restaking, which is a bit of a daisy chain of locked up tokens. And this could have tripped up the ability to source ETH, but it hasn't so far. There's also dynamics within the Bitcoin ecosystem that could have tripped up, and they haven't so far. So I think that that's really interesting. Of course, outside the United States, though, we have seen an increase in demand for Bitcoin. And I think that, it's important to note that, yes, we're looking at AUM accumulation within the Bitcoin ETFs or large whale trades as indicative of overall demand for Bitcoin, but much is taking place on the individual level where wealth is relative, or nation state policy level where expectations and actions, have been publicly discussed.
So, of course, you're a publicly listed company. Your ticker is HODL, HODL, of course. What is your pitch to potential shareholders, to potential investors? Because I could see one of the pushbacks here being, why wouldn't I just buy a spot Bitcoin ETF, either in the US or in Canada, where they've been listed for years? Why buy shares of HODL versus just going into an ETF?
I think that's a great question. Originally, when HODL was trading in 2018, we were that go-to exposure play for Bitcoin. Since then, we've advanced and grown, and as of right now, being highly focused on holding Solana, staking Solana, as well as being engaged as a Solana infrastructure player, staking infrastructure player. I think that investors who are looking for exposure to SOL, pre-SOL ETFs should be interested in what we're doing right now.
Leah, we're fewer than 90 days away from the presidential election here in the U.S. And we're talking to a lot of our guests about what candidates mean for the crypto landscape. And I'm wondering, in your view, who's better for cypherpunk? Who's better for crypto, Donald Trump or Kamala Harris?
Quite the question. I mean, it has been, as we all know, a very difficult 4 years. It's, you know, we've all had black eyes in the industry. It's been difficult on the banking level. It's been difficult, obviously, as a former issuer to work with, you know, Chairman Gensler on getting approvals. We actually, at Valkyrie, first filed for a Bitcoin spot ETF in January 2021. So it was a long road. As for which candidate, you know, when elected could be quote unquote better for Bitcoin, obviously to be determined. We're still waiting for a strategy to be more explicit in the Harris camp, but I think that it will come out. I think that in the end of the day, we're seeing a different inning right now with the traditional finance players in the market, as well as pushing on an very educational level cryptocurrency, you know, platform education. So I am positive and optimistic that either administration will provide guidance in positive light for the cryptocurrency industry.
All right, there it is. Cypherpunk CEO Leah Wald. Leah, always good to see you. Thanks for joining us on Bloomberg Crypto. Well, coming up, Metafied CEO Frank Spicer joins us to talk about his $4,000 call for Ethereum and the 2024 U.S. presidential race.
And of course, to access all the latest data and news on crypto, check out CRYP Go on your Bloomberg terminal. This is Bloomberg.
The top names in business are on Bloomberg.
The challenge for us now is not very much on the product, it's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Bitcoin has recovered from last week's global trading swings. Remember last Monday, an 8% decline on the crypto. Our next guest sees Bitcoin possibly hitting $100,000 by the end of the year. So let's bring in Frank Spicer. He's the CEO of the crypto software firm Metafied. Frank, good to see you again. $100,000 for Bitcoin. That's your call by the end of the year. Trading right now just shy of $60,000. How does it get there?
Well, thanks for having me back, Tim and Katie. I'd say, there's a few things that we have to look at. In the previous bull run, two types of buyers didn't exist that exist today, right? So now you have nation states possibly kicked off by Trump's call for, a strategic Bitcoin reserve. So that sort of ramps up the buying pressure from a buyer with deep pockets, nation states. The other thing is ETFs now. They're gobbling up Bitcoin whenever they dip below a certain point, so they can pull them and obviously have them readily available for people coming into their funds. So with those two, increasing pressures upward on the price of Bitcoin, and the supply being fixed, I think it's one of those things that you just can only go in one direction. Like barring some type of economic meltdown, the amount of money coming into the system can only push the price up. And I think given the uncertainty of other currencies as an asset, I think Bitcoin starts to look really attractive to a whole different set of buyers.
Hey, Frank, why do you think the U.S. needs a strategic Bitcoin reserve? I think a lot of people understand the need for a strategic petroleum reserve, but why a strategic Bitcoin reserve, as former President Trump has called for?
I think you actually hit the nail right on the head right there, Tim, is, you don't need to hold the dollar if you're a foreign country to sort of get around or get out from under the petrodollar, the Chinese-Russian alliance for petroleum. You can actually probably hold Bitcoin and settle transactions in that if you have to, without committing to the dollar, without committing to the pound. It's sort of a more neutral way to approach, the current block of currency options available. And I think it's one of those things where it gives people, nation states some more options to sort of deal with international politics that didn't exist before, especially as it becomes more and more capitalized.
So I follow your argument on why all of this would be good for Bitcoin. Basically, supply and demand, you have more demand coming for a limited supply of Bitcoin, but you also have the call for ETH to end the year at $4,000, and obviously a strategic Bitcoin reserve wouldn't necessarily benefit ETH. Why do you think that ETH is set for a rally here as well?
Yeah, so I think ETH is acting on an entirely different mechanism. The first thing to consider is that right now, Ethereum is near its all-time high in ETH in circulation at about 120 million point 37, I think, or 27. So just a touch on 120.3 million ETH in circulation. That's just about the most that have ever been out there. So it's a signal that there's probably not a lot more ETH being minted into the system. And the prices have stabilized. And just yesterday, the grayscale Ethereum ETF outflows reached zero. So you're going to have buying pressure in the market. You're going to have a sort of a near all-time high in the supply, so it's not going to get much higher. And then the other thing is with the SEC regulations, Ethereum ETFs can't participate in staking. So for the system to work, you need to have stakers expand the capacity of the network to validate transactions. That's going to drive block space upwards. More block space means more people are going to want to hold Ethereum. More buyers are going to want to buy on the ETF. So you have this flywheel effect, and you're capped at the supply almost right now. So you can have more ETH in the network, but it's not going to be a surprise. And it's basically right now the price can only run one direction for Ethereum.
And I do want to talk a little bit about your company and the time that we have left with you. Of course, the CEO of Medify, described as one of the blockchain ratings companies out there. Could you just walk us through a little bit what that means, what you do over at Medify?
Sure. So we have a product that does ratings, which we give away to the community. But our primary business is allowing people to use our FIDE AI token to participate in real-time predictions with AI. So people can actually include human input to predictive AI systems in financial markets. And that's the core business of Medify right now.
Frank, how well is it working? I assume you've done some significant back testing. Give us some metrics on how well it's worked.
We're running a test with Mantle right now, and we just completed their chain reaction AI competition as one of the leaders there, and it's working very well. Some humans are very good at combining intuition with near-term price movements. We have some folks in there that have won at an 80% rate, which is great because it allows us to include that in our predictions for our institutional clients. And in some cases, we've outperformed the market by 30% over a given 24-hour period when we're looking. So we feel really bullish on it, and I think it's going to be one of those things we're going to be able to take from the crypto markets to the equity markets in the near term.
Okay, from crypto to equity to talking about the election in November, less than 3 months to go until the presidential election. Frank, who is better for crypto? Who's better for Metafi, Donald Trump or Kamala Harris?
I'm not going to try to duck this question like I probably should, and like I'm sure my press team would advise me. I think generally former President Trump has been openly more hospitable to crypto. But I think the real question is who comes in to regulate it? Will the Democrats allow for the continuation of the easing that we saw at the end of the Biden run here? It looks like things are starting to turn, and in which case it could be that it doesn't necessarily matter which candidate wins, but which regulatory framework is put in place. Obviously President Trump has voiced his support for Bitcoin, the U.S. holding Bitcoin. That's great for all of us in the industry, but really it matters like how do we approach the regulation of it responsibly and allow for the growth and innovation to occur and people start making long-term decisions for investment and things like that. So I'm bullish on either way right now, but I think it would be great to get some more direction out of the Harris camp before forming an opinion on that.
Let's talk about that a little bit more. Like you said, bullish either way. We haven't really heard specifics from Kamala Harris's camp, though, as to what their views, what their positions on crypto would be. What are you hoping to hear?
I'd like to hear them just say, look, we're going to allow humans to innovate, Americans to do what they do best, which is, come up with new and novel approaches to solve things. We're living in a pretty complex world that needs people to innovate. And I think supporting that is the most important thing any administration can do right now.
Hey, Frank, always love it when you join us. Thanks so much for taking the time. That's Metafied CEO Frank Spicer joining us from Myrtle Beach. Hey, coming up, crypto miner Marathon Digital takes a page from MicroStrategy, selling notes to buy more Bitcoin. And take a listen to what Circle CEO Jeremy Allaire had to say last week about activity on his platform.
If you look at the trailing 180 days, the average monthly transactions with USDC that are happening on-chain, on blockchain transactions, is about $1.5 trillion. That's growth of over 220% year over year.
The more that you learn about this case, the more it reads like a Hollywood script. The nature of the killings, the execution, the just brutality of it.
It wasn't in the psyche of people that they could be looted because they are considered so sacred.
And we did it the way you do every single investigation. How do you eat an elephant? One bite at a time.
It jumped off the page at me that you could see that there was a Ponzi scheme taking place.
I started hearing mafia, mafia, mafia.
Il sistema è perfetto. Sono gli uomini che spesso non lo sono.
These are the holders of truth and justice. They cannot be possibly be doing this, but then they are. They are. And the evidence is there. It's overwhelming.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
most important point for people to understand is that Bitcoin volatility is a feature. It's not a bug. The volatility creates tens of billions of dollars of credit and liquidity at all times, everywhere, to everyone in the world in the short term. But over the long term, that volatility is driving superior asset performance and durability. So it's volatile because it's functional. The other markets are all closed and they're crippled by the physics and the politics of the asset.
And that, of course, was MicroStrategy's Michael Saylor on Bloomberg Television last week. And Bitcoin miner Marathon Digital making a move similar to Saylor, selling $250 million worth of convertible senior notes, using those proceeds to buy Bitcoin. Bloomberg's David Pan has the details. Walk us through this move. It's not too often that you see a Bitcoin miner going out, selling notes to buy Bitcoin.
Exactly. I think what makes it really interesting is that crypto mining companies, especially the public ones, they usually do not buy Bitcoin, let alone buying Bitcoin through debt financing. Rarely do they do that. So I think this is Marathon's latest effort to position itself to be like a leveraged proxy on Bitcoin prices in the stock market to keep the company's value and the investors from walking away as the competition in the industry heats up and the profit margins getting thinner and thinner after the halving.
It's all fun and games while the price of an asset that you buy on leverage goes up. But what happens when it goes down? As we just heard from Michael Saylor, volatility, it's a feature, not a bug when it comes to Bitcoin.
Right, but like we have to remember that, like a lot of these mining companies, they're very bullish on Bitcoin. They have a very optimistic outlook for Bitcoin prices. By holding Bitcoin, by loading Bitcoin on their balance sheet, they're hoping that they can just, ride a wave, and they're hoping that there's going to be another rally to boost the value. Yeah.
All right, David, we're going to have to leave it there. Thanks so much for joining us. That's Bloomberg's David Pan. He covers everything related to crypto miners. Check out his work, not just at Bloomberg.com, but of course also at the Bloomberg Terminal. That is going to do it for Bloomberg Crypto. Katie Greifeld, thanks for joining us.
This was a delight. I got the call and I said, yes, absolutely.
Hey, you're welcome anytime. Join us again in 2 weeks. We're going to be off next week due to our coverage of the DNC in Chicago. This is Bloomberg.
First of all, global trade, which had adverse consequences that we're learning about to this day, still unleashed an enormous amount of gain for humanity. And with the rise of global trade became the rise of information sharing around the world, which rapidly accelerated the trajectory of mankind. Of note, the Chinese, for example, are leaders in solar. They're leaders in EVs. They're leaders in a number of emerging technologies. In a world which is more splintered, we'll see the gains that the Chinese have achieved in these important areas not shared by the Western countries. And conversely, the United States is a clear leader in AI, along with a number of the European countries. And those gains will not be shared with China and the countries in its sphere of influence. So it's a very clear-cut loss for all of humanity when we have the severing of ties between our countries.
On a practical level, is it getting harder to manage the risks you face?
I think that one has to be aware that there are more tail risks that are harder to ultimately manage.
The top names in global leadership are on Bloomberg.
We are 40 million. We're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood We want to be prepared for this. We want to understand whether in November we will have the powerful support in the US or we'll be all alone. Only our lives are at stake here, and nobody can just trade our lives.
Nobody covers the top global leaders like Bloomberg Television and Radio. The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere, somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that we'll be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg. Context changes everything.
Welcome to Bloomberg Markets. I'm Scarlett Fu. True to our show's name, let's get straight to the market action. We have a relief rally on our hands with the S&P, NASDAQ at session highs. 10 of the 11 groups in the benchmark index are in the green, with big tech leading the gains. So you see the NASDAQ 100 up by 2%, leading once again, in fact. Treasuries are also gaining ground, led by shorter maturities, thanks to more evidence that inflation is cooling, which of course reinforces expectations the Federal Reserve can move forward with a rate cut in September. You can see the two-year yield coming down 6 basis points to 3.95%. U.S. dollar also resuming its decline, off by 0.25%, now down for a third day in 4. Let's look at midday movers, because usually the Mag 7 top the leaderboard of the most actively traded stocks by value. But today, you have 2 restaurant companies in the top 10. Starbucks up more than 20%, the most ever, by the way, after ousting its CEO and announcing Chipotle's chief executive Brian Niccol as the coffee chain's new leader. Chipotle shares falling as much as 14%, paring its decline right now to just under 9%, so recovering a little bit here. Also, we're following Hawaiian Holdings as the deadline approaches for the DOJ to challenge its merger with Alaska Air. Hawaiian shares were down as much as 16% today, but again, trimming those losses a bit here. But it was really this morning's inflation report that set the tone for markets. Here's the interpretation from Matt Luzetti of Deutsche Bank.
You still do have inflation that's above target, but I think inflation risks have really dissipated. And so I think the Fed should be very comfortable cutting rates. Should they go by 50 basis points? The market has been priced kind of 50-50 for that at this point in time. I think the data will determine it. So if we get confirmation in the next jobs report that the latest weakness was real, then I think it could be quite likely that the Fed cuts by 50 basis points. If you see a reversal of some of that weakness, which is my baseline expectation, if you have the consumer continue to come in resilient, then I think that the Fed can have a path here of going by 25 basis points at each meeting.
Joining us with more now is Bloomberg chief U.S. economist Anna Wong. Anna, I was looking at the numbers here on EcoGo, and headline PPI did come in cooler, but when you strip out food, energy, and trade, so I guess that's an expanded version of core, that rose more than expected, up 0.3%. So on the whole, reinforcing that cooling inflation narrative, but I wonder if you're concerned about this ex-food, energy, and trade number.
Yeah, I think, in fact, the relevant items to look at in PPI is even narrower than that. It's really airfares, hospitals, and healthcare, and also financial. And I think all 3 of those came in line with our expectations, which means that the core PCE deflator, which is the Fed's preferred measure, likely would come in around 0.2% in the month, which means the year-over-year inflation from the Fed's perspective, the measure they care about, would be ticking up from 2.6 to 2.7% in the month. So the news is not as bright as the PPI, in other words.
Okay, got it. One thing that the PPI report did feature was the first decline in services costs this year. That sounds kind of significant. Is it actually meaningful, Anna, or are there one-offs in there that we should be mindful of?
Yeah, so, PPI is a measure that mostly covered goods sector. So I would not be looking to PPI to give me a signal on services inflation. On the other hand, tomorrow's CPI would be the key. What happens to services categories such as lodging, vehicle insurance, vehicle repairs, we'll be looking at that, because that would have huge implications on core PCE deflator, which has a substantially higher weight in services services inflation than the CPI or PPI.
Yeah, and that vehicle repair price increases has certainly fed into auto insurance as well, which you mentioned earlier. So I guess put this all together, Anna, how does this set us up for tomorrow's CPI release, which tends to get a lot more scrutiny from not just investors, but also the Federal Reserve?
Yeah, we are also expecting a very soft core CPI reading. The market consensus right now is for a 0.2% monthly increase. We actually expect 0.14, which rounds to 0.1 on the Bloomberg terminal. I think the markets will like it because I think, as Matt Lucetti says, it creates a path for the Fed to lower rates in September, if not 25 basis point, if not 50 basis point, maybe a 25 basis point cut. Of course, all that matters, as Scarlett, as you mentioned, is services inflation, because that has a lot more weight in core PCE, and we are on the lookout for what those services category will show in the CPI.
So big picture, Anna, is inflation moderating because demand is softening, or because supply chain disruptions are no longer a factor?
So, I think it's the former reasons. The supply chain effect has largely dissipated over the past year. So really what changed this year is core services excluding housing, as well as housing. So I think tomorrow one of the big story coming out is that discretionary consumption categories such as hotels, airfares are driving the disinflation. And that reflects the fact that many people are pulling back on travel this summer, maybe due to excessive heat in July, but also to a large part because people are increasingly feeling stretched in their finances.
Okay, so we're expecting inflation, not just from today, but from tomorrow, to really reinforce the idea the Fed will move ahead. And of course, that next Fed decision won't come until September. There is the Jackson Hole speech before then. Do you think Jay Powell has already written his comments?
I think that he would have written his comments, or his advisors and his staffs would have written the speech for him after the CPI. I think he's really looking to see whether he can pencil in that sentence in his speech that says, we have gained more confidence over the past couple of months. In fact, sufficient confidence enough to begin the dialing back monetary tightening. I think he's thinking to himself, can I write that phrase here? Is there enough evidence to have sufficient confidence?
And that CPI report should give him that confidence to be able to say more or sufficient confidence?
Depending on how good it is. So if in fact it is true that tomorrow we're going to see a 0.1 core CPI reading, which is lower than the consensus, I think that definitely does boost their confidence.
All right, good stuff. It's either going to be more confidence or sufficient confidence. And I really appreciate it. Bloomberg's economics chief U.S. economist Anna Wong there on the CPI report due out tomorrow. Coming up, Home Depot renovating its annual sales outlook to plaster the holes left by waning consumer demand. That is our stock of the hour next. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The top names in tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything.
This is Bloomberg Markets. I'm Scarlett Fu. It's time now for the stock of the hour, and we're watching shares of Home Depot, which reported same-store sales that lagged behind street estimates. And Home Depot is cutting its full-year revenue outlook as a result. However you look at the stock, it is moving higher in the session. Here in studio now to offer her perspective on what's going on is Laura Champagne from Loop Capital Markets. Laura has a hold rating on the stock. And Laura, you had said in your report that this earnings report really requires some interpretation. What do you think the headline numbers failed to illustrate on their own?
So the headline numbers, they beat in revenues and earnings. They did guide down on same-store sales, that's true, but their results will be somewhat obscured by this SRS acquisition they made. One really interesting point from their call today is that they will start to include that in their same-store sales back half of next year, which is pretty unconventional and should prop them up pretty nicely back half of 25.
Okay, so something to look ahead to, and certainly something for you and other analysts to start penciling in. One thing that was notable is the key quote from the CFO on the results. He said, consumers who have the means to spend have a deferral mindset. Clearly, lower interest rates is kind of the thing that would shape people's willingness to spend money. But that is out of Home Depot's control, right?
Right.
Are you hearing anything from the management about strategies that they're employing to get consumers to spend, whether it's promotions or anything else?
They made clear on the call today they don't want to be promotional. They want to focus more on everyday value pricing, which for them will mean more private label, more owned label product, and they'll always have a good opening price point. They're almost always very competitive with their competition, but because of their size, they want to be really careful about not dragging the market down to lower prices. They also called out inflation and labor costs, and they're still absorbing some inflation in transportation costs, which have been slow to adjust. So they need to be careful on pricing.
It goes back to that idea that a weak consumer, though, is something bigger than Home Depot or the industry. It speaks to this cyclical downturn. So what does management really need to do until things turn around? Is it a matter of coming up with a better strategy or just executing on the existing strategy they have in place?
So they've given us kind of a shiny object to focus on with the SRS acquisition, which is in Complex Pro. Not much they can really do to move remodeling. They finally are talking about some of the real issues, which is that if homeowners have a 3% mortgage, even if rates go down to 6%, that's not attractive money when you're rolling on your 3% mortgage.
Yeah.
So it's going to be tough to see turnover spike without a dramatic retrenchment of interest rates.
So then let's talk about the pro market for a moment here, because what is the total addressable market for professional customers versus the DIY consumers, a homeowner who wants to, just spruce up the home a little bit?
This pro market, especially the SRS one, is much smaller than the DIY market. It's about a third as large, but still, Home Depot considers itself as having only 17% market share today in its addressable market. So they think there's plenty of room to grow. And the SRS deal does give them capabilities they didn't have and sort of a set of muscles they haven't known how to flex. So one of the things they commented on is they'll use SRS as trade credit. For a company as big and complex as Home Depot to need to acquire a much smaller company to get that functionality just shows you how tough it is to be a non-specialist going after the pro.
Yeah, absolutely. So where do the pros go to right now? I get that they go to SRS, but is it a fragmented market, or does SRS own a big chunk of that professional market?
It's extremely fragmented. They have a good chunk, but part of their strategy has been to grow through acquisition. It's usually these contractors, whether they're landscapers, pool guys, roofing guys, they sort of have a guy. So they'll call him, and it's kind of an entrenched business, which is why you have to buy it. It's much easier to buy it than to build it.
Okay. Does this put pressure on Lowe's to do something similar, given that Lowe's would face similar headwinds that Home Depot is currently facing?
You know, we suspect that perhaps Lowe's bid against Home Depot and Home Depot had deeper pockets, but that is our suspicion. They certainly haven't said that. Their party line is that they're going for the small and mid-sized pro, and that makes some sense given where they are. They're just many years behind where Home Depot is on this market. They still have lots of room to grow, though.
Is there anything on the technology side that Home Depot can leverage to at least buy some time until it gets to a point where interest rates are lower and home buyers and homeowners come back in force?
Given their size, there's very little they can do to drive their comp higher, especially with that DIY customer. They have the share they're going to have. The only way to really grow would be to move locations, and they own those locations. As you know, those are huge boxes. That is a mountain too big to move.
Got it. So what are the implications for Lowe's from this earnings report for Home Depot? What will you be looking for when Lowe's reports in exactly 1 week?
Yeah, I gotta say, Scarlett, it's not great. So it's the DIY numbers do have to come down, their comps do have to move lower, and we all have to focus for Home Depot and Lowe's on when does this turn. So is the turn back half of next year? Because many of us were expecting back half of this year. I think the bearish question that some investors are asking is next year even a growth year? And I think the jury's still out on that.
How long does it take for the Fed to cut rates and for Home Depot to start seeing the benefits of that?
Normally it's 6 months. So the question, but normally we don't see interest rates having moved as high as they have from such a low base. So it's unclear to me whether it will be that quick of a bounce back this time.
Given the higher for longer environment we're currently in. All right, Laura, great to speak with you. Lauren Champagne over at Loop Capital Markets with a hold rating on Home Depot. The other companies that we're looking at today, of course, is Starbucks and Chipotle. Starbucks today naming a new chairman and CEO. He is Chipotle executive Brian Niccol. The move has boosted the coffee chain's shares today in a big way. Elliott Investment Management, which is one of the largest investors in Starbucks, is an activist investor and released their reaction, saying, quote, "We view today's announcement as a transformational step forward for the company. We welcome the appointment of Brian Niccol, and we look forward to continuing our engagement with the board as it works toward the realization of Starbucks' full potential." With more on this, we're joined now by Bloomberg Opinion's Andrea Felstead. Andrea, really good to speak with you. What do you make of that reaction from Elliott on Starbucks? Because you could argue that Starbucks really pushed the final ouster of the CEO from Starbucks.
Elliott hadn't come out publicly and called for the exit of Lakshman Narasimhan, but they do seem to have welcomed it, and the share price reaction just shows you that other investors feel the same, and there's a lot of hope riding that he can do for Starbucks what he did for Chipotle.
In terms of strategy, what will you be looking for from Brian Niccol when he takes the reins at Starbucks at the start of next month?
This isn't a sort of, classic kind of activist playbook. There's no sort of breakups, spinning something off and it lifts the share price. This is about doing sort of lots of little things better. So things like, dealing with the queues, making stores, more pleasant, safer places to spend time, engaging staff, giving better value for money, reconnecting with customers. It's all these things that are not rocket science, but Starbucks, really needs to do them.
Right. It's executing on the existing strategy better and really paying attention to the details. So what does Nicole's departure mean for Chipotle from where you sit? I mean, they have an interim CEO in the meantime, and it is someone from within the ranks. And I know Brian Niccol deserves a lot of credit for keeping things buoyant over at Chipotle. Is the current management team able to build on that?
Well, hopefully they'll just be able to keep things going. They have really, they've really outperformed. And they've had customers trading down, and we've been hearing over the last few weeks, and you were just talking about that the consumer environment does seem to be weakening, particularly for the lower to middle customers, but also some worries about the top end. So Chipotle should still be able to capitalize on the platform he built and the consumer sentiment from here.
You write so eloquently on the industry overall. I'm curious to get your take on what you think Chipotle's rivals are probably thinking and considering right now, given there's a change not of their own choosing. They want to take advantage of this unexpected news.
They're probably rubbing their hands together. It's been an amazing performer. The share price has been on a tear. They're probably looking at ways to attack that customer base.
Yeah, no doubt. Thank you so much. Bloomberg opinion columnist Andrea Felstead joining us from London. Really appreciate your staying late to give us some more context on this ongoing story. It's, one big move flipped the fortunes of two of America's biggest food companies, consumer companies, restaurants, and these are all, of course, household names that we're all familiar with. Speaking of household names, coming up, Alphabet is set to unveil new hardware today. Will the new tech change investor sentiment? Google hardware is to come in the next hour. We're going to break it all down next with Ed Ludlow of Bloomberg Technology.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money. If I had invested with you, which I wish I had, what kind of rate of return would I have had over that 10-year period of time?
Over 100% a year on average. On average.
100% a year, that's pretty unusual.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg Markets. I'm Scarlett Fu. In just a few moments, Alphabet is expected to begin a highly anticipated hardware event. The new product unveil is likely to focus on AI, and investors are hoping this might slow down a sell-off that's erased more than $360 billion in market value from the company over the past month. Here with more on what to expect from the event today is Bloomberg's Ed Ludlow. And Ed, we're talking about the Google Pixel phones that some people have, but most people don't necessarily have. These are not big revenue drivers for Google and parent company Alphabet. They feel more like a rounding error in terms of contribution to revenue and the bottom line.
Absolutely. If you look back at the last 4 quarters, say, it doesn't really even register in the sort of roadmap of revenues. But the AI story is very simple, that as consumers around the world, we're still trying to work out how our own use of AI manifests itself in the real world. What we're expecting is yes, new generations for hardware with Pixel, but Google to tell us how Gemini, its large language model, which focuses on text, image, and voice, is actually going to be used, like basic stuff, on the handset, and has been well told by many chip companies and academics, a human's interaction with a chatbot or generative AI tool is very likely to take place on our smartphone because it's what's in our hand most of the time during the day.
So does this mean that this new Pixel phone will be available to consumers before Apple's iPhone 16, which is supposed to also be AI capable and AI enabled?
It's a great question because the fate of the stock, which is off like, 15 or 13% since its July peak, is so closely tied to demonstrative examples of AI working. BI is focused on this idea that Apple and iOS, its competing OS, is going to have a staggered rollout of Apple Intelligence, the AI features. But what we're talking about is Google shipping maybe 10 million units a year of its Android-based smartphone or Google-based smartphone. How many factors greater than that iPhones exist and ship around the world? So many. So it's a competitive element to pit them to market, but it really will focus on what can you actually do with a Google AI tool or large language model on a Google-made device? And that simple question is definitely TBC.
Yeah, there's a lot that's TBC. I think about how there's so many ads for Gemini during the Olympics, and people didn't necessarily walk away having a very clear idea that they needed this product or what this product could do for them. When we talk about the AI capabilities that Google is trying to offer, are they tied to the Pixel hardware, the Pixel phones themselves, or is that software available on Android OS and therefore available on LG phones, Samsung phones, and any China-made handset maker?
It's a really good point. It's like I'm a Google household. We use Google Calendar, Sheets, Gmail, etc. But I use it through the applications on my iOS phone, my iPhone. And I think that it's the functionality of the Apple software itself. If you go back some of the risk events that the stock has seen for Alphabet, I'm talking about in the last couple of years, it's places where Gemini has been shown to make mistakes. But they've also shown its integration with basic software offerings from Google, those platforms I listed, as working quite well. Right. Gmail predictive and analysis is a good thing.
Very quickly, Ed, is this something that analysts are talking about, that people in Silicon Valley are talking about? Does it have any buzz?
No, just infrastructure spend, CapEx, and then eventually top-line growth through software sales. That's the story here right now.
All right, good stuff. Ed Ludlow, thank you so much. Bloomberg Technology co-host Ed Ludlow with the latest Google hardware event that is coming up in just minutes. I'm Scarlett Fu, and that does it for Bloomberg Markets. Keep it here. We're going to have more coverage of balance of power, of the elections, of politics. But in the meantime, you have the S&P 500 at session highs, up 1.5%. This is Bloomberg.
covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. From the world of politics to the world of business, this is Balance of Power. Washington, D.C.
Is this the eve of a new war or a ceasefire? Welcome to the fastest show in politics as Israel awaits a retaliatory strike from Iran, even as the U.S. works for a ceasefire between Israel, I should say, and Hamas. I'm Joe Matthew alongside Kaylee Lyons in Washington. We're back in the Capitol today. Kaylee, it has been 2 weeks since the former leader of Hamas was killed in Tehran, and we still don't know what the next leg in this story is.
No, we do know that both Israel and the U.S. are braced for some kind of retaliation, but we've been braced since this happened, Joe, and nothing yet has come to fruition. And of course, it's Antony Blinken's heading to the Middle East. There are still efforts underway to reach a ceasefire deal, as you mentioned. And it's unclear how both of these things can happen at the same time. An Iranian proxy and Israel coming to an agreement at the same time that Iran itself and potentially other proxies could be ready to strike Israel directly.
All the while, we're seeing remarkable progress by Ukraine against Russia in this cross-border incursion. Kaylee, we're going to put this all together in an important conversation with Michael Allen from Beacon Global Strategies. He'll be with us coming up soon at the table.
Yeah, and we'll also be joined by Bloomberg's Stephanie Lai because we still got to do the debrief of that more than 2-hour-long conversation that happened on X Spaces last night between Donald Trump and Elon Musk. We fought our way into the space. We listened to it in its entirety so that not everyone had to, and we'll have more details on that coming up in just a few minutes. First, though, as always, we start with a check on the markets, and Amy Morris has that for us from here in Washington today. Hey, Amy.
Hi, Kaylee. Starbucks was struggling with weak demand and disgruntled investors and says now CEO Laxman Narasimhan is stepping down after a little more than a year in the job. The Seattle coffee giant says Brian Niccol, the chairman and CEO of Chipotle, will become Starbucks chairman and CEO September 9th. Starbucks shares jumped more than 13% before the market opened. Starbucks shares now up 21%. Narasimhan is a longtime PepsiCo executive, became Starbucks CEO in March of last year, and succeeded Howard Schultz, the longtime Starbucks leader and chairman emeritus who came out of retirement in 2022 to serve as the company's interim CEO. Niccol's been CEO of Chipotle since 2018. Home Depot lowered its forecast of a key sales metric for the year on expectations that consumers will continue to hold back spending in coming months. The retailer now says it sees comparable sales falling 3 to 4% for the year versus the previous expectation for a 1% decline across all 9 sales in stores open at least a year. That was below the average analyst estimate compiled by Bloomberg. Treasuries advanced after a weaker than expected U.S. producer prices report bolstered the case for the Fed to cut borrowing costs more aggressively. We checked markets for you all day long here at Bloomberg. The S&P is up 80 points, NASDAQ up 383 points, the Dow is up 332 points, the 10-year Treasury yield at 3.85% and the 2-year yield at 3.95%. And that's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lyons.
All right, Amy Morris, thank you so much. I'm Kaylee Lyons alongside Joe Matthew right here on Bloomberg TV and radio, where you can find us every day at this time without fail. We always will start at 1 p.m. Eastern time.
I know where you're going.
Wasn't necessarily the case with the promised 8 p.m. start last night of the X space between Elon Musk and Donald Trump. Started a little bit behind schedule, and we're blaming technical difficulties, or if Elon Musk is to be believed, a denial of service attack.
Yeah, right. That's correct. It was 40 minutes late. Just to bring everyone in for 1 second, because we're always honest, it's just us here. Kaylee and I were on the train back from New York, so we were the captive audience. We had nothing left. nothing else to do. And you got in pretty quick.
I made
took
it
me
into
about
the
a half an
spaces
hour.
where no one else could. I couldn't tell if I was honored or
Well, I don't know. I
scared.
felt like you had an invitation. But you got to listen to that great music for 40 minutes while I continued. Finally got in. And then we sat there for 2 hours listening to what sounded like a couple of guys talking on the phone.
Yeah. Oh, it was just and it was as promised, an unscripted conversation. Elon Musk said it would be, and that there were no limits to the subject matter. But frankly, the subject matter did stray often back to what we hear repeatedly from Donald Trump, who spoke a lot, and not all of it attacks aimed at his opponent, Kamala Harris.
You know, Stephanie Lai, it was her job to listen to it as well. She was listening, so you don't have to. Bloomberg White House and politics reporter with us now at the table. Stephanie, thank you for being here, as always. I'm sure you're still recovering from this whole episode as well. How do we refer to this? It was essentially a 2-hour live political advertisement. And the Trump campaign was actually running ads on it. It was sponsoring the space. So was this basically a Trump campaign ad buy?
I mean, we have to remember that this was a conversation. You know, I think at some points during the day before, some media outlets were naming it an interview with Elon Musk.
Yeah.
And that really wasn't the case. You know, it was very much Elon Musk giving his opinion on some topic and asking Trump, you know, how do you feel about this? Or, you know, is this what you think as well? And so, you know, this entire event felt like a rally, but just there was some, you know, some conversation between.
Yeah, a digital one, perhaps. I have to say, when I was taking part in the space, I was one of the, what I saw at maximum, a 1.3 million that were tuned in at that time. But I know Donald Trump on it last night said something closer to 60 million.
Yeah.
X itself said the engagement levels beyond that were
At
far higher.
1:15
So I guess
p.m.
the question,
Eastern Time,
Stephanie,
we
is that
expect
all they
comments
were
from
trying to
Fed's
achieve?
Bostic, who speaks
To
on the
point out is
economic
Donald
outlook
Trump
in a
is very
moderated
concerned with the
conversation
crowd
at the
size that Kamala
Conference
Harris
of
has been
African
drawing,
American
and that he has
Financial
the ability
Professionals.
to
No
get
text
that
is
many people
expected,
to
but there will
listen
be a
to him on
Q&A.
whatever Elon Musk and he decide to talk about.
Yeah, I mean, they were looking for some sort of splashy event to make headlines, to bring the attention back to the campaign, because the last 3 weeks, we've really seen the focus on Kamala Harris and Tim Walz. There's been so much momentum behind them, just given the fact that we're in this news cycle where we're figuring out what the Democratic ticket is going to look like, what the agenda is going to look like. And so this was really the moment for the Trump campaign to regain the narrative and to maybe make some news. But from what I was hearing...
Was news made?
There was no news made. It was very much just Trump rehashing what he said in the past, his past proposals. I think one thing that stuck out to me was that he mentioned that he was worried of nuclear warming, which was not a phrase that I'd heard before. But essentially the idea is, you know, we have to be worried about our national security. A lot of countries have access to nuclear weapons. But that wasn't anything that I'd quite heard of, or that term specifically.
Different version on a refrain from Donald Trump. By the way, you know, it was Elon Musk who I think first called it an interview. And then the Trump campaign called it, I think, the most important interview of all time as it was getting ready to get started. But so, you know, picture us there. We're clacking down the tracks on this 40 minutes into this, and we've got the earbuds in, and then the music stops, and we hear this.
We unfortunately had a massive distributed denial of service attack against our servers. As this massive attack illustrates, there's a lot of opposition to people just hearing what President Trump has to say.
There was a question about whether this invitation would be extended to Kamala Harris. Elon Musk has suggested as much. He referred to her as Kamala as opposed to President Trump in his tweet. Will the Harris campaign indulge such an invitation?
I've not seen any signals just yet, but, you know, even last week when Trump was interviewed by a video gamer, Aiden Ross, he also extended an invitation to the Vice President Harris. And so it's not entirely clear if that's really the audience that they're looking for.
Does she get a Cybertruck too if she does it?
Maybe. We'll see. Yeah.
That's the question. And a watch, right?
Yeah, there's a Rolex.
Yeah, fancy watch. At that, it is worth noting that you obviously are on the campaign trail a lot. Donald Trump is going to be in North Carolina this week outlining his economic policy. We expect now that Kamala Harris will also be in North Carolina on Friday to outline hers. This is after we heard her float the idea of no taxes on tips, which Donald Trump had floated. J.D. Vance is talking about an expanded child tax credit, something that Democrats like Harris have long been in favor of. So when we get these economic policies fully outlined, are we going to come to find that there's actually not that much difference between them?
I mean, I think that's the most interesting thing about this election cycle so far. There's been so many areas where it actually seems like Democrats and Republicans agree. You know, even just looking at the last year, Democrats in the House and Senate decided to take up an immigration bill, right? And obviously it didn't go through, but just the fact that these issues are things that everyone is talking about and everyone cares about shows a lot more agreement than disagreement among the two parties.
Yeah, absolutely. Stephanie Lai, thank you so much, as always, covering politics for us here at Bloomberg. We appreciate it. And as Stephanie brings up that border agreement that obviously did not make it through Congress, Donald Trump also pointed out on the call last night that she seems to be trying to be Trump when it comes to stricter border measures. At least that was his suggestion. She, too, has started singing a different tune than she was when she ran for president the first time around in 2019.
We talked a little bit yesterday about some of the overlap on other issues. Expanded child tax credit promoted by J.D. Vance. No taxes on tips promoted by Kamala Harris. Maybe things get a little mushy on some of these issues. Then there's the matter, of course, of geopolitics, knowing that we could have a significant number of protesters and even uncommitted delegates at the Chicago convention next week. Kaylee, we're still waiting to find out what Iran will do to retaliate against Israel.
And this is actually something that came up on this X space between Donald Trump and Elon Musk last night. Here's what the former president had to say on this matter.
They're all waiting for an attack from Iran. Iran would not be attacking, believe me. You know, when I was there, and I say it with respect, because I think we would have been good with Iran. I don't want to do anything bad to Iran, but they knew not to mess around.
So for more on what's happening in the Middle East, and I guess what would have happened if there were a different president in the office or not, Michael Allen is with us now. He is former special
So 1:15 p.m. Eastern Time, we expect comments from Fed's Bostic, who speaks on the economic outlook in a moderated conversation at the Conference of African American Financial Professionals. No text is expected, but there will be a Q&A.
Hot geopolitical conflicts in the world, that Russia never would have gone into Ukraine, that what's happening in the Middle East October 7th wouldn't have happened. Obviously, they both happen now. I don't know if you really believe that to be true, but his suggestion that Iran wouldn't be going after Israel, considering the contentious nature of Israel's role in the Middle East that has been there pretty much perpetually.
Right.
Is this being intellectually honest?
It's hard to just throw out a counterfactual and make an assertion. There's no way to test it, of course. I think what he's trying to do is premise everything on what most people agree was a bad call from President Biden, and that was the way that he got out of Afghanistan. And the narrative starts there, which is that because of the way you did it, you were weak and perceived as weak, and therefore everybody moved against you. I think that's a fair criticism that people can make, but I mean, can we discern either way? These counterfactuals, it's too hard to do, but it's politics. We're in a presidential election year, and I understand people are going to make those arguments.
It's been almost 2 weeks. Tomorrow is 2 weeks since the killing of the political leader of Hamas in Tehran. What is Iran waiting for, or is this part of the retaliation, as has been suggested, the wait?
Yeah, I've seen a little bit about that. Maybe they're trying to do psychological mind games on the Israelis, but I don't really think so. I think it's one, like we've talked about, they need to land a punch this time. So they need to figure out the combination of cruise missiles and or ballistic missiles and drones, some of which need to get through. But the hard part, the other thing they need to balance is that they don't want to be extraordinarily successful, and they don't want to kill too many civilians, because then that might risk a total war with the Israelis. And I don't think the Iranians really want to get into a complete and total war. They benefit by having their proxies operate, and that leads to the sort of the second thing that they're weighing, which is Hezbollah is going to take some shots, but are they going to go at them in a total war type fashion, or is it going to be just enough to make them look credible, to make them look strong, but not provoke a multi-week contest with the stronger Israelis?
Well, surely they're also weighing the fact that currently another proxy, Hamas, and Israel and other mediators are at least talking again when it comes to a ceasefire. I believe Hamas still hasn't firmly committed to joining those talks that have been suggested for Thursday. How did the ceasefire negotiations factor into this calculation? Can both of these things happen? Iran retaliates and a proxy finds some kind of deal with Israel?
I think you're onto something. I didn't think it made sense to put all these things and try and cram them together. I understand the Biden administration is trying to do all that they can to get a ceasefire, but more importantly, to get these hostages home, especially since at least 5 of them are Americans. But I didn't think it just sort of suited what was on the international agenda for the week, which is Hezbollah is trying to take a shot at Israel, Iran, the so-called head of the octopus, and I didn't think that Hamas was going to just step up and say, hey, you know what, it's time for us to make this deal now. I think it would look weak if Sinwar were to make it now, because it would have made them seem afraid of what the Israelis were about to do. So I know how badly everybody wants it, but it didn't seem like the week to advance the ball on it.
Yeah, well, in the meantime, the Pentagon's busy sending a guided missile submarine to the theater, the USS Georgia, 150 Tomahawks.
Shortly expecting comments from Fed's Bostic.
Aircraft carrier strike group is speeding its way there now. There's a question about whether this is deterrence or whether we're girding for something more substantive than what we saw in April.
So I totally agree it's deterrence, but there's another factor, and that is, what is the status of the Iranian nuclear program? I don't put this at a high probability, but a couple of things have happened lately, and that one, the U.S. intelligence community has backed away from its pronouncement that Iran is no longer working on the weaponization of a nuclear weapon. By that, they mean putting the fissile material together and putting it on a ballistic missile or something. So that's significant. People have noticed that. And at the same time, the Iranians are thinking to themselves, if we go into a total war situation, what's to stop the Israelis and maybe the United States? I wouldn't put it over 50%, but you've got to think about it. What if the United States says, you know what, I didn't really want Iran to go nuclear on my watch anyway, says President Biden, so maybe we'll go for it now. Don't think that's it, but you have to consider it when you think about how much progress Iran has made on fissile material and now perhaps have restarted the weaponization part of a bomb.
Well, you allude to this idea that Biden may be going for things he once was not. Can we also call that true now in the conflict in Ukraine, considering the U.S. policy for a very long time in this war was not to support offensive action against Russia. And now Ukraine has seized 1,000 kilometers of territory in the Kursk region in Russia. And you're seeing 100,000 more Russians flee there. What is your read on what's happening there? Is this something that the U.S. is really
62 counterparties take 324 spot $494 billion at the Fed Reverse Repo operation.
What the answer would be. I think the Ukrainians kept it a big secret. It sounded like many of the top figures in Ukraine didn't even know what they were doing, even those that were in the officer corps that got moved into the line of fire. I do, however, believe that this is great that the Biden administration is apparently not fighting it. I think that they are
allowing it to happen.
Allowing it to happen, not hectoring the Ukrainians about what they're up to. Because to me, and we'll have to see how it works out, it's an ingenious move. It's put Putin on the defensive. It's caused, apparently, we're starting to see news reports that the Russians are moving troops out of the south of Ukraine to reinforce where the Ukrainians are running and making incursions into Kursk. So that's good news. I'm not ready to declare this a victory or that the course of the war has changed, but I'm really glad to see that the Ukrainians are mixing it up.
Well, you're seeing tens of thousands of Russians, also civilians, be evacuated from that area. Could we be talking days from now about something awful that Vladimir Putin is going to do to the troops in that region? He's clearing out civilians to do something.
I think it's very, very possible. You almost can't put anything past what Putin might be up to. I think he is absolutely trying his best to think of something new to penalize the Ukrainians with, and they better look out. Something's coming at them, but I think they're largely fearless. I think they're glad that they're on the offensive for once, that their military has come up with something ingenious and new so that they're not always sitting in a trench having positional warfare with the Russian troops coming across.
It's good to have you back with us, Michael. Thank you. Michael
Thanks
Allen with insights from Beacon Global Strategies. His perch now, former special assistant to the president in the Bush administration. I'm Joe Matthew alongside Kaylee Lyons in Washington, where we have a lot more to cover. We start today with geopolitics. We turn back to the campaign trail ahead with our signature panel. Rick Davis and Jeannie Shanzano are on board. Tim Walz making his big solo debut on the campaign trail today. We'll have a lot more next. This is Bloomberg TV and Radio.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that we'll be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
It's 121 on Wall Street. I'm Amy Morris. Stocks are higher after the latest U.S. inflation data reinforced any speculation that the Fed may be able to cut rates as soon as September. And we check the markets for you all day long at Bloomberg. The S&P 500 up 1.5% or 78 points. NASDAQ up 2.25% or 382 points. And the Dow is up 0.8% or 320 points. The 10-year Treasury yield at 3.85% and the 2-year yield at 3.94%. NYMEX crude oil is down 2% or $1.66, now trading at $78.40 a barrel, and COMEX gold is up 0.1% or $3.90, now trading at $25.07 per ounce. The Consumer Price Index will be issued tomorrow. Starbucks has named a new CEO and chairman. The company has appointed Chipotle CEO Brian Niccol as its next leader effective September 9th. The leadership shakeup comes after activist investors in Elliott Investment Management and Starboard Value reportedly amassed stakes in the company. Elliott Investment Management released a statement saying that it views today's leadership announcement as a transformational step forward for Starbucks. Shares of Starbucks now 21% higher. Shares of Chipotle now down 8.3%. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much. I'm Kaylee Lines alongside Joe Matthew. This is Balance of Power on Bloomberg TV and radio, where, of course, we bring you all of the political coverage you need to know, and we do it as a team. And Tim Walz and Kamala Harris are a pretty new team. Now, we just learned officially that they have become a team on the Democratic ticket as of last week. And to this point, we've seen them on the campaign trail together. That changes today, though, for Tim Walz, who will be making his first solo campaign stop in Los Angeles. And of all things, Joe, this is happening with a union. He is speaking at the biennial convention of the American Federation of State, County, and Municipal Employees. And of course, we know that the selection of Walz was welcomed by many unions, considering he is seen to be a very pro-labor governor, especially.
Yeah, unions snapped to attention as soon as Kamala Harris got to the top of the ticket, and they loved the idea. I think we can argue had quite a bit to do with the selection of Tim Walz over Josh Shapiro, remembering the concern over school vouchers and so forth for the governor of Pennsylvania. So yeah, this is ASME, and he's going to be going to a fundraiser afterward in Newport Beach, California, which is where we start with our signature panel. Rick Davis and Jeannie Shanzano are with us, Bloomberg Politics contributors. Rick, of course, partner at Stone Court Capital, and Jeannie, political science professor at Iona University. It's great to see you both. Welcome aboard here. Jeannie, the battle for organized labor is pronounced, and I wonder how well Tim Walz has to perform on his first outing, his first solo outing on the campaign trail, or if that vote is already built in for this campaign.
No, he has to perform well. He also has the advantage of being a former union member himself, famously as a teacher. He also has a really strong union record as governor in Minnesota. When the Democrats took over the state legislature, he signed into law legislation that protected some of the most vulnerable workers there. So these would be like nursing home workers and others. They also get to earn paid sick leave, which is not something that is common across the country. And there will be a time in the future where they will get family and medical leave. So he's got a really solid record himself. And what he needs to do today, obviously, is he needs to get them riled up to support Kamala Harris by talking about what the Biden-Harris administration has done for workers and what she wants to do next when she is elected, hopefully from their perspective, president.
Well, as we consider the appeal to labor and unions, of course, we've seen a lot of this on the Republican side, too, as J.D. Vance especially has talked about the working man. Donald Trump, we know himself, has courted unions, too, maybe more so members than actual union leadership. But on the subject of unions, it is worth pointing out the United Auto Workers Union filed an unfair labor practice charge against former President Trump and Elon Musk after their X Spaces last night, Rick, accusing them of illegally intimidating workers after Trump was talking about how employers could fire workers for going on strike with Elon Musk. How does this play with the unions, the kind of conversation we saw between these two yesterday evening?
Yeah, I think it's mutually exclusive. I mean, the Musk interview was just a rally around the MAGA world. Musk is well known for his anti-union views. Didn't take a interview with Donald Trump to know that. And of course, Donald Trump never saw a union and he didn't want to break, even though he has some decent relationships with a few notable union executives. The bottom line is, the table is set on that as far as who's best for the unions. And this clash, I think, is just sort of electioneering, another way to sort of show the difference. But I think the mistake Democrats tend to make is that they basically try to lump every working class individual in the United States as a union worker. And sure, You can love unions as they do, but it leaves out the vast majority of working people in America if that's all you talk about. And so great that, the vice presidential nominee Walz is doing this in California. And, these are obviously unions that he worked with directly, as governor. But like, if they don't expand that class and that conversation to non-union working class voters, then they're not talking to the right people, especially in the Sun Belt.
I want to just listen to what Donald Trump and Elon Musk were saying in that moment where he talked about this idea, and we'll continue our conversation. This is from the X Spaces convo between Elon Musk, who you will hear, as well as Donald Trump.
I think it would be great to just have a government efficiency commission that takes a look at these things and just ensures that the taxpayer money, the taxpayers' hard-earned money, is spent in a good way. And I'd be happy to help out on such a commission.
I'd love
if it were formed.
Well, you're the greatest cutter.
Okay, so Elon Musk pitching himself for a possible role somehow there, it sounded like in a potential Trump administration, a 2.0. But Donald Trump went on. After "you're the greatest cutter," he said, "I won't mention the name of the company, but they go on strike. And you say, that's okay, you're all gone. You're all gone. So every one of you is gone. You want to quit? They go on strike, and he gets rid of them." Jeannie, we keep talking about the fact that UAW rank and file have been voting for Trump over the Democrats in the last two elections, depending on which state you're looking at. How could that be the case with a conversation like this?
Yeah, I mean, I think when people start to focus on these kinds of statements, and that's what the Democrats are trying to do, is to say, great, you have two, million billionaires talking to each other, and this is where they come down, fire workers. That's what Democrats are going to be saying. Another thing they're going to be saying is look at what Project 2025 says about firing civil servants, the very union that Tim Walz is going to be talking to, placing them, potentially replacing them with political appointees, maybe banning public employee unions altogether, which is in keeping with some kind of commission, I guess, that Elon Musk wants to join, but not just for public employee unions, I guess, but for unions, particularly in the automobile sector. This is a disaster for Republicans if this is the message. Donald Trump was much better off when he was appealing to white blue-collar workers, both union and, to Rick's point, non-union. Talking about firing people, and particularly billionaires firing people, is not a message you want to send out right now. And I think this works to the Democrats' advantage.
I want to go back to this whole notion that it kind of felt like Elon Musk was asking Donald Trump for a job last night, Rick. I'm not sure if that was kind of the point of this whole exercise for Elon, but I wonder what the point of the exercise really was for the Trump campaign. Was this just about getting attention, or was this about trying to reset the messaging? And if so, considering he didn't even really seem to be able to recall the name of the vice presidential nominee on the Democratic ticket, Tim Walz specifically, was this a success for Donald Trump last night?
Yeah, anything that's not been an abject failure would be considered a success for Donald Trump in this last month. Most of his outings have been an epic failure. Here, he could sit at his desk, he could read notes, he could, be organized around some of the themes. His campaign has been begging him to please return to some level of normalcy with his talking points. There is an argument for, what he did for, in his administration economically. And of course, that's the appeal. What the platform at X gives him is a whole lot more people than the sort of quiet little crowd that has been assembled around, his own social media outlet, Truth. I think last night was over 1 million people who tuned in. That is significantly more than he's ever going to get, on Truth Social. So that was a success, to be able to expand his group, find listeners who are interested in him. My guess is the people who made up that audience were the media and his own hardcore supporters. So reassuring them that he's on a track to win, reassuring them that he's got a plan, not going off the rails on a lot of conspiracy theories. And frankly, I think Musk kept him from doing that. He sort of kept it along a chatty way. So I'd have to say they're probably all thankful that it went as well as it did. But I don't think it moves the numbers at all. I think these are people who are already supporting Donald Trump. He's not communicating with swing voters on X.
Interesting response from the Harris campaign on this, referring to the fact that these two rich guys cannot actually serve a live stream in the year 2024. Jeannie, I don't know if Elon Musk actually wants a role in another Trump White House if Donald Trump wins this election. Does this have more to do with working with the government as the leader of SpaceX, dealing with regulations, maybe getting a foot in the door for EVs in a Trump administration?
Yeah, I think all of the above. I think he would also, as an aside, like to keep energizing the X platform. You know, advertisements are still way down. He has been able to play with some of the reporting on the election so far. I mean, Joe Biden announced he was leaving the race on X. So I think he would like to attract more people to X as well. But, you know, to the point about these two, you know, you're sitting there listening, and I did after the elevator music for 45 minutes. And when Donald Trump is talking about the biggest threat is not from global warming, and we don't really have to worry about that because we're going to have more oceanfront property. I mean, this is the kind of statement he's sending out to people. You've got to be an extremely wealthy person to be thinking that global warming is not a threat because we're going to have more oceanfront property. I mean, it was mind-numbing to listen to. It was not disciplined, and he was pretty much all over the map. So I don't think this was the win his team wanted. He needs to be disciplined on Kamala Harris and what she will do to the economy, immigration, and security. That did not happen. You know, to borrow a used phrase, it was a very weird conversation between these two for 2 hours.
All right, we'll leave it on that note. Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors, thank you both so much. As always, it was certainly a long conversation. I think we can call it that. And of course, the first portion of it, Joe, was really dominated by Trump's recounting of the assassination attempt in Pennsylvania last month, which he said in his RNC speech when he was accepting the nomination, he was only going to tell that story once.
Yeah.
But we heard it several times, it seemed, last night.
Said it wasn't very nice. And Elon Musk suggesting that he was inspired by what he saw that day.
Yeah, that's why he endorsed him, he
The
says.
statement from the Harris campaign that I referred to, Trump's entire campaign is in service of people like Elon Musk and himself, what they describe as self-obsessed rich guys who can't run a live stream in 2024.
This is Bloomberg.
The top names in business are on Bloomberg.
The challenge for us now is not very much on the product, it's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp-up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything.
We want to make
make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that you know most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
The top names in tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money. If I had invested with you, which I wish I had, what kind of rate of return would I have had over that 10-year period of time?
Over 100% a year on average. On average.
100% a year, that's pretty unusual.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
It's 1:40 on Wall Street. I'm Amy Morris. U.S. wholesale inflation cooled in July, another sign that price pressures are continuing to ease. The Labor Department reported its producer price index rose 0.1% from June to July and 2.2% from a year before. Now, that has traders watching for the Fed's response and whether a rate cut could come as soon as September. And as you know, we check the markets for you all day long here at Bloomberg. The S&P 500 is up 1.5% or 77 points. NASDAQ is up 2.25% or 375 points. And the Dow is up 0.8% or 324 points. The 10-year Treasury yield is at 3.85% and the 2-year yield at 3.95%. NYMEX crude oil is down 1.9% or $1.54, now trading at $78.52 a barrel. COMEX gold is up 0.1% or $2.90, now trading at $25.06. The yen is at 146.83 against the dollar, and the euro at 109.74 against the dollar. Financial markets flashing a higher probability of an oncoming recession in the wake of the market maelstrom that briefly sparked fear across Wall Street last week. It still remains an outside chance, but models from Goldman Sachs and JP Morgan Chase show that the market implied odds of an economic downturn has risen materially. And we're looking again at oil, which has slipped. It has broken now a 5-day streak of gains. Traders weighing concerns about an escalation in the Middle East conflict against the prospect of a potential crude surplus. Once again, NYMEX crude oil now at $78.48 per barrel. Starbucks has named a new CEO and chairman. The company has appointed Chipotle's CEO Brian Niccol as its next leader, effective September 9th. The leadership shakeup comes after activist investors Elliott Investment Management and Starboard Value reportedly amassed stakes in the company. Shares of Starbucks now 21% higher. Chipotle shares have fallen more than 8%, about 8.3% lower now. And that is a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much, keeping us honest on the markets with so much happening in the world of politics. This is Balance of Power live from Washington on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lines in Washington. An important day, an important week when it comes to the economy. Kaylee, PPI today. We're going to look ahead to CPI in a moment with breaking news now that has to do with the conversation we were having earlier this hour. The wait for a possible ceasefire deal in Israel or a possible retaliatory strike by Iran against Israel, both up in the air right now, Kaylee, and news from Axios that the Secretary of State is changing his travel plans.
Yeah, of course, Axios had reported that Blinken was going to be heading to the Middle East this week as we await both news on Iran retaliation and also news on a ceasefire agreement. Now, Axios is reporting that Blinken has postponed that trip, will not be traveling to the region tonight due to uncertainty around the situation. Axios here citing two sources. And it just speaks to the very uncertain nature of what's happening in the Middle East right now, which of course does factor into the markets. Amy was there talking about impact potentially on oil prices. And what we do know is that geopolitical conflict in the Middle East could actually have economic ramifications for that very reason if it did lead to the disruption of the way crude oil starts to move throughout the world.
Well, that's for sure. It's been pretty resilient so far, but of course, with so many questions about what would happen next. Imagine if, in fact, Iran does land a punch, were the words that Michael Allen used on Israel, we could be having a really different conversation.
Fed's Bostic says, I'm hopeful in the next several months for a normalized economy.
On the subject of inflation, ultimately, of course, there is no.
And Bostic says our rate posture is restrictive.
A war of that size and scale is going to erupt. Just that the risk is out there should Iran not calibrate this properly or Israel not calibrate its response accordingly. But the narrative right now is that inflation is on the way down, and that was borne out once again today in the PPI data we got, softer than expected. If you look at PPI ex food and energy month over month, flat. 0% is what we're talking about. And of course, this tees up the CPI report we're going to get tomorrow. So here to talk about all of this is Laura Rame, who is with us now. She's Chief U.S. Economist over at FS Investments. Welcome to Balance of Power, Laura, here on Bloomberg TV and radio. Great to have you. We obviously have been seeing now what, to me, feels like we could maybe call a trend in softer than expected inflation data. I'm not sure the Fed is going to feel quite ready to call it that yet, unless you think differently, or do we have to wait until CPI tomorrow to say that for sure?
We do need to wait for CPI tomorrow simply because
Fed's Bostic says recent inflation data gives me more confidence that we can get back to 2%. We want to see a little more data.
Sort of loop to wages and then again back to inflation. So when we look at the trend, it certainly has been really positive.
And Bostic notes it'd be really bad if we cut rates and then had to raise them again.
We saw after 4 really tough months where inflation spiked January to April, then 2 months where we really got a much more benign reading. And I think everyone's looking to tomorrow's data to reinforce that trend. And
Bostic says I am willing to wait for the first rate cut, but it is coming.
That everyone's expecting on September 18th.
Liga, how about reinforcing the idea that the Fed might have waited too long here, Laura? The personal consumption expenditures price
Bostic
index,
says if the economy evolves as I expect, there would be a rate cut by the end of the year.
Preferred inflation measure. All the components from PPI that feed the PCE were tame. Should the Fed have cut in July when it had the chance?
You know, I'm not terribly worried that the Fed is meaningfully behind the curve. The reality is that the economy remains healthy and on solid footing. My forecast is really for an incremental slowdown. The reality is the pace of growth has been so strong. One might argue it has been unsustainably strong. Moving from 2.5% growth to 2% is a slowdown, and I think markets were just really caught wrong-footed because expectations had been really, I would say, at volume 11 maximum optimism. So I think it's a mistake to read an incremental slowdown as weakness. And let me put it another way. if the Fed is behind the curve, they have room to cut rates more significantly. But I'm going to look beyond the ISM manufacturing data for that.
Well, just as we're having this conversation, Lara, Raphael Bostic of the Atlanta Fed is participating in a moderated Q&A. He says he's hopeful in the next several months of a normalized economy. He also says a rate cut is coming, but he wants to see a little more data. Obviously, we're going to get more of that data this week. And if a rate cut comes, the expectation is it won't be until September, when we're going to be just around the corner from a presidential election, Lara, which Joe and I spend the great chunk of our time, the biggest chunk of our time covering. And we're hearing more and more about the economic policies that each of these candidates, Donald Trump and Kamala Harris, may put forward. We'll hear even more from Harris later on this week. She's expected to outline it in North Carolina, but it does seem like we're getting similar things, be it related to the child tax credit or this notion of perhaps no taxes on tipped income. From your view as an economist, we've heard a lot about what that would do to the actual U.S. balance sheet, if you will, the kind of revenue lapse that may result from that. But what would that actually do to a labor market that is maybe just now starting to feel the effects of tighter policy? What would that do to wages and the way that things literally just work in the U.S. labor market?
I think that particular policy may be more popular because it's a way of helping that lower cohort of workers without putting the burden on the employer. Because, things like the minimum wage increases, I think, have been mixed in popularity because the employers feel that burden in a more pronounced way. And I think maybe underlying this, there is another issue, which is that we're starting to see delinquency rates from, creep up in credit card loans and auto loans. That is that sort of lower cohort of income that has obviously also felt inflation most acutely.
Fed's Bostic says housing inflation has come down in an important way the last couple of months.
That's what it always comes down to. And we'll see as these policies develop. Certainly, I think it's something that hopefully will be, I would expect to be popular across the board. And I think this is an area that we're watching closely because cracks are forming in the balance sheet of that cohort of employee.
Fed's Bostic says the unemployment rate in the grand scheme of things is still historically low.
Either campaign, detailed plans,
and we still have a strong, solid labor market.
Lower prices. Both are promising to do so. We just don't know how. In the case of Vice President Harris, we've been reporting that she's going to be fleshing out her whole economic plan in Raleigh on Friday.
Bostic says, but we need to make sure we don't go from a hot labor market to a freezing cold one.
Is there such a thing as Kamalanomics?
So we're going to find that out together. But I think when it comes to the Fed and the way that they think about their policy changes, they really wait until actual policy has been enacted or announced. They're definitely not making policy changes based on
Bostic says my contacts don't tell me there are many layoffs, and if that continues, we'll be in a good place. And a recession is not in my outlook.
Some policy proposals to lower costs and lower prices, and on the other hand, things like tariffs are inflationary. So
Bostic says the labor market can slow, but without considerable concern.
Impact both sides of the inflation equation. And when we look at, in particular, as the campaign rhetoric heats up, the Fed is really going to keep its eye on the ball of the data that's right in front of them and not think too far ahead about what inflation could do in coming quarters.
Well, yeah, we consistently hear the Fed is data dependent. It is not going to operate with political factors in mind, hence why we could see them cut in September, despite perhaps some Republicans suggesting that that would be perceived politically. We've also heard from both of these candidates about the independence of the Fed just within the last week. Donald Trump at a news conference in Mar-a-Lago last Thursday.
Bostic says, looking at the breadth of inflation, it has improved.
Input into monetary policy. Kamala Harris begs to differ on that. We heard her say so this past weekend. When we actually think about that notion of Fed independence, though, what mechanisms are realistically in place to prevent that kind of political interference? Is this literally entirely up to the given Fed chair and whether or not he or she is willing to consider what the president wants in policy decisions?
I think we have now, 4.5, 5 decades of evidence that it really does work well when the Fed is truly independent. And let's face it, higher interest rates, rate hikes have never been popular with the sitting administration. We saw that under Clinton. We just didn't have, Twitter at that time, and we let sort of a more back channel pressure get applied by maybe the Treasury Secretary, Robert Rubin at the time, sort of, saying some rhetoric to that effect. But at the end of the day, it's never popular when rate hikes happen. And the reality is we do often need them as a policy response. The Fed needs to have that latitude. I think there is another layer to this as well, where we may see, and the reality is it would probably take Congress to make some of these changes to the Federal Reserve Act. But there is another layer to this, which is in emergency situations, the Fed has come through in very heavy-handed terms with some of their, financial market provisions and facilities. That may be an area where also politicians over time try to claw back some Fed independence. But I think that is very low on the list of priorities. And certainly, when we look at the way the Fed's handled policy over 5 decades, it's hard to point to independence as being a problem.
Laura, in our last moment here, I asked you about Kamala Harris's plan to lower prices, or I guess plan to be unveiled. So I should ask you about Donald Trump's. He says, drill, baby, drill. If you increase production enough to unlock lower oil and gas prices, that filters through the system and does the job. Is that a plan?
Clearly, oil and gas is going to be central to both parties' economic plans in terms of, keeping prices lower. And I think, keeping gasoline prices lower, because this is a huge psychological pain point for households. When gas prices get above 5%, $5 a gallon, households really find that psychologically challenging. However, that has not been a key source of inflation. And really, I think we see spikes in gas, but they come back down again. The U.S. energy industry today is much more mature and I think much more rational about their ability and their productivity to create and supply gas. I don't think that necessarily more drilling is actually a magic bullet for other problems that may be more related to distribution, refinery, and other areas, which may at the end of the day impact inflation for households more specifically.
As we continue producing at record levels here in the U.S. Laura Rame, thanks for joining a great conversation with the chief U.S. economist, managing director on the investment research team at FS Investments. I'm Joe Matthew alongside Kaylee Lyons. We'll meet you back here 5 o'clock Eastern time. Kaylee, the late edition of Balance of Power.
Indeed. We'll be joined by Celinda Lake, a Democratic pollster. We'll also speak with Aaron David Miller as we continue to watch the situation in the Middle East. So we have much more conversation and coverage ahead for you on Balance of Power, but Bloomberg Business Week is just around the corner right here on Bloomberg TV and radio.
Bostic says we are at an inflection point where inflation is getting close to the target.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the
first woman, as I understand it, the first woman to own have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Of politics to the world of business. Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week. It is Tuesday, August 13th. Carol Masser along with Tim Stenivek. We've got stocks up, bonds up, yields backing off thanks to the latest inflation print, really supporting the expectations that, yep, the Fed's going to do something, cut rates come September. We'll get more on that in just a moment.
Yeah, Michael McKee is standing by. We're going to be speaking to him in just a minute. Also, huge news this morning in the world of fast casual, in the world of that morning coffee. Starbucks ousting its CEO, getting someone well-known in the fast casual space. The question is, can he do for the Frappuccino what he did for the burrito at Chipotle, or maybe the Doritos Locos Taco at Taco Bell?
I like what you did there. By the way, shares of Starbucks are up the most ever. So we're going to get into that in just a moment. Also, the conversation last night between Elon Musk and Donald Trump, what you need to know in case you missed it, or perhaps you just couldn't stick around before it started because it kind of started late.
Also, the island of, you stayed up for the whole thing, didn't you?
I actually listened to about an hour of it, and I unfortunately fell asleep in the chair. So about half of it.
Read into that
I took notes,
how you will. Also, on the island of Nantucket, it's a place to unwind. Is it a place to unwind? That's the question. We're going to explain a little later in the program.
That was my gift to you. I was hoping you would do that. All right, and then we're going to get into one more thing. What's going on with college graduates, the difference between men and women graduating. That's all to come. First up, though, let's get you an update on the trading day. Here is Charlie Pellet.
Well,
Amy Morris.
Carol.
Forgive me. Amy in for Charlie. Amy, take it away.
No, I'm just filling in for Charlie. It's big shoes to fill. Starbucks, as you mentioned, struggling with weak demand and disgruntled investors, says CEO Laxman Narasimhan is stepping down after a little more than a year in that job. The Seattle coffee giant says Brian Niccol, the chairman and CEO of Chipotle, will be Starbucks chairman and CEO as of September 9th. Starbucks shares jumped more than 13% before the market opened. It's now up 21%. Home Depot lowered its forecast of a key sales metric for the year on expectations that consumers will continue to hold back spending in coming months. Shares of Home Depot now up 1.2%. Financial markets flashing a higher probability of an oncoming recession. After last week's roller coaster on Wall Street, it's an outside chance, but models from Goldman Sachs and JP Morgan show the market implied odds of an economic downturn rose materially, judging by signals in the U.S. bond market and, to a lesser extent, the performance of some stocks that can be sensitive to changes in the business cycle. And Treasuries advanced after a weaker than expected U.S. producer prices report bolstered the case for the Federal Reserve to cut borrowing costs more aggressively this year. We check markets for you all day long here at Bloomberg. The S&P 500 up 1.4% or 76 points. NASDAQ up 2% or 355 points. And the Dow up 0.8% or 336 points. The 10-year Treasury yield at 3.86% now, and the 2-year yield at 3.95%. And that's a Bloomberg Business Flash.
All right. Thank you so much. Amy Morris, of course, in for Charlie Pellet on this Tuesday. All right. First of a handful of watched economic reports. We got that out this morning. U.S. producer prices in the month of July rose by less than forecast, reflecting the first decline in services costs this year amid an ongoing moderation in inflationary pressures. The wholesale inflation numbers precede, as we know, Tim, the more closely watched consumer price index, which is expected to show a modest increase in data. We get that tomorrow.
Okay, of course, against the backdrop of dissipating inflationary pressures, weak July jobs figures prompted economists to pencil in a series of Fed interest rate cuts beginning next month. With more on today's report and a look ahead to tomorrow's CPI print and retail sales and weekly jobless claims on Thursday. Back with us is Bloomberg News international economics and policy correspondent Michael McKee. He's here in our studio. Equity markets certainly liking what they saw when it came to economic data released this morning, Mike. Fed friendly? Does it support easing inflation?
Well, it does. It doesn't put a lot of weight on the Fed to cut rates, but it says they can go ahead with it. And the markets, I think, reacted because it wasn't bad news. It was, more of the same, and we're still on track. And they probably have a little bit of a coiled spring in the idea of something's going to happen and we're going to freak out again, which certainly could happen tomorrow. Although the thing about CPI is economists are pretty good at forecasting it. Now, we got a surprise last month. It was a surprise down, negative 0.1% for the headline. And if we got another one like that, then the markets will all be happy again, because then A, inflation's going away, and B, the Fed can cut interest rates. One of the questions that might come up if we got a little bit stronger CPI number is, and I'm kind of stunned that people are saying this already, is do we have stagflation? That comes up anytime.
Why does it stun you?
Because it would be 1 month, and we're not going to have a jump of 0.5%. If we go, we're forecast to see a 0.2 rise, or 0.2 rise. If we saw a 0.3 rise, does that mean stagflation?
Is there a rule book, an economist rule book, that 1 month's data point does not indicate something significant until we see a trend?
Right.
Okay.
I mean, it's one of the things they teach you, along with, don't shake hands with a left-handed gunfighter, in economics school.
CPI, though, more important tomorrow?
CPI is more important. PPI is useful primarily for inputs into PCE because it measures some things that the CPI does not.
Right.
And so what we saw today is a lot of the experts in this going through the PPI numbers and trying to figure out what it means for PCE. And in general, they were pretty happy. There are some who notice some problems in the PPI that could result in consumer price issues down the road, like higher prices for vegetables and fruits and things like that take a while to feed into the overall numbers. But in general, the number was pretty good, and the feeling is if we get a as forecast CPI, we'll probably have a as forecast low PCE, and that'll keep the Fed on track. And that's what it's about now. Keep the Fed on track.
Just crossing the Bloomberg terminal, Federal Reserve Bank of Atlanta President Raphael Bostic said he's looking for quote, a little more data before supporting a reduction in interest rates, emphasizing he wants to be sure that U.S. Central Bank will not have to change course once it begins cutting. I mean, is that even a possibility? Could we see a rate cut and then
Well, that's what they don't want to do.
A rate increase.
Yeah, that's what they're afraid of, because then it whipsaws the markets and it hurts Fed credibility. So it's one reason that those who are reluctant to cut rates, even if they think the economy is ready for it, they want to have enough data to be fairly sure it's not going to go the other way. I've seen Raphael's headlines here. He's doing a fireside chat, and he's really not saying anything he hasn't said before.
Right.
And that's one of the funny things about the last week, this week, next week is we don't have a whole lot of Fed speak. And the people that we're hearing from, we've heard from a couple
cowboy
times.
boots and cowboy hats.
Right, they
Go
are.
ahead.
They're busy. But the guy we need to hear from is going to be next week, and so it doesn't really matter what everybody else says until a week from Friday.
You said cowboy boots and cowboy hats.
Jackson Hole.
You have fly rod too that I know you take out there.
Yeah.
Some fly fishing as well in Jackson Hole. Are you all packed? Are you ready?
I have not packed yet. I haven't picked out the color of the cowboy hat that I'm not allowed to wear on TV. So
okay, but in all seriousness, it's not just the fun stuff. I saw you printing out some pretty thick economic policy papers yesterday.
That's the funny thing.
Some pre-reading.
Everybody is jealous that you get to go to Jackson Hole, and it's a beautiful place to be. Can't argue with that. And if I got 5 minutes, I might do a little fishing. But it's an academic conference with long 50 to 70 page academic papers that they get up and they present and discuss, and that's basically what it is. It isn't a bunch of central bankers sitting around going, what should we do next with the economy? It's theory.
Is there something, just one last question as we wrap up, something significant though about this Jackson Hole because of the timing and kind of where we are in terms of the narrative around what the Fed
It's funny
might
how
do?
that's worked out, because Fed chairmen have in the past used this meeting to send significant messages. Started with Ben Bernanke in 2010 when he was talking about quantitative easing for the first time. And then other years, they just talk about the sort of the overall subject. But because of the way the timing has worked out, with now pushed back to September, the possibility of a first rate move, then everybody's going to be focused on what Jay Powell has to say. Now, if he talks about the subject of the conference, that would really be funny. Well, no, nobody would laugh on Wall Street.
What is the subject of the conference?
Is that the transmission of monetary policy. Basically, it has the transmission mechanism changed since the pandemic.
All right, good stuff as always. Michael McKee, thank you so much. Bloomberg News International Economics and Policy Correspondent Michael McKee. All right, that's our Eco Watch on this Tuesday. Tim, let's get to one stock that is definitely on our radar big time.
Yeah, that's Starbucks. The stock's soaring the most ever on an intraday basis as the company's board orders up a half-calf latte with a new CEO. And that CEO is one well known to the fast casual space and with riding a ship that's got some pretty big issues.
It's an individual that's really well known to us. It's Chipotle CEO Brian Niccol. We've talked to him a lot. Named to the top job at Starbucks, will take over as CEO on September 9th, replacing the existing CEO who was ousted after less than a year and a half at the helm. Through Monday, shares in the coffee chain had plunged 20% this year, following 2 straight quarters of comp sales decline. Shares of Starbucks, though, right now are up 22% today. So let's get into it with Bloomberg News consumer reporter Dina Shanker here in studio, and also with us is Bloomberg Intelligence senior credit analyst Jody Laurie in Bloomberg Intelligence headquarters out in Princeton, New Jersey. Dina, I want to start with you. To the news. What do we know? What does this mean for Starbucks? And what the Chipotle CEO, who will soon be the Starbucks CEO, Brian Niccol, brings to the table?
Well, one analyst called him a dream hire for CEO, I believe was the quote.
Interesting.
He really turned things around for Chipotle, and Chipotle is just outperforming the rest of the restaurant industry. So if you're sitting in a boardroom of a restaurant company and things aren't looking so good, and you're like, who can save us? He would probably be at the very top of the list. So that was a great hire for them. And
he's someone who's also had to deal with a company that was under stress for many years, had to beef up their digital strategy, and came to the company, I'm thinking about Chipotle, just as the pandemic was hitting. And so he really had to learn how to kind of shift the ship, if you will, at Chipotle. And he's kind of got to do some of that here.
Yes, definitely. I mean, one thing that all of these restaurant companies deal with is productivity and how quickly can they turn an order into food and put that food into a customer's hands. And Chipotle has really improved on that. Starbucks really needs that kind of improvement. So I expect that that is going to be a big priority for him once he takes the job.
Hey, Jody, come on in here. And just because Brian Niccol was able to succeed so well at Taco Bell before going to Chipotle and then totally exceed expectations, I think, of a lot of investors of Chipotle as well, doesn't necessarily mean he can do the same thing at Starbucks. What are the challenges that he faces at Starbucks, given the environment over the last couple of years?
I think there's actually quite a few challenges that they're facing. I mean, first of all, they have a reputational risk, right? They've gotten hit by different headlines over and over. So first you had the union issues. Then you had the grassroots effort to sort of, rake Starbucks through the mud as it related to Middle Eastern conflict. And then you now have China, which was sort of their investment arm where they were kind of going to next. And so all these sort of components just ended up in not the best situation for them. So I think what they're really hoping is that he will provide that espresso shot that they're hoping for, that the prior CEO didn't quite get a chance to do over the past year and a half.
Jody, what does the Starbucks balance sheet look like?
Starbucks balance sheet, so taking a step back, the company, went through the pandemic, like all other companies, took on a bit of debt to have a little bit more cash going through the pandemic. And once the pandemic ended, they focused on deleveraging. They got leverage below 3 times, which was their target. But now the expectation, if you look at MODL on the terminal, the expectation is that it will hit to 3.4, 3.5 times by the end of the fiscal year, which is September. So definitely a reversion from where they were in terms of improving the balance sheet. That said, it's not a company that we're necessarily worried about at the moment being a triple B company, but it could be an issue as activists get involved and as management sort of gets creative in how they turn the company around.
Okay, so let's talk a little bit about how the company gets turned around, Dina, and think about this from the perspective of a company that I think for a lot of people over the last 30-ish years reinvented the way that coffee was consumed and delivered here in the U.S. At Taco Bell, Doritos Locos Taco. At Chipotle, did a lot, as Carol mentioned, with digital. Starbucks already has a robust digital platform, and it has for years. There's the China element, too, and the weakness that they've seen in China. What are the challenges that he has to overcome to turn Starbucks around?
So one thing that I think is particular to Starbucks that he has to think about is that one of the ways Starbucks really differentiated itself out of the gate was they were going to be committed to high quality coffee when they started to branch out into lots of other things like music and movies and teddy bears in the restaurants. Howard Schultz came back and said, we're a coffee company. We're going to focus on coffee. We've now seen them once again branching out into lots of other things. They have lemonade refreshers. They have energy drinks. But a lot of people like those. So I am really curious to see how new management what direction they want to go in. Do they want to go back to basics, what worked once, or do they want to see what's working now and then maybe cut the fat? I don't know. We'll just have to wait and see.
New management, but yet they've got someone who has been associated with the company for a long time, and I'm thinking about Howard Schultz. He's not on the board, doesn't have a board seat, doesn't have a formal role with the company, but he's Starbucks' 6th largest shareholder, and obviously, this is his company, and for better or for worse, perhaps. His involvement, I mean, is that a good thing for him to still, in terms of understanding this company, or is this a case where you have to have an outsider who understands, Dina, the fast casual space, kind of do his thing? Bring in some new blood.
I think the real question is whether a new CEO wants to stand up to Howard, because just as an outside observer, it seems like Howard really likes to share his opinions on the company.
And come back to the company.
And come back and return over and over again. And so, they hired someone really strong. So hopefully Howard will take a hint and keep some opinions to himself, or at least give them a chance to run with some things.
And apparently Howard Schultz had told Melody Hobson, who was on the Starbucks board, that I guess she had told him about a week ago about her decision for Brian Niccol, and that Schultz apparently said, Melody, that's a home run. So he seems to like it. Jody, how do you think about this company? Obviously you focus on the balance sheet, understanding the finances and kind of what needs to be done there, but it all goes back to management and how they manage, and that will ultimately play out in the balance balance sheet. How do you think about the leadership of Brian Niccol, maybe what he did at Chipotle and what he can maybe do here or has to do here?
So I think we have to take a step back and think about when he was actually at Yum, right? He was the Taco Bell CEO. So granted, he was not the Yum CEO. He was not at the helm. However, he did ride through the spin-off of Yum China. And I can't say that that's necessarily the direction that Starbucks is going. I mean, we didn't see that at Chipotle, but it is something that sort of lurks in the back of my mind of, okay, what's management going to do? And if you remember what happened with Yum, not only did they spin off Yum China, but they took that cash and gave it to shareholders. Now, Starbucks, before this, going into this, had a 3-year plan of giving back to shareholders $20 billion. And they had the cash flow for it to some extent, but you also thought, okay, some of it might be financed with debt. And so I think my question is do they pull back on that and go full-on CapEx? Do they get creative with how they sort of deal with licensed versus owned stores, you know, their international business versus their domestic? I mean, I think there's a lot of different avenues that he can look at. Never mind, of course, you know, the transition into things like Doritos Locos breakfast sandwiches. I don't know.
I was thinking the Doritos Locos latte. It doesn't really have the same ring
Doritos
to
Locos
it, right?
latte.
Yeah, I'll pass. I'll take the coffee upstairs. All right, guys, we got to run. Thank you so much. Bloomberg News consumer reporter Dina Shanker and Bloomberg Intelligence senior credit analyst Jody Laurie. Shares of Starbucks hovering near their best levels of the session, up almost 22%. On the flip side, you've got Chipotle, Mexican Grill, off its lows, but Tim still down about 7%.
Yeah, it was down as much as 14%. Scott Boatwright, the COO, was named Chipotle's interim CEO. So we'll follow that company and let you know any developments there when it comes to their executive suite.
On our radar, two of the world's most recognizable names, Elon and Donald, in conversation. That's next.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade, weekdays only on Bloomberg TV. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that we'll be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg. Context changes everything.
It's 2:21 on Wall Street. I'm Amy Morris. Federal Reserve Bank of Atlanta President Raphael Bostic says he is looking for a little more data before supporting a reduction in interest rates, emphasizing that he wants to be sure the U.S. Central Bank will not have to change course once it starts cutting. Bostic reiterated the stance that he's held since March, that he will likely be ready to cut by the end of the year. Stocks are higher after the latest U.S. inflation data reinforced speculation that the Fed may be able to cut rates as soon as September. And we check the markets for you all day long here at Bloomberg. The S&P 500 up 78 points, NASDAQ up 363, Dow up 339 points. The 10-year Treasury yield at 3.85%. The 2-year yield at 3.94%. We're watching NYMEX crude oil now down almost 2% or $1.58, trading at $78.48 a barrel. COMEX gold is up 0.1% or $3.40, now at $25.07 per ounce. Paramount Global began laying off staff this morning after the entertainment industry, or rather the company, said last week it planned to slash 15% of its U.S.-based workforce. That's about 2,000 positions. The iconic Paramount Television Studios is shutting down this week as part of the cost-cutting efforts. Shares of Paramount Global are little changed.
Fed's Bostic says the supply of workers in the economy is growing. It's a good problem to have.
Much appreciated. Amy Morris there in D.C. All right, well, the long and winding road, that was last night's conversation between two individuals who use social media like no other, you might say. And for one, Donald Trump, it was a return to the platform X for the first time in almost a year. For the other, well, it's his platform. Elon Musk, of course, owns it. And bottom line, the two together on X are very interesting bedfellows that made for an interesting conversation. How many times can we say interesting? And one that got off to a late start.
We unfortunately had a massive distributed denial of service attack against our servers. As this massive attack illustrates, there's a lot of opposition to people just hearing what President Trump has to say.
All right, that, of course, was Elon Musk last night as he began his conversation with former President Donald Trump last night. Tim O'Brien writes about it for Bloomberg Opinion in a column on the Bloomberg that you can find also at Bloomberg.com/opinion. Tim is a senior executive editor of Bloomberg Opinion. His books include Trump Nation, The Art of Being the Donald. He joins us in studio, and we are so grateful. Thank you, thank you. Like you, we all tuned in. I thought I missed it, but luckily it ran late. I mean, this was I keep saying an interesting conversation, but it really was. And it was a long and winding road.
And revealing. I sat there and was about to check out, and I just happened to have the spaces
Bostic
open.
says, I am concerned unemployment has gone up, but more supply is good.
My home office saying, here we go. 42 minutes after the hour. They were supposed to start at 8. It was 8:42. He has said, as you noted in that clip, that there was a denial of service attack that hasn't been substantiated. Others in the press that actually didn't happen. Be that as it may, it was sort of before they got into the serious meat of the evening. It was humorous to me that two of the can-do entrepreneurs of the planet couldn't get a digital meeting started on time. But we've got more important fish to fry than that moment, which is I think they launched into a very conspiratorial, fact-free discussion about how the world works across a variety of themes, whether it was immigration, foreign policy,
all important
climate change.
Yeah.
Very meaty things, but a lot of it not tethered to reality, particularly when they discussed, I think Elon Musk thought they were going to have a discussion about the virtues of nuclear energy, and Donald Trump made it into sort of a discussion of the virtues of nuclear weapons.
Right.
So it was all over the map.
Did you learn anything new about Donald Trump's platform or how he plans to run against Kamala Harris in that conversation last night?
Well, I think the thing that has come up is he came in, into the Republican National convention. I was there in Milwaukee with an enormous amount of momentum behind him. And there was this idea that he was going to depart from the Trump of yore, and he wasn't going to be divisive, and he was going to have a unity message. And by the time he took the stage in Milwaukee, he began with an account of the assassination attempt. He was hitting some of the right notes. That speech quickly devolved into American carnage, and which is themes he's been hitting his entire political career. And I think his supporters and strategists within the GOP have hoped since that event that he would find reset moments to sort of reestablish the public dialogue, to talk about policy, talk about cohesion rather than division, opportunity rather than carnage, et cetera. And it's just gotten worse and worse. And I would suggest there's probably a couple of reasons behind that. One is Donald Trump, when he gets cornered, tends to lash out. It's just his instinctive nature in his personal life, in his business life, politically. And I think the ascent of Kamala Harris has taken him and his campaign by surprise, and they haven't figured out how to respond to it. So there's sort of political desperation here. Secondly, I just don't think he has a lot of toolkits to reach into from a policy perspective or from a narrative perspective. He hits a certain number of notes and can't really move beyond them. And when he's set free by an interlocutor like Musk, who doesn't really want to stop him from rambling, and shares some of the kind of unhinged perspectives, you get what we had last night, which was a kind of frat boy meltdown.
Well, I kept thinking about it. I was listening because I thought Elon Musk was like, this was an opportunity to see maybe a different side of Donald Trump. And I thought, if it was really structured from all of us who are broadcasters or journalists, like we go into an interview, right? There's a plan, there's a strategy, you want to cover certain things. I thought, God, this would have been an ideal opportunity to actually go through in a logical way. And then it just came undone.
And he sort of said that at the top. We can, that this isn't a hostile environment.
Yeah.
I'm not a gotcha journalist.
Right.
But the really trick, I think, to think about great interviews is that you're not serving yourself as the interviewer. You're trying to be fair to the subject. You're also ultimately serving the audience and trying to be their tour guide through an educational moment. And this was really just almost like a couple of guys at a bar yucking it up and unconcerned with the audience. I mean, it went on for 2 hours.
Yeah.
It didn't have a linear progression. It was loaded with bonkers moments. And in truth, he actually did reveal the real Trump he said he wanted to, which is someone who's like Don from Queens, sitting at home, bleating angrily into the radio.
Can I ask you, why do you think, or what was the purpose of this as an exercise from the Trump campaign perspective?
Well, I think they're trying to reintroduce vibrancy, surprise, and cohesion to a campaign that's really back on its heels. And I think Trump's presser at Mar-a-Lago last week, which also went off the rails, was another effort to do this. He didn't reset then. He didn't reset last night. I imagine his handlers are pulling their hair out because Donald Trump is unmanageable and no one can really tell him how to campaign.
I do wonder about who they're reaching with these interviews that he's been doing outside of the quote-unquote mainstream media. Because if you think back to 2016 when he beat Hillary Clinton, surprised a lot of folks, it was essentially decided by fewer than 100,000 votes across 3 different swing states. He needs to reach just a few thousand people in a handful of swing states in order to win, at least according to polls right now. Is there any indication that those are the type of folks who are listening to a Twitter Spaces or listening to a gaming streamer interview?
No, I don't think so. And that's such a good question, Tim. And that's not just a challenge for Donald Trump. That's also a challenge for Kamala Harris, because it's 7 swing states that are going to decide this election, and it's, I think, sort of moderate to independent voters in those states. And Harris has a different set of challenges to reach them than Trump does. But I think both Biden and Trump had turned off those voters, and they weren't sure what they wanted to hear. I think Harris has gotten some traction around that. But, with her issue, she's really motivated her base, and so she's got a deeper level of support in already blue states. She hasn't broadened her support necessarily. We haven't seen that yet, though polling suggests she has, to the swing states. And Trump, in the same way, he's got this deep MAGA support, but he's never held much appeal to moderate Republicans or independent voters who want rational public policy and a constructive view view of the world.
You know, I know they're both supposed to debate each other, but I don't know that we're going to get a lot on policy potentially in a debate. Don't they both owe it to the
NYMEX
American
diesel
public to really
September
sit
futures
down
settle
and
at
do a clear
$2.38 a
interview
gallon.
that really
NYMEX
gets into
gasoline September
policies
futures
that
settle
we
at
can really understand what they both stand
$2.37 a
for?
gallon.
Of course they do, Carol, and I
NYMEX
want you
natural
to run
gas
for office
September
one day.
futures settle at
You know, I
$2.14.
think some of it is just what's been proven on the campaign trail is that the further you stay away from precise policy positions and pluck at
NYMEX
people's
WTI
emotional
crude September
heartstrings,
futures
you can have
settle
a
at
very effective candidacy that's
$78.35 a
emotionally
barrel.
driven
That's down
and not get pinned
$1.71
down
or
on the specifics of different policy points.
2.14%.
This also happens with court justices when they're trying out for the Supreme Court.
Yeah.
But I do think in an ideal world, every politician should be able to lay out a very clear roadmap for what they want to give to the American people. So yes, I think they should. In practice, I think we've learned in the media, the social media era we're in, that vibes sometimes can be more powerful than policy.
Okay, so that's a perfect segue to talk a little bit about the X platform and Trump's return to it. One of my decliners yesterday was Truth Social, DJT. Part of it was the reported numbers, but also part of it was that Trump had gone back to Twitter after he has a Twitter competitor that he still posts a lot too. As Carol and I were talking about earlier, President Biden announced that he was not running for re-election on the X platform via letter. Is this a moment for Elon Musk's platform?
It's a moment that may only last about 2 months or 2.5 months. It's undoubtedly, Threads hasn't taken off. Some of the alternative platforms that could have taken advantage from the mismanagement of Twitter and it's kind of unraveling to a certain extent didn't step up. Twitter's still a very vibrant space for non-normies, people like you and me, like journalists are on there, policy
Still
pros,
on there, right?
But average Americans aren't, on Twitter, 24/7 figuring out how to understand the world.
Yeah.
One thing I want to ask you, I don't know that we've got it up for the viewers, but back in July of 2022, Truth Social, a post by President Trump, when Elon Musk came to the White House asking me for help on all of his many subsidized projects, whether it's electric cars that don't drive long enough, driverless cars that crash, or rocket ships to nowhere without which subsidies he'd be worthless, and telling me how he was a big Trump fan and Republican, I could have said, drop to your knees and beg, and he would have done it. This is Donald Trump back in July of 2022. Tim, do they like each other? What is this relationship?
So the first things first, Donald Trump has said this about every major CEO in the country. He used to tell me these stories about Jack Welch. He would say one time Jack Welch called me and he was crying. I just doubt that ever happened. So you've always got to be skeptical of his accounts of meetings with anyone else, particularly if they're more talented or successful than he is. I think they both, to a certain extent, need each other.
Interesting.
They're Elon Musk occupies a portion of the business landscape that is very similar to the portion of the political landscape that Donald Trump occupies. Tesla was born out of government subsidies. SpaceX was born out of a relationship with NASA. Elon Musk also took a lot of daring risks to make those things happen. He brought a lot of managerial aptitude to it.
Yeah.
He's not a good media manager, and he is as politically, I think, unhinged and unaware as Donald Trump is when it comes to other subjects. So in that way, he's very different from Trump as a tactical business person, but very similar about someone who wants to surf on emotions.
10 seconds. Is it helpful for Trump to have Elon in his corner?
I don't know that it matters at this point, honestly.
Okay.
Elon's not going to get him to the voters he needs.
Great stuff. Thank you so much.
Thank you.
Always, always. Tim O'Brien, Senior Executive Editor of Bloomberg Opinion. You can read Tim's story and more from Bloomberg Opinion. It's on the Bloomberg terminal, also at Bloomberg.com/opinion.
And still to come, after a quick break, the Great Nantucket experiment gets an F-, so say some, in a new story out on Bloomberg. We're going to have that story and more when we return. Meantime, a check of the markets. We see green across the screen. The Dow up 0.9%, the S&P up 1.5%, the NASDAQ up 2.2%.
This is Bloomberg Business Week.
you learn about this case, the more it reads like a Hollywood script. The nature of the killings, the execution, the just brutality of it.
It wasn't in the psyche of people that they could be looted because they are considered so sacred.
And we did it the way you do every single investigation. How do you eat an elephant? One bite at a time.
It jumped off the page at me that you could see that there was a Ponzi scheme taking place.
I started hearing mafia, mafia, mafia.
Il sistema è perfetto. Sono gli uomini che spesso non lo sono.
These are the holders of truth and justice. They cannot be possibly be doing this. But then they are. They are. And the evidence is there. It's overwhelming.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice then to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So
and Brent crude futures settle at $80.69 a barrel. That's down $1.61 or 1.96%.
Consistent. Just work on things that matters for you. Really, at the long term, it pays.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The top names in tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
It's 2:40 on Wall Street. I'm Amy Morris. U.S. wholesale inflation cooled in July, another sign that price pressures are continuing to ease. The Labor Department reported its producer price index rose 0.1% from June to July and 2.2% from a year before. That has traders watching for the Fed's response and whether a rate cut could come as soon as September. And we check markets for you all day long here at Bloomberg. The S&P 500 up 82 points, NASDAQ up 382 points, and the Dow up 375 points. The 10-year Treasury yield at 3.85, then the 2-year yield at 3.94. NYMEX crude oil is now down 2%, or $1.60, trading at $78.46 a barrel. COMEX gold is up 0.1%, or $2.50, trading at $25.06 per ounce. Federal Reserve Bank of Atlanta President Raphael Bostic says he's looking for more data before supporting a reduction in interest rates, emphasizing that he wants to be sure the central bank will not have to change course once it starts to cut. Bostic reiterated his stance that he's held since March, that he'll likely be ready to cut by the end of the year. And Starbucks has named a new CEO and chairman. The company has appointed Chipotle's CEO Brian Niccol as its next leader effective September 9th. The leadership shakeup comes after activist investors Elliott Investment Management and Starboard Value reportedly amassed stakes in the company. Shares of Starbucks now 22% higher. Shares of Chipotle now down 7.8%. And that's a Bloomberg Business Flash. Now back to Bloomberg Business Week with Carol Masser and Tim Stenovic.
All right, Amy Morris, thank you so much. Well, in Nantucket, there's a growing sense that the roughly 50-square-mile island has become a casualty in the push for cleaner energy. So any accident, however minor it might be, involving the nearby farm was bound to become a flashpoint in the broader fight over wind.
And that's exactly what has happened. Here to talk more about the Nantucket rage over a broken wind turbine blade is Bloomberg News energy and climate disasters reporter Josh Saul. He's here in our studio. Before we get too far into this, remind everyone what happened a few weeks ago on Nantucket with this accident.
Will do. And I just want to mention to everyone who can't see me, I did wear my Nantuckiest sweater.
I was going to say.
Here today. It's pretty good, right?
It is pretty good.
In my desk.
No Nantucket red pants, though.
That's true.
Do you have docksiders
That would be a
on?
whole other step. Nope, just the Solomons, just the dad shoes.
Okay.
So exactly 1 month ago, one of the blades on the Vineyard Wind Farm, so this is a big wind farm. It'll eventually be 62 wind turbines, each as big as the Eiffel Tower with the Statue of Liberty on top of them, one single blade fell apart and fell into the water. And pieces of that were floating in the water. Pieces of it eventually washed ashore on Nantucket and created a real uproar on the island.
What happened, though? Beaches closed? What kind of...
Beaches closed for a very short amount of time.
Okay.
People on the island were very angry. They likened it to an oil spill. It was almost like Jaws approaching the beach, like just a really big deal. The federal government shut down both construction and electricity generation at the Vineyard Wind Farm, which is still ongoing.
Okay, you're from Alaska. I'm from California. We've experienced oil spills in our day, geographically. Was this environmentally on the same level as an oil spill? So far, it seems to be a lot smaller impact. It definitely freaked people out, but we don't have any reports of dead animals. They're, in comparison, solid chunks of fiberglass are a lot easier to clean up compared to oil in terms of the way it spreads, the way it sinks.
Mm-hmm.
So yeah, it seems like a much more small scale failure compared to an actual oil spill.
Couple of questions. I mean, how often are there accidents with wind farms? I'm just curious about the frequency of it. And also, how important, though, are these wind farms to power on the island, in the region? How important are they?
Yeah, so wind backers, the clean energy advocates, view these as extremely important because what they're going to be doing is they're going to be sending clean energy, so carbon-free energy, to the shore, kind of at exactly the times, like the windy periods of the day, is when the grid really needs it. So you can have solar on land producing a lot of energy, obviously in the middle of the day when the sun is up, but wind offshore can be sending energy in, in the morning, in the evening, and at night when that solar power isn't available. So it's seen as a really important part of the transition.
Josh, is it powered just to the island? Is it to other areas? I'm just curious how far this stuff goes.
Actually, the undersea cable will bypass Nantucket and Martha's Vineyard, kind of running right between them to the mainland, powering the equivalent, according to the companies, of about 400,000 homes. I mean, these things can produce huge amounts of energy. So instead of the natural gas plants or other fossil climate changing types of generation on land, we would have the offshore wind, these clean electrons flowing there.
A big part of your story that you wrote along with Cam and the team at Bloomberg News has to do with the implications of an accident like this on other wind farm projects throughout the United States that are planned for the future. Talk a little bit about what's being planned right now, some community pushback to these, and what it could mean to have an accident like this.
That's exactly right, because under Biden, who set a very aggressive offshore wind target of 30 gigawatts by 2030, there are a lot of of a total of 8 projects in development, something like 13 gigawatts, coming on, and you can imagine, a gigawatt is about how much a nuclear reactor produces. So it's a lot of clean energy coming on. But Vineyard Wind is really seen as kind of the marquee, like kind of the first big project. There's been some very small pilot projects. There's a smaller wind farm off of Long Island built by other developers, but this was seen as kind of the first like utility scale, like it produces as much power as a big gas plant. And the worry is that even these kind of relatively small hiccups like this produce so much anger, produce so much pushback against this new energy source that, especially with a Trump election, he could, as he said, come in on day one and kind of drastically change the landscape for these big projects.
I was thinking about that, how the outcome of the November presidential election, whoever is in the White House, that might determine the future path when it comes to wind energy, wind farms in the future, the growth of this industry. Or has the kind of horse left the stable already?
The way we think about it, projects that are already permitted and in construction would be a pretty big deal for anyone, even a president, to sort of tear out of the seabed. But projects that are still have any kind of permits left to get, not particularly hard for a federal agency to drastically slow down or even stop that process. Trump said at a big rally in New Jersey, like, I would stop all this on day one. The worry with this is that the worry with incidents like this is that it just kind of makes it more at the forefront, more top in his mind or in his administration's mind. And just as Biden used presidential powers once he got to office to slow down or stop offshore gas and oil drilling, Trump could conceivably do the same thing with offshore wind.
One thing that I was thinking about in reading your piece, Josh, is that there's kind of no free lunch or no silver bullet when it comes to solving the energy needs in a renewable way here in the US and around the world. It seems like there has to be, with every project, some sort of give and take with a community or with a location.
I think that's exactly right. No free lunch, no free energy. Like, there's trade-offs with all these projects. Like, you build, even what we think of as, a big solar farm in the middle of the desert. That's great. People who live nearby in Arizona are mad about all the desert tortoises being killed by the construction. And they're also like, hey, we like to ride our horses around here. It's more fun to ride your horses when it's not a solar farm. Like, basically anywhere you want to build energy, there are these trade-offs. And that's one of the conservationists we spoke to on Nantucket, who said, by the way, like, this has completely turned the tide, but like completely changed how the island feels about it. Like, the island is pretty united against offshore wind, at least right now. And he said, there's trade-offs and there's benefits and costs with any energy source.
Where does this leave Vineyard Wind, right? This is the company behind the wind farms. And I also do think about like oversight, right? You don't want these things to fall apart. You want them to work. Just like if you build a nuclear power plant, you don't want a meltdown. Like, you've got to make sure that there's oversight. Is there enough oversight, or is it a company issue? What was it? And we just got about 30 seconds here.
Vineyard Wind and then the turbine maker GE Vernova have been very active about both cleaning up debris and also checking turbines to make sure this doesn't happen again. This could change some oversight or the amount of money that companies have to put forward.
All right, something we're going to keep a watch on. Really good stuff, and the sweater, totally in on it.
Appreciate that. Thank you.
Josh Saul, he is energy and climate disasters reporter here at Bloomberg News, joining us here in studio on a day where you've got stocks pretty much holding on to their best levels of the session. It means up about 1.5% on the S&P 500. NASDAQ 100 outperforming up 2.3%. So we'll continue to count you down over the next kind of hour and 10 minutes. Coming up, we're looking at the market for jobs for recent grads, the difference between men and women. That's next.
First of all, global trade, which had adverse consequences that we're learning about to this day, still unleashed an enormous amount of gain for humanity. And with the rise of global trade became the rise of information sharing around the world, which rapidly accelerated the trajectory of mankind. I mean, of note, the Chinese, for example, are leaders in solar. They're leaders in EVs. They're leaders in a number of emerging technologies. In a world which is more splintered, we'll see the gains that the Chinese have achieved in these important areas not shared by the Western countries. And conversely, the United States is a clear leader in AI, along with a number of the European countries. And those gains will not be shared with China and the countries in its sphere of influence. So it's a very clear-cut loss for all of humanity when we have the severing of ties between our countries.
On a practical level, is it getting harder to manage the risks you face?
I think that one has to be aware that there are more tail risks that are harder to ultimately manage.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Now, your company news headlines on Bloomberg Radio.
From Bloomberg in Washington, I'm Amy Morris. Starbucks has named a new CEO and chairman. The company has appointed Chipotle CEO Brian Niccol as its next leader effective September 9th. The leadership shakeup comes after activist investors Elliott Investment Management and Starboard Value reportedly amassed stakes in the company. Elliott Investment Management released a statement saying it views today's leadership announcement as a transformational step forward for Starbucks. Shares of Starbucks now 22% higher. Shares of Chipotle are 7.3% lower. High interest rates and inflation have consumers holding off buying homes or pursuing renovations that would typically need financing, and Home Depot is starting to feel that. The retailer lowered its forecast of a key sales metric for the year on expectations that consumers will continue to hold back spending in the coming months. The retailer says it now sees comparable sales falling 3 to 4% for the year, below the average analyst estimate compiled by Bloomberg. The company also expects adjusted earnings per share to be 1 to 3% lower for the year. Alphabet's Google is rolling out upgraded smartphones, watches, and earbuds. Google is aiming to take on Apple and Samsung and offer more ways to use artificial intelligence. The hardware also has some outward changes, with Google moving away from that curved design it's used for several years on its Pixel phones. Paramount Global began laying off staff this morning after the entertainment company said last week it planned to slash 15% of its U.S.-based workforce, about 2,000 positions. The iconic Paramount Television Studios is shutting down this week as part of the cost-cutting efforts. Shares of Paramount Global are little changed on the news. And those are the company stories that we are following for you throughout this hour. I'm Amy Morris, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody. Carol Master along with Tim Stenevec live here on Bloomberg Business Week on radio, TV, YouTube, and Bloomberg Original. So reading in, one of the stories that definitely popped up on our radar has to do with recent grads. And what we're finding out, Bloomberg News Analysis, we looked into government data and found that young men are holding out for the right positions while women are being more flexible. And so we're seeing a bit of a gender divide among recent college graduates.
Yeah, so young college-educated women are sticking with their job search even as the number of vacancies shrink. Many of their male peers are choosing to take a break. The share of male college grads who are participating in the workforce has declined in the past year, with 1 in 5 under the age of 25 neither employed nor actively looking for work. This is according to the latest 12-month average in a Bloomberg News analysis of government data.
All right, you do the dudes, I'll do the women. The contrast with data for female graduates, which show their participation rate holding broadly steady over the past few years. One big reason is that they're more likely than men to turn to part-time work or take jobs that they're overqualified for to support themselves. They have slightly lower rates of underemployment than their male colleagues, a Burning Glass Institute report found, possibly because, Tim, they're finding some creative ways to kickstart their careers.
So if you're thinking about the job market that recent college grads are now confronting, it's kind of shifting into a lower gear after a 3-year run of historically strong hiring, kind of mirroring what's happening when it comes to the broader labor market as well. The unemployment rate ticked up for a 4th month in July. The ratio of openings to job seekers was at 1.2 in June, down from a peak of 2 to 1 back 2 years ago. So for entry-level positions in particular, the number of postings currently lags behind the levels seen 2 years before. That's according to Revelio Labs. It's a firm that collects and analyzes workforce data.
What's interesting, too, is some things that are going on in the job market.
Yeah.
What this says is college-educated men, they've historically had the upper hand in the job market, now finding themselves at a bit of a disadvantage. What they're saying, this reporting is showing in the study, male-dominated industries, so that includes things like technology, it also includes finance. They have been at the forefront of the recent slowdown, eliminating positions and halting expansion plans as those industries cope with overhiring. A lot of that overhiring happening post-pandemic, right? Really amping up their labor forces. Also higher borrowing costs and an uncertain economic outlook. So you're seeing both tech and finance maybe not do as much hiring going forward.
So young men are more likely to bide their time until they land a position with the kind of pay they expect, even if it means taking time off from their job search. This is according to Harry Holzer, who's a professor of public policy at Georgetown's McCourt School of Public Policy. While the labor market is showing signs of softening, they may prefer to wait until they have the upper hand again, where the professor says, quote, whereas maybe young women feel more pressure to make good use of this time.
Yeah, I think what's another interesting aspect of the story, something that I think we all kidded about, joked about, and it was actually a serious thing that a lot of times, you know, during the pandemic, we saw a lot of younger individuals maybe staying with their parents, living with their parents. It was a really rough economy. And this story goes into one reason some recent college grads can afford to take their time finding the right job, whether you're male or female, is because more are living with the family. According to the Census Bureau, 73.2% of adult men under 25 were living with relatives last year. The comparable figure for women was 68%. And if you back out the pandemic years, that's a record high for both genders and data going back almost 6 decades. Not to mention, it's expensive for younger folks. And some of them are saying, Mom, Dad, can I live with you for a little while?
So real implications for what happens to the labor market, real implications for potentially what happens demographically as young people stay at home longer and don't find full-time work.
Yeah, and maybe not as much money to spend, so that has an economic implication perhaps as well. All right, that's going to do it for this hour of Bloomberg Business Week. For those watching on TV, the close is coming up. Tim and I are continuing on Bloomberg Business Week over the next couple of hours.
Yeah, we got geopolitics on our mind. We're also going to be joined by the CEO of the coal company Ramaco Resources. All that and more next on Bloomberg Business Week.
Is on. Everything you need to get the edge at the end of the market day. This is The Close.
More evidence of cooling inflation was all the markets needed to resume that rally. From Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostic.
And I'm Alex Steele. Highs of the session here as we head into CPI Wednesday.
All it took was a producer price index report.
Who would have thought?
I know.
Nobody, literally. Okay, the S&P is at the highs of the session, up by about 1.5%. It's sort of a buy stuff, buy bonds, buy stocks. But the weird thing is, if you're buying bonds and buying stocks, why are you buying each? Usually you're going to buy bonds if you're worried about a growth scare. That was the story over the last couple weeks. If you have a growth scare, why are you buying stocks? That dichotomy kind of working its way through the market as volatility remains relatively subdued, Romaine.
Yeah, absolutely. The volatility coming down just a bit on the back of that cooler than expected producer price data. And that's adding to a lot of confidence out there that the Fed may indeed soon cut those interest rates, forcing some real money investors to buy Treasury inventory into today's rally and forcing some equity traders off the sidelines to boot. Deutsche Bank's chief economist Matt Lazzetti saying that the market for now is leaning in a very dovish direction.
You still do have inflation that's above target, but I think inflation risks have really dissipated. And so I think the Fed should be very comfortable cutting rates.
Michael Hartnett over at BOFA seemingly echoing that sentiment, saying his internal survey of clients showing investors core optimism for an economic soft landing Well, that remains unbowed. Still, it should be noted that the stock and bond rallies are a bit incongruous right now, sending different signals about recession probabilities, with hedge fund titan Boaz Weinstein saying bond traders should actually start heeding the signals from the VIX traders and more fully price in economic risk. At least for right now, that ain't happening, though. More than 400 of the S&P 500 stocks poised to close out the day higher, but none poised to gain as much as Starbucks. The biggest one-day gain for the stock after the surprise ousting of Laxman Narasimhan, who had been CEO for just barely 18 months. Chipotle CEO Brian Niccol lured away to help fix things at the coffee chain, a switch that has so far, Alex, been universally hailed by Wall Street as a positive. They're calling him a Hall of Fame CEO.
No-brainer, I think, was what Bloomberg Intelligence said. That must feel really good if you're the outgoing CEO. So back to volatility, and this is what Romain was just talking about. Bear with me here. This is the function CCRV, and it's about the VIX index. And the blue line is the VIX index curve a week ago. The white line is the curve right now. And you can see the tremendous change in volatility. We've really come down on that front end. Now, this sort of blip here is what we're looking at in terms of the elections for the U.S. And naturally, that's going to be trending a little bit higher. It has been for months. But what's significant about a week ago is that current volatility was so much higher than what we were pricing in for the election. But all of that has really calmed down. So, Romain, the question is, have things actually calm down? Or like many are now warning about, U.S. credit market and the equity market disconnected from the bond market, and one of those things now has to give.
Yeah, a lot of disconnections out there. I guess it depends on the chart that you look at. A person who studies those charts intently is kicking us off to the close here on this Tuesday afternoon. Amy Wool-Silverman is equity derivative strategist over at RBC Capital Markets. And Amy, was the last week that we had, was that just a blip? Do we go back now to shorting volatility?
Hey there. Well, look, some people have frankly done that. They've kind of counted on this being a blip, and frankly, some people are doubling down on a lot of those short volatility trades that we've seen. That's created a lot of suppression. But look, I kind of liken this to being on an airplane that's been incredibly turbulent. Yes, we've kind of found the same altitude, but have we forgotten the turbulence? I don't think so. And you see that perhaps not in that VIX headline chart, Romain, but you do see that in other charts like VVIX or SKEW, which are telling you that people under the surface are still quite nervous, far more than they were prior to Monday.
That's what I'm curious about, too, because we've heard this from a lot of other guests, always pointing to these other sort of metrics on top of the VIX. They're basically saying that when you look at that, you can see that the concern is there. And more importantly, you can see that the risk is there. If those signals are to be believed, or at least taken at face value, how do you position yourself right now, Amy?
Look, something that we've talked about for a long time, frankly, since the beginning of the year, was how incredibly inexpensive the cost of protection was in equity volatility. It had gotten to the point when people were so focused on right tail and FOMO, MOMO, that we were talking kind of 5 and 10-year lows in terms of protecting your portfolio. Has that gone up? Yes. But what we've learned from history is it usually takes some sort of market drawdown for people to think about hedging. They're thinking about hedging now. It has bid up that downside, but it doesn't mean that it's not worth it to do something like VIX calls, call spreads, or S&P puts and put spreads, all which are strategies that help you protect that downside risk.
You mentioned looking at, say, VVIX and saying other indicators that show there is a lot of fear under the surface, like the SKEW. What about cross-asset volatility? Because that really ramped up as the overall VIX went up, but now it's really coming down again. How do you see that playing out?
Yeah, it's interesting. I think one thing investors are talking about right now, and as you mentioned as well, is just this disconnect that we've seen between credit rates and equity volatility. And this isn't the first time that's happened. We've seen this happen before when equity volatility was too low and it had to catch up the other way around. Now I think perhaps this is going in the other direction. But what I'll say is, given the indicators are at cross currents, at some point someone has to be right. It's simply a function of, we're going to either head in one direction or the other come Wednesday and come September, and it'll be clear who's proven. I think in terms of equity volatility now, you have a lot of people who have done really well in their portfolios, are positioning for some sort of downside drawdown, and are concerned enough that they're implementing that protection. So in this case, perhaps we'll see that equity volatility is pointing in the right direction.
Hey, Amy, do you see that formulating around CPI, or is it going to be the Fed meeting, or is it going to be Jackson Hole? Like, where do you see that kind of that those hedge really come forward?
Yeah, it's a great question. I think it's a little bit of everything, Alex. And I think that's why a lot of these zero data expiry options, they've become so wildly popular because we're in this regime where every single data point has the ability to kind of spin this market on a dime. You've certainly seen that before. And I think we'll see it once again. Look, when you kind of look at, call it the hump in the term structure, obviously U.S. elections, there's one clearly indicated for the VIX. But on the short-term basis, CPI and then that Fed statement going into September is incredibly crucial too, because obviously that rate story has been driving everything.
So do we end up with a bit of a reset once we get closer to the election? Or let me rephrase that. Do we get a bit of a reset when we get past the election, we learn the results here? Or is this trade going to kind of filter itself prior to the election and then just continue on into 2025?
Yeah, so when you look to history, you typically get this trade down and this rise in volatility going into the election, obviously a lot of uncertainty. And then you get that kind of release and that rally after it. Now, the only exception to this is for some reason that election is contested in any way, then you can get a sustainably higher volatility level. We've seen that in the past in 2000, for instance, where that VIX level kind of hits 30 or even 35, 40 and doesn't go down for a while. But obviously that's a very unique case, but one we had been talking about for a while, where potentially that could keep volatility elevated even past that November election date.
So as we get there and we get past that, Amy, it begs the question here as to how the market overall performs, not just what's going on in the derivative space here, but when we talk about the broader cross-asset space here and whether they are positioned for these worst-case scenarios or even sort of a middling scenario when it comes to economic conditions or political conditions, are we there yet now?
The short answer is no. And I'll tell you, even prior to last Monday's kind of big spike in the VIX, you can call it, for liquidity reasons, a drawdown from the yen carry trade, what have you. Even prior to that, we were really showing pickup and skews, not only on the market level, but on the Mag 7 level. And, often I've said it really just comes down to the math of the market. We're still talking about a market that's very heavily weighted to very narrow breadth of stocks. And those were all indicating quite bearish going into that earnings season. And we still have NVIDIA left to report, a late reporter, but that bearish sentiment hasn't changed. We haven't seen that change even as VIX has stabilized. And it continues to tell me people are really worried about that positioning and that downside in these heavyweights.
All right, Amy, always great stuff. Amy Wu Silverman, equity derivative strategist at RBC Capital Markets on a Tuesday afternoon, where we see the VIX back below 19 and stocks right now at session highs. A lot coming up here on the show with the producer price index data now in the rearview mirror. Investors looking at the horizon for those CPI numbers tomorrow. Veronica Clark of Citi joining us in just a second to discuss.
All right, plus earnings in that final stretch. Nike shares jumping after rival sneaker maker On Holding reporting its results. We're going to break it all down in today's Stock of the Hour.
And we're also keeping an eye on shares of Cisco. They're scheduled to report earnings tomorrow. And of course, the sentiment right now is a bit dour with orders flat. We're going to dive into what to expect from the ultimate tech company. All that and more coming up in just a second. This is The Close on Bloomberg.
Earnings. I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money. If I had invested with you, which I wish I had, what kind of rate of return would I have had over that 10-year period of time?
Over 100% a year on average. On average.
100% a year, that's pretty unusual.
Season is here.
You're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments out, folks.
Goldman Sachs. Taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets are under pressure.
We are committed to EVs. They're going to happen.
Earnings season in full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
I would think it's prudent for them to cut back interest rates, whether it's 25 or 50, I will leave to the Fed.
That was Dave Rubenstein, co-founder of the Carlyle Group and host of Bloomberg Wealth, on the Fed's rate path following that PPI rising less than expected. Later on today, though, Atlanta Fed President Raphael Bostic saying that he wants a little more data. We want to be absolutely sure. It would be really bad if we started cutting rates and then had to turn around and raise them again. Stuart Paul of Bloomberg Economics joins us now. Stuart, are bonds and stocks and the Fed right now all on the same page?
I think they're getting there. I think that both equity and bond markets are looking for a bit bigger of a cut than maybe the Fed is at this moment in time willing to deliver. So right now, as of today, we're seeing a bit more of a cut in September being priced in, a bit more than a cut and a half is currently priced in. But as we saw just from those comments from Bostic, the Fed is taking a more cautious approach, wants to be entirely sure before it delivers a big cut. So the Fed might be currently inching towards that 0.25 percentage point cut in September. Markets are getting closer, especially after today's PPI data, to thinking that a 0.5 percentage point cut in September is the base case.
When you saw that data this morning, did that also give you the confidence that we're going to get that cut in September?
I think that at least our base case is that we're going to get a 50 basis point cut in September. A big part of that, though, is that the labor market is cooling more so than even the headline unemployment rate, which is already at 4.3%. It's that the labor market is cooler than those headline figures suggest. When we saw the PPI data this morning, we gained a little bit more confidence that pipeline inflation is starting to wane. My worry is that when we start stacking up some of the components from PPI and tomorrow's CPI print, it'll look like a pretty rough core PCE inflation print later in the month.
But what's the balance with the labor market data right now? I mean, I guess what I'm asking is what's taking precedence for the Fed?
I think that right now the Fed is putting just a little bit more weight on the inflation data. There may be split 55-45 between inflation and the labor market, I think.
Bonds, though, seem to be indicating that something really bad is happening with the economy, whereas equities don't seem to be showing that. Based on the data that we see, is this like a scary disinflation or an appropriate repricing disinflation?
I think that this is an appropriate repricing disinflation. I don't think that it's all that scary. We have had a bit more of a skeptical view of the resilience of the U.S. consumer than most, but we've also been surprised to the upside. Consumer spending has been a bit more resilient than folks have anticipated, including us. But that resilience was supported by a robust labor market. And now that we're starting to see that cooling, that deterioration of the labor market, and risk is skewed towards an upward gap in the unemployment rate, we think that we could start seeing a more material cooling in spending and a more material cooling in growth. The Fed's going to have to deliver relatively swift cuts in the second half of this year if it's going to stave off a more material slowdown.
All right, Stuart, got to leave it there. Stuart Paul, the best of Bloomberg Economics, a closer look at that PPI data that we got this morning, Alex. And of course, we get the CPI numbers tomorrow, and I was just taking a look at the estimates on the Bloomberg terminal. On a year-over-year basis, it looks like that disinflationary trend is there, but on the month-to-month basis, it looks looks like we are going to get some modest reacceleration in that core number.
Yeah, we saw services, right, come down a little bit in PPI, but then goods taking up a little bit. Some commodities that are relevant to what we eat, we're moving up a little bit too. So they're, it's not a straight line down for anything, which is interesting because it feels like, is the equity market moving on the disinflation scenario and the bond market moving on the growth scenario? I'm not sure.
I don't know, but I should tell you how much I paid for my sandwich today.
Oh, how much?
Which, let's just say inflation is still here.
I'm telling you, my $10 salad place. It's the way forward for you.
Where is this secret salad place
It's around
of
the
yours?
corner.
Do I have to drop your name or something and give you the secret
You
knock?
got to tip them. No, I'm kidding. It's around the corner.
All right. Well, speaking of $10 salads, we're going to start talking about, I guess, $15 burrito bowls because Chipotle's CEO, well, he's leaving the fast casual chain to spearhead a turnaround at Starbucks. Different companies, but with a lot of the same issues. We're going to get more insight from an analyst that calls the market celebration of Brian Niccol jumping ship premature. This is The Close on Bloomberg.
In global leadership are on Bloomberg.
We are 40 millions. We're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone. Only our lives are at stake here, and nobody can just trade our lives.
Nobody covers the top global leaders like Bloomberg Television and Radio.
All right, let's get a view from the sell side. Top calls, a look at the big movers on the back of analyst recommendations. And we start off today with Warner Brothers. A downgrade to market perform over at Bernstein as the media and entertainment conglomerate faces challenges in linear TV and struggles to navigate the loss of those NBA TV rights. The analyst says Warner Brothers Discovery is the worst performer among peers, which is a real shame given what I think is the quality of its intellectual properties and film studios. Those shares still bucking the trend today, higher by 6%. Next up, let's take a look at Dell, an upgrade to equal weight over at Barclays. While analyst Tim Long is still cautious about Dell's enterprise server and personal computer business, he sees less downside to the stock now that the negative sentiment around AI has washed out of the share price. Those shares higher by about 5% on the day. And finally, Hormel Foods, the deli meat company getting a lift to buy from neutral over at Citi. Upside potential for EPS this year. That's the view of the analyst, saying that it will be driven by improving trends in retail sales and cheaper feed costs for livestock. Shares of Hormel up about 2%, and those are some of our top calls. Now, we would want to stay in the food space and, well, talk about this man right there. He's gone from folding burritos to whipping up frappuccinos. Chipotle CEO Brian Niccol leaving the company to take on a new role over at the coffee chain Starbucks. Shares of Chipotle on the back foot today. Meanwhile, Starbucks having its best gain on record as investors really putting their faith into Nickel's track record. Our next guest, though, says that some of the confidence, it's understandable, but says the transition from Chipotle to Starbucks is a whole different ballgame. Nick Setyan joining us right now, Wedbush Managing Director and Equity Research Analyst covering restaurants. He's got a neutral on both Chipotle and Starbucks. I'm sure you've seen the superlatives out there, Nick, and Brian certainly has a great track record. He went from Taco Bell, did a big turnaround over at Chipotle, now I guess seeking to replicate that success at Starbucks. What's giving you pause about this next transition?
I think his skill set was perfect for Chipotle, right? I mean, it's the same essentially the same category, the same customer, from Taco Bell to Chipotle, and to that younger sort of male Gen Z type of customer. His background was marketing. He was a brand guy. Up until that point, Chipotle had never done any real marketing, no menu innovation whatsoever. So he brought that Taco Bell playbook to Chipotle, and there was a clear problem solved, right? It was to regain the confidence of that sort of loyal Chipotle client that had gone away because of the food crisis or the food poisoning crisis. So, the problem now is less clear, right? I mean, up until 3 quarters ago, Starbucks could do no wrong, positive transactions for year on top of year. And all of a sudden, everything's falling apart. Problem is the consumer is slowing down. And so, it'll be interesting to see what Brian Niccol can do to turn the consumer slowdown around.
I am curious, though, as to exactly what he's walking into here. I mean, there are broader consumer issues affecting Starbucks, but Starbucks has had a lot of issues for years that really have nothing to do with the macro economy. They've had 2 CEOs since Schultz left, or I guess left the second time, or whenever I lost track here. I'm wondering, though, is there a bigger issue here with regards to management, regards to the board, and more importantly, with regards to Howard Schultz's ever presence in this company, and whether that could potentially hamstring Brian as he tries to sort of put his own stamp on this?
Yeah, you know what? I think you hit it on the spot. It's been 4 CEOs in 4 years. Ultimately, I think the biggest problem is you have a overbearing, chairman emeritus in Schultz, and he just refuses to give anyone the appropriate time to kind of brand their own identity on this company. So I think that's probably the biggest problem, ultimately. Now, Chipotle, if you kind of think about where Chipotle was and again where Starbucks is now, Starbucks is the leader in digital loyalty. Their loyal customer base is not the problem. They're spending more. They're coming in more often. It's the problem is sort of that one-off Starbucks customer that was an aspirational customer that had a little bit more money during the COVID years. That's retrenching a little bit. So it'll be interesting to see how Brian kind of goes after that customer because, most other things are pretty much in order.
So, Nick, is that a return to your core customer, core product, or is that expand product to bring in those aspirational buyers?
Well, that's just it, right? The core buyer is still there with Starbucks. The interesting question is how do they expand and address that sort of non-core Starbucks customer who happens to be a little bit of a lower income customer, a little bit of a younger customer. And remember, this is all in the context of pre-COVID versus post-COVID. Breakfast just isn't as big of a day part as it used to be, not just for Starbucks, across the entire industry, including McDonald's, right? So that habitual urban customer going in at every morning and buying a cup of coffee is no longer as big of a customer. Plus, you're a lot more of a suburban concept now. The Midwest, the Southeast is a much bigger part of the Starbucks system than it used to be. So there's a whole host of issues that need to be addressed.
Before we let you go, do we learn anything about how Brian handled things at Chipotle and Taco Bell in terms of how Starbucks might manage China?
Unfortunately, both Taco Bell and Chipotle are very much domestic concepts. So, he doesn't have a lot of experience on the global scale.
So we don't know yet. All right, Nick, we really appreciate it. Thank you so much, Nick Setyan, over at Wedbush joining us. I got a $7 coffee order and a $10 salad. Just putting that out there. All right, staying with Starbucks.
Yeah.
Let's weigh in on this debate. Fall's coming early this year, guys, because pumpkin spice, the lineup is coming up here in the U.S. at the end of August, and also in the U.K. They just announced a couple days ago that autumn and winter favorite pumpkin spice latte is back in select stores in the U.K.
Wait, so Starbucks gets to determine when fall is? I thought that was up to like the astronomers or scientists or whoever. Like,
I thought
pick
it was
this
up to
stuff.
Walmart.
Look, if you like pumpkin spice, why not just make it a year-round thing?
I'm with you.
I mean, it's not my cup of tea, cup of coffee, pun intended, but, I guess if people want to enjoy a hot pumpkin spice in, 100-degree August weather, they should be allowed to.
Although, in defense of the UK decision, it will be like 56 degrees on a low in the next week. So, it's 56 to 60. I could do a pumpkin spice latte in 60 degrees.
Celsius?
I have no idea.
Okay.
Let's call it 25.
Okay.
And see if I'm right.
That could be right. It could be wrong. I have no idea.
It could go either way.
Yeah, I mean, I remember Caroline Hyde, who was our chief UK correspondent. She, at some point, explained to me the whole conversion thing. And it made sense. And then, of course, I forgot it all like 3 days later.
Well, yeah, because we're the only people that do Fahrenheit. So we should just get with the program and do Celsius.
I know, USA or something to that effect,
Yeah.
right?
Yeah. All right. Well, anyway, taking a look at the markets here, we are still right around the highs of the session for the S&P, up by about, looking at it, 1.5%. A huge move. You're looking at a big move also within technology stocks. Coming up, we'll talk to Jennifer Barker, Global Head of Treasury Services and Depository Receipts over at BNY. It's really a liquidity conversation. We'll break that down with you. This is The Close on Bloomberg.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo Pet Products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
Of politics to the world of business. Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Alex Steele, right around the highs of the session. Here's my question. Are we now one-sided again?
It's all, I don't know. I mean, if you ask me that question tomorrow, I probably have a different answer than the one I give you today, because that's basically been what the market is. It seems like you still have this tug of war, this sort of push-pull of where people think the market is going, which of course is largely based on where people think the Fed is going to go.
Right, but that feels somewhat consensus. The Bank of America Fund Manager survey said, what was it? 93% predict lower short rates, 76% soft landing.
Yeah.
That's like everybody.
Okay, well, that seems literally lopsided.
That's what I'm saying, a lopsided point. All right, let's turn now to liquidity. A year ago, the Fed launched Fed Now service to let banks send and receive payments 24/7, 365 days a year. So think of it like an instant payment system for people and businesses. And one of the first banks that signed up to do so was BNY, one of the top 5 players in the dollar payment market. Joining us now is Jennifer Barker, Global Head of Treasury Services and Depository Receipts at BNY. Hi, welcome. Thanks for joining us.
Thank you so much for having me. It's great to be here.
So it's been a year, right? Fed Now service. We probably don't know what that is. Tell us about it. How's it going?
Absolutely. Before I do that, let me just do a bit of level setting on BNY. So it's been quite the year. We celebrated 240 years. We're the oldest bank in the U.S., and we think about what we do in managing money, moving money, and keep it safe. So for what I do in Treasury Services, we move money. And so we send payments, we invest in concentrate cash, and we finance trade all around the world. And just to give you some context, we're a top 5 global U.S. dollar clearer, and we clear about 3 trillion payments a day.
Wow, a day.
A day.
So what are you noticing? How is that?
Right. Well, yes. So it's very interesting. There's a lot of really interesting market trends, but let me answer your question on Fed Now.
Okay.
So there are 2 instant payment rails in the United States. The first is Fed Now, which was launched last year by the Federal Reserve, and the second is real-time payments, which was launched in 2017. And there are about 900 banks and credit unions today live on collectively on both of the payment rails, and there are about 70% of accounts in this country are able to receive an instant payment. So what we're seeing in terms of usage is a couple of different use cases. First is payroll. So think about, regular payroll, and then what we call gig economy. So people who work multiple jobs. And so to be able to be paid every day or even after every shift is a real differentiator for employers, particularly in a tight labor market. Second is urgent payments. So think an insurance payout, an emergency loan. And so we think that there's more to do, though, because there's 900 banks, and so technology adoption continues to be something that our clients tell us that they need some help with.
Well, talk a little bit more about that client adoption, because we've heard from a lot of companies basically saying that the cost to transition to this, at least for right now, is just a little bit too onerous. And we're kind of talking more mid-sized companies. Sure. Obviously, the big conglomerates have the cash to do it. But what do you do? How do you sort of consult with those sort of mid-sized companies that want to do this but just don't see the financial benefit?
So one of the things that we do is we actually have technology that is what we call a smart router. So it doesn't matter if it's Fed Now, it doesn't matter if it's real-time payments. We actually connect once, and we actually help them through a single technology connection, route it to the right place. So that really takes a lot of the technology burden off of our clients.
Are they asking, though, when we talk about tapping into Fed Now or maybe some of the other systems out there, there's been a lot of discussion as to whether particularly small and mid-sized businesses, whether they can rely on just some of the more fintech type of companies, if you will, like PayPal, Venmo type of thing, to do their transactions in quote-unquote real time. I know you don't get the same settlement and clearing as fast with something like Fed Now, but for a lot of companies, they'll say that's good enough for us.
Well, I think that there are many other payment rails in the U.S. and around the world, right? So the benefit of connecting with banks is that you get access to all of those things. And again, back to the technology burden point, you don't want that burden. You don't want to put that burden back on your clients. You want to put that burden back on your bank and your technology institution.
How do digital currencies factor into your job in BNY?
So digital currencies, we focus more. We don't focus as much on digital currencies. We focus more on fiat and really making sure that we have instant payment rails up and running and really getting the economy and instant payments adopted. I mean, there's still a lot more work to do there. There are still 8,000 plus institutions in this country, banks and credit unions, that have not adopted any sort of instant payment rail.
So what's your pitch to them? So you're like, hey, come to the 21st century. This is what we're doing. Like, what's the pitch?
The pitch is instant payments solve a lot of issues, right? And so we talked about payroll, we talked about emergency funding, but you have a lot of economists on this show, and they talk about pressure points in the market. And small businesses, sometimes fail. It's not because they have a poor product and inferior service; it's because they have liquidity challenges. And instant payments really help solve that.
There's been a lot of, but we've also seen a lot of other big banks either enter this business or expand. I'm talking about Treasury services businesses overall. So there's a lot more competition for a business that I think, I don't know, if you asked people 20 years ago, they would have been like, why will we commit a lot of time and effort to this? A lot of people are chasing after this now. Why? Is it because everything is just more digital in terms of the way we move money around?
Well, in terms of instant payments? Yeah, I mean, it allows you to have complete control over your working capital, right? I mean, when I talk to clients, that's the number one thing they talk to us about is they want to have complete control over when they make a payment. I mean, hours and days matter in terms of being able to really control your working capital.
Another big part of your job, though, is also making sure, guarding against fraud and making sure basically that payments are legit.
Yes.
Right? Has that gotten harder?
It's gotten more challenging, particularly as more global that you get. But you have a lot of tools to help you, right? Whether it's artificial intelligence, whether it's account validation tools. But yeah, I mean, it's something that we invest in very heavily, given the large role we play in the financial ecosystem.
Under your umbrella, basically the business you manage, have you used a lot of sort of artificial intelligence and other language models in your role?
We have, and we use it really primarily two ways. We use it to really enable our client-facing teams to spend more time with clients, so to be more efficient. We also use it to really help our clients get more insight into their own data.
All right, Jennifer, this was a great conversation and great to have you here on set. Jennifer Barker, she's the Global Head of Treasury Services and Depository Receipts over at BNY. And this is like one of those topics, Alex, it gets really in the weeds, right? I mean, obviously she's way smarter than us, but when you really look at it, you realize just how critical it is to liquidity of companies and to a certain extent the liquidity of markets overall.
Absolutely, hands down. I mean, if someone was like, here's your check, but you can't have it, your money for like a week, you'd be like, no, I need it now.
Yeah,
like,
I don't know.
Direct deposit? Like I remember a world before direct deposit.
I know, we're all old enough to remember the days where it was like you already write a check and you had to wait a long time for it to clear. All right, keeping an eye here on the market. Stocks still holding on to the highs of the day. We're going to take a closer look at some of the individual movers that, well, are moving in slightly different directions. Home Depot, the share is higher on the day, but the company did flash a warning about the U.S. consumer. We're going to talk a little bit more about what's ailing the consumer. That's coming up in our Stock of the Hour next on The Close on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Welcome back to The Close. Time now for our stock of the hour and a focus on the consumer. We're going to start off here with Home Depot. The share is moving higher despite an earnings report out of the home improvement retailer saying that consumers right now are in a, quote, deferral mindset. Jess Benton joining us right now helps to lead our asset coverage here at Bloomberg. This was kind of an interesting commentary. I guess it shouldn't be surprising because we heard from so many other companies that consumers are pulling back on a lot of things. So you would think a big ticket type of purchase like a home remodel or something would certainly go on the back burner.
Right, and a lot of people pushing it back because, not surprisingly, when you have interest rates at the highest in about 2 decades here, and we've seen that happen over the past few quarters where their same-store sales growth has been sluggish. But it's interesting because you're seeing that stock up, if you look at HD is the ticker symbol on this, about up more than 1%, but its stock really has gone kind of nowhere this year. For the year-to-date basis, it's still up around 1% as well, and it's also underperforming its rival Lowe's. Actually, Lowe's will report earnings on August 20th, but it's a little bit of a different story when you're thinking about the DIY-type projects that go on with Lowe's versus some of the struggles that Home Depot tends to have.
What I find so interesting, though, is it's deferred projects, so what? It's like 30-year mortgage rates go down like, 100 basis points, and all of a sudden everyone goes to Home Depot. Like, is that true, or is that sort of like wishful thinking at the end of the day, right?
I know you were mentioning you were putting off a couple different things to work on as well, but it's interesting, right? Yeah. But when you're thinking about a particular segment of this, and especially how it's tied to housing and what that means for the economy, it's interesting at a trajectory and an inflection point like this when you do have the Federal Reserve and especially CPI tomorrow, where people are hoping that next month will be the first time they cut rates since the depths of the pandemic.
And of course, I'm sure, as you know, Jess, the whole market right now, whether in equities, bonds, or whatever, is really focused in on economic conditions and whether we keep spending. I know we're going to get Walmart earnings in a few hours, and that'll give us some insights. But we also got some earnings this morning out of a big shoe brand, and that's On Holdings, which didn't even exist a few years ago.
That's right.
But those shares rallying 5% here, 28% jump in sales. What's going on?
And also, a lot of it had to do with there were these sky-high type of expectations, but when it comes to maybe some of these more kind of luxury type of shoes, they actually saw some stronger demand there that I think surprised some people. And if you look at the A&R function, though, for this particular type of company, it actually has 18 buys, 3 holds, and actually 2 sells right now. So this stock actually outperforming and actually doing a little bit, holding up better than people were expecting, despite going in there with those high expectations.
Yeah, and Nike also jumping now about 5% because you can kind of, is that a drawing parallel thing? People buy sneakers, thus they like Nike?
And they're also in a little bit of a different type of category there, but when you do see some of its peers on the back of this, it's kind of rising tide sort of lifts all boats in this particular segment of the market today.
Yeah, and maybe it's just the idea that we are buying something that for a lot of us is going to be discretionary, right? I mean, we don't necessarily need new sneakers.
And that's a good point because you want to see people with the discretionary spending, so much talk about the economy, where people are putting it. And if you're looking at the equal weight discretionary versus equal weight staples, you're still seeing that outperform when you're taking out the noise from, say, the Amazons of the world and things like that. So that tells you overall with the economy and the Atlanta Fed GDP Now model around 3%, still things holding up pretty well here.
All right, Jess.
Do you remember Lottos?
Lotto?
The shoes? No.
No.
Anyway. All right.
What were
Proceed.
Lotto's?
There were these shoes, but what you could do is the logo was Velcro, so you could change the colors to match.
Oh, I
your
like that. I remember
outfit.
the LA gear and they would light up.
It was
I love
a really
those.
cool thing, and I don't know. I was okay. I'm just reminiscing about my childhood here. I don't know if those things still exist or
I mean,
when they went out.
it's been no surprise, but I was never allowed to wear those cool things when I was a kid.
Wow.
Oh no.
What?
I mean, I know it shouldn't surprise anyone.
I definitely had the light up LA gears.
Wait, you just wore potato sacks to school, cardboard boxes on your feet?
No, my mom would be like, let's shop discount designer at like Sims. And then I'd be like, but I'm 7. Anyway, Jess, thanks a lot. Love you, Mom. Bloomberg's Jess Menton joining us there. So let's stay with luxury for a second because the Home Depot is TBD, but clearly not when it comes to Uber luxury. According to the CEO that was on surveillance for 4 seasons, talking about in general, demand is super strong. And it's not just about how pretty the hotel is, but it's also about the experience and all that kind of stuff he was selling.
Yeah, and it gets to this idea of kind of the dual track economy where you have people of means that are still doing well and more importantly willing to spend. But I think you used the right word there, and it's experience, right? Like you have to kind of offer something more than just the product itself to make people feel like the cost is justified. So if you do give them these sort of grand experiences like you get at some of these 4-season resorts, I could see why maybe he's optimistic.
Yeah, and he's talking about how the engagement's really good. So they invest a lot of the employees so they can be super engaged with the fancy people and the fancy hotels, etc.
Oh yeah. I don't want them engaged with me. I just want them to kind of leave me alone.
No, but then you call and they're like, yes, Mr. Bostic, what can I do for you? Would you like me to send that masseuse and have that, really expensive dinner reservation for you in your Bentley?
That sounds kind of nice.
See?
Yeah.
He's buying it. All right, coming up, we're going to take you to the closing bells. Rebecca Patterson, a former chief investment strategist at Bridgewater, will be joining us. This is Bloomberg.
What's happening on Wall Street?
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, I'm going to say African American.
You were approached by the owner then of the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, Zay Poland. He did come to me and Susan O'Malley, and they said, Abe Poland says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this?
1 minute until we get the market on closed data.
Says, well, they're not making money. But I was still intrigued about team ownership.
The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that it'll be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context.
So market on close imbalances, the S&P 500 670 million to the sell side, the NASDAQ 100 430 million to the sell side, the Dow 30 75 million to the sell side, and the Magnificent 7 100 million to the buy side.
Frankly, some people are doubling down on a lot of those short volatility trades that we've seen. That's created a lot of suppression. But look, I kind of liken this to being on an airplane that's been incredibly turbulent. Yes, we've kind of found the same altitude, but have we forgotten the turbulence? I don't think so.
Amy Wu Silverman there over at RBC, and I love that analogy that she used, Alex, because I'm the guy on the plane that keeps the seatbelt tight the whole ride, and the second I get a little tremor, I'm like cinching it tighter here. But I just wonder, has the market just given up? I mean, they just decided that, the last 2 weeks didn't matter, and we're off to the races again?
Well, Goldman was saying today that equity and bond markets assigning a 41% probability of a U.S. recession. So why are we buying stocks?
41%? Is that high?
I don't know. It's up from 29% in April.
Okay.
That's something.
All right.
But it does raise the question of, are all the markets telling us the same thing?
Yeah, I don't think they are. I know we had Stuart Paul on earlier. He kind of says that, he thinks they are telling the same thing, but it'll be interesting to see. They might be telling us the same destination, but I think the journey to get there, what they're telling us there is a little bit different here. You're still looking at stocks here on the day, right around session highs, 54.25, excuse me, on the S&P.
Yeah, just take an energy, and we're like all higher within the S&P there. So energy, the big dragger.
Absolutely. Rebecca Patterson joining us right now. She's the former chief investment strategist over at Bridgewater Associates, helping us count you down to the closing bells just about 8.5 minutes ago. And Rebecca, I guess that is the question here, is kind of like, it seems like a lot of people agree on the destination, right? The idea we're going to get rate cuts, the idea that we are going to get some economic softness, but there seems to be a lot of difference in opinion about the degree of that economic softness, the degree of Fed rate cuts, and more importantly, the degree of how the market's going to react to it.
Exactly. Yeah. No, I think you summed it up really well, and I also like your turbulence comment. I am you. We're going to have more turbulence. I'm sorry for us. We're going to have our seatbelts on because the market isn't decided on the journey or the bumpiness of this landing. And so every piece of data is going to be soft landing, hard landing debate, and the stock market and the bond market are going to react to those. I don't think we're out of the woods yet on that. Today we had the NFIB, the Small Business Sentiment Survey. It was better than expected. And important to me, hiring plans were steady. So they're not, the small businesses, which is the bulk of companies in America, are not looking to lay off workers yet. So that's really good news. That's soft landing news. The PPI today suggests the Fed might be able to start easing quickly. That's soft landing news. But then you have other companies announcing layoffs and consumer confidence data that's not great. And so, we don't know. I think anyone who says they know which kind of landing we have right now is not being very authentic.
And this is a good time for a shameless plug that we'll be interviewing Holly Wade, the executive director over at the NFIB, a little bit later in the program. I am curious, though, about Fed rate cuts.
Yeah.
The market is convinced we're going to get something in September. Bloomberg Economics thinks we're going to get 50 basis points and maybe even another 50 before the year is out. Is that going to change things? And I mean, not for the market so much, but for the economy, and more importantly, just for regular people who are out there spending on their credit cards or trying to buy a home or a car or other things on credit. Is that going to matter?
Yeah, I think there's a risk that just like rate hikes were slow to feed through the economy versus what had been expected, rate cuts might be similar. And the main reason I'm saying that is the housing channel, which is the biggest transmission channel for monetary policy. So right now, a 30-year fixed mortgage is about 7%. So off the highs, but still pretty darn high. If you go back the last 15 years or so, the average was under 4%. Now, if I'm one of the many people who locked in something closer to 3.5–4%, if I don't have to move, even if the Fed cuts 100 basis points by year end, I'm still getting a lot less house for my money. Housing costs broadly are up, the mortgage is expensive. So I think it's going to take longer for people to feel unlocked till they have that wealth coming through housing.
This is my moment, 2.75%. And I feel okay about that, saying that out loud all the time.
She says this every day. She literally just walks by my desk and whispers in my ear 2.7.
I mean, it's
and then
just
just
like,
keeps walking.
I don't know. I was really proud of myself. Okay, but to that point, that's on the consumer side, but on the company side, in terms of investing CapEx, you have that uncertainty. You have the cost of capital maybe not coming down as fast as one might think, and then you have election uncertainty. So the CapEx cycle that we keep expecting, does that happen?
I think a lot is on hold till after the election because the differences in policy between the Republicans and Democrats, especially on things like taxes, are pretty extreme. So if I'm a CEO and I'm making a 5-year or a 10-year strategic investment, I want to wait as long as I can to get the bang for the buck from lower interest rates if they come. And I want to have more clarity on what kind of tax reality I'm going to be facing. I don't think we're going to know that even on mid-November or early December. I think that's going to be later 2025 before everything starts to get flushed out.
So what's the best allocation within equities and broadly with that scenario?
I mean, given that I think we're kind of on the fence between soft and bumpier landing, I prefer to be somewhat defensive in my allocation right now. I still like large caps. I like U.S. large caps. That's going to include tech still. I like it as a structural longer-term investment. I like having some defensive positions. I know energy's gain hit today. I like energy as a geopolitical hedge and with super attractive valuations. But then outside the U.S., I think the U.K. is interesting, especially domestic stocks. Extremely low valuations. No one owns it. The Bank of England's going to start a rate cutting cycle later this year. But importantly, it is what we call a low beta market. It tends to move less on the downside. It acts more defensively if stocks go down. So if you want some geographical diversification with the U.S. election coming up, I think that might be an interesting place to hide a little bit.
That's an interesting call there. I'm going to look deeper into that. What about Asia? You find anything attractive over there?
I mean, the news out of China right now is making my hair poofier than normal. This is an economy that's struggling so hard to get growth, and yet they're intervening because they don't want their bond yields lower. They need low bond yields. And because they won't let their bond yields lower, consumers are saying, I don't know where to put my money. I can't put it in bonds and stocks, so they're all going into gold. So gold is another thing I like in this environment. But until China really stabilizes and the consumer there gets going, I'm staying a little bit anxious about Asia, generally speaking, and also Europe, because Europe is much more dependent on China than the U.S. is.
I'm going to squeeze in just one last quick question on the gold, because the run-up that we've had here, do you think that has been driven more by concerns about what's going on outside the U.S.?
Yes. I think that most of the run-up we've had over the last year and a half is China. China's central bank diversifying and China consumers desperately looking for somewhere to save and grow their money.
All right, Rebecca, going to have to leave it there. Always a wonderful conversation. One of the best out there, Rebecca Patterson. She's the former chief investment strategist over at Bridgewater Associates. With just 3 minutes until we get to these closing bells, stock's pretty much right around, actually now hitting fresh session highs, Alex Steele, as we get closer to the bells.
Yeah, look at that volume, though. It's still really light, so I wonder if volume's going to kick in tomorrow around 8:30. Well, I guess 9:30 when the cash opens, and if that's going to make a difference in direction.
Yeah, you're referring to the CPI report tomorrow, and then we get the retail sales the day after that. The market's going to have a lot of macro data to parse.
Yep, especially when we talk about being so one-sided, right? That fund manager survey, Bank of America, 76% expect a soft landing. Again, that feels very one-sided.
Yeah, and it's been like that for a while. And it gets to the question, too, is like when you heard Amy saying that, not everyone's short vol, but people aren't necessarily going long vol at the moment here. Anyway, we have our full coverage breakdown of all the events of the day, starting right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the cards right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you through the closing bell. It's a global simulcast, starting now with Scarlett Fu here in the TV studio, Carol Massar and Tim Stenovic in the radio booth, as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube, Carol Massar.
Yeah.
And you're smiling.
Why
Is that
not?
because you're looking at the green
big
on the
YouTube
screen?
fan.
It's sunny outside. It's not raining. The humidity has come down. And the VIX, look, we lost about 2.5 points. We're down below 20 again. So everything is awesome.
Yeah, I mean, the PPI came in.
Famous last words there.
Bed-friendly.
exactly.
Everything is awesome. Plop.
Ish.
Yeah, ish. It was a Fed-friendly report. All eyes now to CPI tomorrow. We'll see what happens. But look at all the green on the screen. Investors optimistic.
The soft landing narrative is back. It's like, the global market meltdown didn't actually happen.
Guys, but then we're still seeing a huge bid into the bond market. That feels to me, is that still a fear factor? Or is that just, hey, Feds are going to cut. It's all great. It's still the soft landing. I'm skeptical, guys. I'm skeptical.
That's a great point, right? We saw both bond and stocks moving higher today, right? I thought they weren't supposed to do that.
Buy all the stuff.
Yeah, and that's the other question, too. It kind of raises this whole conundrum for the Fed. You start to look at the differential between where Treasury yields are and where the Fed's funds rate is. And then if you want to overlay the differential with where headline inflation is or even core inflation is, I don't know, is the Fed behind the curve?
I don't know. We just spoke to Aaron Kennan over at Clear Harbor. He's cautiously optimistic that, a soft landing could be on the horizon. Maybe 3 rate cuts by the end of the year, 75 bips.
Yeah. Well, a bit of risk appetite coming back into this market. You see that with the VIX tamped down, Bitcoin back above 60,000, and green for most of the major indices here in the United States of America. The Dow Jones Industrial Average up by about 400 points or 1% on the day. The S&P looks like it's going to close higher by 90 points or about 1.7%. The NASDAQ adding about 2.4% on the day, while the Russell 2000, Carol, higher by 33 points or 1.6%.
Yeah, and I thought it was interesting, too, to see some kind of buying into the close here. The S&P 500, Scarlett, you're going to go through the industry groups, but you have 425 names in the S&P 500 gaining ground on this Tuesday, and Scarlett, only 75 to the downside.
Yeah, it's pretty lopsided when you look at the sector performances as well. Here's the IMAP, pretty much your pesto pizza. There's some red slices there. Energy down 1%. And food and staples also, kind of mixed right now, but really it's energy. Everything else is green, particularly tech, up 3% on the day. Consumer discretionary up 2.4%. And communication services gaining 1.5%.
That is a brat chart. I'm just going to say it.
Wow.
I know.
Very 2024.
Thank you. All right, let's get to some of the individual gainers. Starbucks finishing at its highs pretty much of the session, up 24.5%, soaring the most ever. It is your number one gainer in both the NASDAQ 100 and the S&P 500. We know the story. Chipotle CEO Brian Niccol, he will be taking over the top spot in September. Big deal. We know the activist investor Starboard has been looking for some kind of shakeup, but nonetheless, all eyes and ears going to be watching on this one and what it does to kind of change around some of the metrics that haven't been so good. I mean, this company, 2 straight quarters of comparable sales declines. We've seen the stock under pressure, so not today. Very different narrative around Starbucks. All right, Supermicro, also an outperformer in today's session, finishing the day with a gain of about 5% here, top in the S&P 500 and the NASDAQ. I got to be honest, not sure why some investors may be looking forward to some upcoming investor conferences in August and September in which the company is participating. Maybe there's some news that comes out of it. Our BI team, though, was
remember,
out with
Carol,
a note.
they had pulled out. Remember, there was a lot of concern that they had pulled, and now they're basically saying they're coming back in. So, I don't know.
This is why we have you, to keep me honest.
Is this why you have us? I thought it was just to get you coffee and tea.
That too. Our BI team also out with a research note on Supermicro, saying that the company is poised for sustained AI sales and EPS lift through 2025. And one more on holding, up about 4.3%, well off its highs of the day. At its highs, up more than 9%.
Is this the semiconductor company or the shoe company?
No, on holding, the shoe, the ticker on.
Roger Federer wears them. It's his sneaker company.
Carol Master wears them too, so don't make fun of me.
You would never. They're apparently really cool.
There you go.
Thank you. I was a little worried. It also brought names like Nike, Foot Locker, Dick's Sporting Goods, and Under Armour also moving to the upside as a result. On holding, they were down initially in the pre-market, but finishing the day, as we said, up. Second quarter sales topped estimates. They did have a small profit miss, but nonetheless, the company also did back its full-year guidance of at least 30% sales growth. So there you go.
All right. You got the gainers. I got a couple decliners, and
it was hard, right?
Yeah, it was actually so hard that one of my decliners turned into a gainer, guys.
Just barely.
Wow.
Just barely. I'm busted.
Okay, you want to start from the bottom and go up? Or
no. I want to start with Chipotle. Start with something firmly in the red today. Shares fell as much as 14%. At one point, it was the most intraday since March of 2017. This after the company Said Chair and CEO Brian Niccol is going to leave the company at the end of the month. He's going to become Chair and CEO of Starbucks. We just heard that from Carol. Starbucks, or for its part, or Chipotle for its part, rather, COO Scott Boatwright was named Chipotle's interim CEO. Analysts acknowledge Niccol's departure adds uncertainty, though they are confident in the outlook for the company given its leadership team. Also, keep an eye on shares of Baxter International. Ended up falling 6.55% today. The company said it's selling its kidney care segment to global investment firm Carlyle for $3.8 billion. Investors, though, Alex, it seemed, wanted more. Shares falling by 6.5%.
All right, taking a look at the bond market, there was some moves here, buying all across the curve, particularly in the front end. I think I said exactly those same words yesterday as well. We're at the lowest level for yields since the beginning of August. So quite interesting there, guys. We're down.